Check mic, check mic. Good morning, everybody. How's everybody doing today? What's up, guys? Welcome to the Ivy League live stream. If you could, hit that like button. I know you can. Hit that subscribe. If we make you any money today, this week, feel free to give back. All right? You can do all that below, right in the description. I hope you guys are doing well today. Right now, I'm kind of going through my watch list. The majority of my watch list is still a lot from what we had last week. Microsoft, crypto names, whatever earnings we have or whatever news we have. So Tesla, Coinbase, watching the dollar, right? We're still in that process where the dollar is bouncing back. So we are, kind of still where we are. Just want to give a little recap there. Let's go look at some of the news real quick. And let's not forget, and let me not forget, and I have it written down, some of the stuff here. Which is, I know it's to the top right because I wanted to move this over. So here we go. All right, catalysts and ideas. We have NVIDIA earnings. I'm pretty sure that is Wednesday afternoon. All right. Chinese ETFs. I have this up here for a reason. And this is today. Okay, cool. So we have Li Auto this morning. Let's go check Li Auto out real quick. All right. This stock can be fun to trade. This thing, I don't even know how it's still in existence right now. What? It's a $23? Hold on. Wait. Is this yen? No, it's not. Wow. Li Auto is really up there. I don't know why I thought I remembered shorting this down to like hardly nothing. Wow, okay, never mind. I take that back. All right then. Okay. All right, so Li Auto has earnings this morning. We can go check them out. All right, obviously to the downside. It's no wonder. I don't know much about Li Auto, but I don't know really anything about it, but we can go look at the news there. So, again, NVIDIA earnings. We were just talking about that. Let me actually take this up a notch and make sure you guys can hear me. You guys can hear me, correct? Yeah. I got it up. All right. We'll take this up a little bit. Just a little bit. All right. We're going to go over, we're going to go over the charts. We're going to go over everything. I just want to recap this morning and kind of give you guys a lowdown on, to give you guys some ideas on what's going on right now. Where can we get this opportunity? So, first off, we said NVIDIA earnings are coming up, right? You guys remember semiconductors were really, the Thursday and Friday had a really nice, 2-day up day. NVIDIA had an upgrade this morning. Crypto. All right. What was I doing? Sorry. All right. Most anticipated earnings. So Palo Alto, this is going to be a big one for this whole sector. All right. I know there's a lot of people watching this right now. We looked at, I can't remember when it was, but it was not too long ago for CrowdStrike. We were thinking about trading that. So keep an eye on this whole sector. Palo Alto, Zscaler, CrowdStrike. All right, yeah, so NVIDIA, Wednesday afternoon. And I wanted you guys to see something, which was what Powell said in the meeting, and we'll go over that later on this afternoon, because it's really funny, and I'm going to sum it up for you, that Powell said we do not see anything that makes us think we have to raise rates. So when you hear people talking about raising rates, or the Fed talking about raising rates, they're lying to you or themselves. Maybe, I understand that the Fed has their own personal decision, and they come in and they dot their where they think things should be, right? Ultimately, they all vote unanimously together, and Powell has the you know, at the end of the day, he has the decision on what he wants to do. All right. With that said, Powell literally said in the Fed meeting, we don't see a chance as of right now that we are going to have to raise rates. He literally said that. I just rewatched the meeting. So if you hear the Fed this week talk about how they say we may need to raise rates higher, this, that, the third, they're not. Okay, Powell, just hear it from Powell, because at the end of the day, if there's anybody we need to listen to, it's Powell. At the end of the day, they could all agree on one thing, and he could do whatever he wants to do at the end of the day. That's the kind of power he has. So when he's up on a podium saying we do not, the Fed, you know, he says we. He doesn't say me. He says we, as in the Fed. We don't see anything in the data that tells us we need to be raising rates, right? So when they talk that shit, don't even listen to it. Like, seriously. Because it's just, I don't even know what they're trying to do. I really don't. So we can go back over that at lunchtime. He literally said that verbatim, and it was the girl that asked the question. I think it was she was in like a white blouse or whatever. Anyway, let's get back to the script. All right, so crypto. We know we have crypto. We have NVIDIA earnings, semiconductors. All right, Microsoft event, meme stocks, GME, AMC, Robinhood with the double upgrade. I want to write that back down, which I have 1950, 19 to 1950 pullback for a long. I'd like to try and possibly put on a swing trade with Robinhood if it sets itself up, which we'll cover. I'm kind of mixed on energy. It's like, it feels like it's kind of just like hanging out. There's a lot going on that people aren't talking about with energy. You know, you have China ramping back up, but you also have Ukraine and Russia going tit for tat between natural gas and the oil reserves. That each of them getting hit. They're trying to build these little cages around them, and they're still flying drones into them and whatnot, depleting each other's reserves. So, you know, I don't really hear many people talking about that. Micron 125, BABA. So we'll get into that. Chinese ADRs, which we have here. The Fed minutes, I don't really care about the Fed minutes. I mean, we'll get a look into what they said, but Powell pretty much told us what it was. I feel like the Fed minutes are kind of just like, to me, I don't know what they're going to say. Unless they say something different than what Powell said. Unless we see in there, okay, wait, they are really thinking about, like, you know, what's going on. I mean, it was just a couple weeks ago, so... All right, Chinese ADRs. We have a lot of retail earnings this week, and then electric vehicle makers this week. So you could get some movement out of Tesla, Li Auto, Rivian, okay, Stellantis, whatever you guys like to play. Which Li Auto had earnings already, so there's plenty of opportunity out there. There's a ton of opportunity. All right, so that's that. All right, that's that. Let's go right into the earnings. Okay, Li Auto, Wix, Global, 360. I'm just going to look at Li real quick. Let's go look at Li Auto real quick just to see what they did. And we'll go to the overall indexes and see where they are. I seen this morning that Celsius and a few others were going over, or you know, making high a day. If you guys, I've been seeing some videos on like Monster, MNST, and Celsius, these energy drinks and stuff. It is summertime coming around. I'm drinking more Red Bull, at least not more, but you know, I have my one. It's like when it's hot out, you kind of veer off from hot coffee and kind of either iced or an energy drink. It's just, you know, I don't know, but I'm starting to see videos online about that. So let's look at Li Auto real quick. All right, let's go cover their earnings. Q1 adjusted earnings. 121, $1.21, Chinese renminbi 17 per diluted. Okay, hold up here. Okay, so here you go. Expects Q2 revenue, I don't know, RMB 29.9 to 31.4 billion, up 4.2%, 9.4% year over year versus 37.6 estimate. Vehicles delivered 105 to 105 to 110, up by, what is that, 2%? 21%. Yeah, 21%. I want to see. These stocks are moving the most today, so we can read this real quick. Well, I don't know if I can make this wider. I can. There we go. All right. So futures are pointing higher Monday. Blue chip Dow Jones Industrial Average closed above 40,000 Friday. We know that. GameStop is up. GameStop is bouncing this morning. Palo Alto, which is after the close. Keysight, Zoom Video, and Li Auto. That was a whole bunch of wasted time. All right, Li Auto is on its way down. So Li Auto was pricing in a $2 move from pretty much Friday's close. All right, roughly. So we closed, we'll say $25, and where you at? $23.50. So it's done $1.50. You might have 50 more cents left. You know, you might be able to get down to 23, which would be a nice move. All right, I would actually write that down. I'm actually going to write that down. If this thing does not break pre-markets, then we could look for a nice move to the upside. All right. So Palo Alto, this afternoon we got that. Let's go over here to some of these, and I wanted to bring this up too. What is this? Okay, so these were some of the upgrades and downgrades. Intel upgrade for Intel and Robinhood, and a downgrade for SunPower. MasterCard. Piper Sandler initiated coverage MasterCard at overweight with a 531 price target. It is on track to achieve a revenue growth of 11%. All right, that's MasterCard. And then you have Boston Beer Company. There's a 360 buy target. Summertime coming around, more parties, all that fun stuff. You know, not necessarily more parties, but people going out. So SunPower. Wolf Research downgraded SunPower to an underperform with a $2 price target. And I deeply agree with this. Not me personally, I'm just reading off of here. The company was part of the meme stock gamble, which was predictably irrational. Okay. All right. So Intel Thursday, Wolf Research upgraded Intel to peer perform. The firm does not issue price targets for peer perform equities. Okay. Maintains its cautious stance on Intel despite the stock's 38% decline year to date. That's crazy. So you don't have a reason, but you're staying cautious, but you're going to upgrade it for what then? You shouldn't have to upgrade something and then be cautious. It makes no sense to me. But it is what it is. And then Robinhood, you guys know you had a double upgrade there on Robinhood, which we're going to look at. All right. These are Palo Alto's earnings expectations. We can look into that in just a few minutes. No. There we go. I almost messed that up. Sorry about that. That's crazy. We'd never get nobody on here. I mean, I get why, but it's all good. All right. So let's go into some of the things from here, and then we're going to go right into some charts. I want to know what's kind of going on here. Weekly preview. It's NVIDIA earnings this week. I want to find market movers, really. And I'm going to be using, which I was actually going through this weekend to find some of these Chinese ADRs that are liquid and see where exactly I want it to be. Because I'm still watching like JD.com, Baba, Baidu, pretty much those three. And, you know, honestly, I think the overall markets, we just broke to a new high on a daily chart. You know, I think we pull back and test the highs and kind of, I mean, we're talking today into Wednesday. So the next 3 days, you know, maybe we climb to the high, maybe we barely make a new high and we pull it back, right? Kind of just stay right around that 54 or 535 to 530 level on the S&Ps and ES. I mean, it's just my opinion, but I still think, you know, you'll get this bounce here, and you could look for a pullback at like 534. All right, we'll look for this pullback at like 534. Yeah, 534. Looks like this 5-minute though is actually in a somewhat of a little downtrend. We'll see. This is where I'd have to say the pullback would come in at. Would be like right there. Yo, what is going on? But what do I know, right? What do I know? All right, I'd say roughly like right about there, and then see if we can't pull it back. We might be able to get like a where are we at? 533. We could probably get a pullback to where are we at on the S&Ps? Let's see, where are we? I don't remember. It's like 530. So that wouldn't really be much for the S&Ps. But if we could get a pullback down to like 526, 525 and kind of really start to base this market off, like really like pull back and test these highs, that would be a really nice move, guys, back down to 525. I mean, you're talking a $6-7 move there in the course of like a day or two. All right. So, all right. All right, so you're going to have the trade line come in here on the SPY.
So construction has also been ridiculous. Our cost to build a restaurant went from about 900 to 1.3 million.
So this is what I would also look for, is this double top that we have here. See if we can't get ourselves a nice pullback. All right, so there's the low end, that 524 area. Guys, and I still think this is a nice move. All right, I don't want to front run the move, but yeah, pullbacks and breaks of Thursday and Friday's low. This could set up for a really nice move. It could, in my opinion. Why is this not? Yeah, that's what I'm going to look for, guys. So I want to see if we can't get ourselves a nice little pullback. You know, it's the end of the month. We have a little over a week left for this month. If we get below 528 and get down there and crack it, like with some volume, you could see a nice down day today, which would set the market up nice, right? For, you know, you pull back, maybe you bounce and you pull it back and you kind of just stay flat down in this area down here. But I'm not going to make any, predictions, because I tried, last week I took a small position to the downside just to have access to it in case CPI was high. The Fed said something, something happened and it didn't work out. But it's all good, and I should have known that because, we were holding this level really nicely. We held, what was it? Over here, right? We started holding 520, 525, or 522, and we kind of just left it. But we were holding this nicely in an uptrend. Down day with a gap up, you pull back, bang. That's a nice setup there, and I missed it. All right, so watch these previous highs here. Let me actually pull this up. I'm actually going to go here. Watch your previous highs. It's like 531.50. All right.
Jeff Bezos's rocket company, Blue Origin, launching its first crew to the edge of space since a 2020.
Yeah, 531, 531.50.
A 90-year-old who was the first black astronaut candidate picked way back when John F. Kennedy was president in 1961 to train as an astronaut.
So you did pull back to like Friday's high after hours, and you kind of just left it. So look, there's that pullback coming in we just talked about just a few minutes ago. But I'm going to do that. I'm going to watch for, we'll call it 530.75, 530.78-ish, all right, and then highs. feel like that's a nice, you can see where they're stepping in up there. You know, they rejected it, breaks, and then it just support, and it failed to do so. And now they turned that into resistance. Now the question is, can we turn, which we are now. Awesome. Yeah, look at this. This 530.42 level. So you'd have to see, like, where was the support that you're trying. So you're trying to turn support into resistance, or you're trying to turn resistance into support to climb higher. So if we broke this level, as you guys can see here, right? You rallied 530.75, 78. Excuse me, you pulled back, right? And then you went through it. So what did it do? It pulled back to this level, tried to find support, right? And excuse me, got hiccups from the coffee. Excuse me, now I got air in my. Anyway, bounce off of that level. It pulls back and it's clearly not holding. And what to do? Boom, 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 right? And then it just drops. Okay, well, where was the support for that resistance? It's up here, right? You have this level here. It's like an area, right? 530.20, 530.40 to 530.20. All right. So we would look for, look at that. Would you look at that, right? These candles still on a 5-minute closed right there, and that's where we're going to put, you know, I would call it that level there at like 530.25, because it's just that opening resistance and those tails are going down in there. You know, however you want to look at it. It's all in the eyes of the beholder. So, all right, S&Ps. Watch for, if you turn this back into support 530.40, you might try to test the highs again. You know, we started a rally here, and I think even if NVIDIA's earnings are somewhat down, right? Because if we go look, NVIDIA earnings have been pulling back slightly, right? At least it's not the same. It's not the same rate of change as it was. It feels like that rate of change has peaked, if you guys understand what I'm saying. 50 cents, 58, 88, $1.09, 27, 4, 5, and then, right, this was double-digit growth here, right? $2.70 to damn near, you know, it was almost 100%. But if you go from 2 quarters before that, it was $1.09. So you 3-4 times the business, and it feels like that's kind of stalling up there at that $4 or $5 mark. And it's like, okay, like this thing had a bunch of money tossed at it at one time. So even if it just continues with the growth, it's, you know, I don't, unless they do terrible, which I don't think they're going to, I don't see why you couldn't get like a 530. I mean, I don't know. I'm just making a guess. You know, if you see like a if you see like a 550, a $4, and they're going backwards, that might be the start of something, right? Then you would wait for the next quarter. Okay, does that trajectory continue? So it feels like we're getting to like the top of the roller coaster. Not that we're going to go down, but if we could just stay flat and it just sit in this range. And that's not going to hurt the stock. Because at the end of the day, they're still, you know, bringing in a lot of money, right? So it's all on how you want to look at it. Again, unless something really happens where we start to get thrown into a recession or something, and like there's fears of that, you know, it feels like we're firing on all cylinders. All right, so let's go look at the indexes one more time. All right, so the S&Ps, we just said we're watching for that 530 level. Is that what it was, 530? Yeah, right here. So you guys can see here, right? It turned 530.75 into resistance. It broke above it. It tried to hold that as support. It failed. Resistance, resistance, resistance on Thursday. And then what happened? The support of this resistance, which is this little area here where it breaks it, hits it, and it pulls back to like 525. But those candles closed right here at 530.40, right? That was the support. that made, that was starting to bounce into 530. Now what do we look for? We look for that 525 or 540. It's like 530.40 to 530.25. Right? It's an area, and I'm going to look for that. And I want to see if we can get, guys, because I think we could have a nice down day today if we can get it. If we can get it. So I'm going to say, all right, this is the area I'm looking at. And we could still run up and test 530.75. I don't know. That's where the sellers are up there at 530.75. But if we clearly are not getting through this level, and you see the IWM, the Dow, and the Qs also not being able to get up to Thursday's highs, all right, then either we're trading sideways or we're going to pull it back and test Friday's close, Friday's highs, or we're going to have a nice down day, right? Or we have a nice down day where we pull back and test the prior highs on the S&Ps, right? So 530.45, and then look for this area like right there at like 530.18. That's what I'm looking for right there. And I want to get below here, and I want to start turning this. I'd like to start turning 530 flat into resistance. All right. I'll make it easy. Right now, 530.40, 530.50. It's 530.50 or 530.40 for me. All right. So if we cannot get up there, I feel like everything is pointing to just somewhat of a pullback, but I'm going to look for the long. All right. Then if it shows me, okay, the long's not working out, then we'll look for the downside. Go in today looking for the long. What's up, Bingo? How you doing today, buddy? I hope you had a good weekend. All right. So that's the Qs. Just watch Thursday and Fridays. Thursday's high and Friday's low. That'll make it simple. All right. You can see the Qs are also doing pretty much the same thing here. All right. The Qs are doing the same thing. I know it might be hard for y'all to see this, but look at this. If we get going, man, we have nothing stopping us for some nice downside. All right. On the Qs, see if you can test 453.50. All right, 453.50. That's the level I would look for. Right there. 453.50. All right, that's the level I'm going to look for in the Qs. All right, if we get above it and hold, then we can have a nice little test to Thursday's highs. All right, and I would put a line here on the Qs, 554, and then just run that bad boy right on up to the highs, and that's your danger zone. All right. I mean, again, though, we are in a bull market. Sorry, I was not daydreaming, but I wanted to see something. So don't let me forget. So look, guys, the Qs, right? Friday's pivot high. All right, pre-market high on the Qs. All right, it looks like it's trying to hold that. So it's like it's up above it now. Where's the S&P? Now I want to know where everyone is in conjunction with one another, because again, that gives me a sense. Like, yeah, look at the S&Ps. They're way higher than where the Qs are. So it looks like the Qs are the weakest of the bunch. Let's look at the Dow. All right, let's look at the Dow. Yeah, look at that. Like, all right, so the Dow is pretty much like damn near close to Thursday's high. IWM is weak as well. So you're starting to see technology and risk like the IWM. All right. So yeah, the Qs or IWM is not even above Friday's high. All right. Let's go to the Qs or the IWM real quick, because I want to show you guys something. I'm still looking for like 204 if we could get that level. I don't know if we're going to, but look, you can see we're holding here. So you might get a long here if you still hold 208 on the IWM. Watch for, I'm trying to set up my charts on the other side here. Look for a rally. All right, as long as you're holding up here, then you don't have anything to stop you from trying to get up there to 212. So we can write that down, IWM, which would also help our thesis with some of the trade ideas I have. All right. And again, you have nothing stopping you to get up there. If you can continue to hold this level at 208, you might get along up to 212. I mean, it's just something to look at. You want to make sure you look at all of your... I don't have the chat up, so you'll have to give me 1 second. So you can see this pullback. Yeah, it's holding. It's trying to hold here. See if it can bounce. And look at the volume on Friday. I don't know how much of that was sell side. Just 1 second here, guys. Let me throw up a 5-minute chart. Not for you guys, but here on the chat. Okay. Let's go. I am the same. We're getting ready to go into my watch list. Just want to kind of see what do I want to be watching? Small caps, mid caps, large cap. You know, tech, IWM Qs or the Dow. All right. So there you go. All right, the IWM 208. Right now, it's the weakest. Let me give you guys the right information. I don't want to give nobody the wrong information. All right, I don't want to give nobody the wrong information here. All right, but the SPY and the Dow are, in my opinion, our leaders. Yeah, so you can see here, as of right now, so we're still looking at Friday's high and that midpoint from Thursday on like all of the indexes. All right, Friday's high, it looks like it's trying to turn it into resistance right now. If you guys can't see that, you guys can see that pivot high, you know, quickly broke above, rejected, failed to hold it, and now it's kind of just tapping into that 208.50. So 208.50, that you could kind of use that as like your, you know, your middle point today. If, you know, you keep bouncing into it, you can't break it, then you would look for Friday's low. Thursday and Friday's low. All right, so if we look here, we're right at Friday's high, right? Look at the Dow. Now this tells you, right? It tells me at least, not you, but look how far above we are Friday's high. And like you put in a new high on Friday, and we gap up and we're kind of just hanging out up at Thursday's high. So I'm going to want to look. If I'm looking at these, I'm going to want to start looking at Dow names, blue chip names, if this can continue on pullbacks, right? If I'm thinking about being long on pullbacks, then that's the sector I want to be in. This is just how I trade the market. Now you can see this middle point from Thursday. I guess you, I don't know. I'm not going to mix it confused. So the S&Ps, you're struggling right here. You're actually breaking through it now. 530.40, we already went through that. And then again, the Qs. All right, the Qs. I hate that. See, it's doing this because I have this on. All right, so we'll see if we can't get a move higher and see what happens with the market. See if we don't try to get a pullback. I'm not going to fight the upside. I'm going to tell you guys that right now. I'm going to let the market show me. It fails to break through these levels, and then I'll look for downside. But watch Thursday's high. And then if the Dow or if the IWM starts rolling over, watch. If the Dow starts rolling over, then watch. Okay, watch out, because then that means your leader is actually now pulling back. ARC is sitting at the 200-day moving average. I feel like there's going to come a time where like there's nothing else to buy, and then these names get eaten up. All right, let's get right into the watch list. I'm already eating up way too much time. All right, so we'll start with Robinhood first. All right, start with Robinhood first. Double upgrade from Bank of America. Okay, double upgrade from Bank of America. We'll go into GME, we'll go into AMC, but I want to make some money. Last week, I think I made 2 trades. All right, I had a winning trade Friday, and then that was the only trade I really put on outside of like the gamble small SPY put that I put on. I bought it because it was cheap and we were at highs, and it was kind of like, here, you know, if this goes to 0, it's all good. So Robinhood had a double upgrade. Right now we're sitting at $20, so it's kind of it's testing the highs now here at $20. You're testing Friday's close. Financials have been strong, and this is more capital markets, all right? I'm just going to watch to see if we can't break through these highs here, and I'm looking for $24. I'm looking for $24. You guys will see. You guys will see here, all right? This resistance level at $23.96 or $23.80, $24. All right, right there, right? You pull back, you bounce, you break it, resistance. So we're looking for, what is that? We'll say 23.75, call it 24. All right, I didn't see any gaps. So if we break through these highs, and the reason I'm saying this is we won't have anything. If you look to the left of my monitor, I know you guys might be hard for you guys to see this, but you don't have anything stopping you until you get to like there. Like, you have nothing stopping us. We have nothing stopping us. That's a big trade. It's a nice trade. All right, $5 on a $20 stock. 5, 10, 15, 20, 25. What is that? 25% on the stock itself. My math could be wrong. You know, that's a 25% move on the stock alone. And what do you think that's going to do to options? All right. We need to get pullbacks though. All right. You can see we're already pulling it back. I wanted to try to get this level here. We may not get it. You can see this little support level back to the left of us. Just keep an eye on $20 flat. That's what I'm going to do. All right. You guys can see here this $20 flat level. Let me go to an hourly chart so I know. And then we'll zoom it in. See, it's a little hard to do those wicks because yeah, watch that area. All right, so it's what do we have here? 1975. So over the weekend, I wrote down 1950. Like, I wanted to see a pullback to like right here. You know, if we get it, cool. All right, I'm going to put this right here. All right, because this is a level, and I'm going to put a line there. This is where I'd like to get this entry point. All right, you had a nice breakout on an increase in volume. Let's see if we can't try to turn that level into support. All right, let me turn this green so I can say that's my buy zone, and then if it breaks it, it's obviously getting turned red. All right, sorry, I'm doing my watch list with you guys, all right? 50-day moving average is there. 20-day is below it. I would love a pullback down here to 1925, 1950 area. So, I don't really need that anymore, I don't think. I'll leave it up there just in case. All right. This is the sloppiest chart, like, honestly. It really is. I don't like it at all. I don't like this at all. It's just like, I don't even know what to do with this. So it looks like it's trying to turn 20 into resistance, and that's fine. Again, I'm going to let this thing pull back. So, this is going to be tricky. Here's the thing. Like, I don't know. I feel like we're a bit oversold, and the thing is we can remain oversold. It's just, you know, here's what I'm saying. It's like, I don't want nobody to get mixed up. Like, you have to say, okay, what if it doesn't give us 1950? Or what if it doesn't give us 1925? You know, we're seeing tails here right now at 1975. All right? What you have to do is be comfortable with saying, okay, my 50-day is way down here. My 90 MA is down here. You know, we broke this level on an increase in volume. You know, I have to be comfortable with 1975 to 1925 and say, well, it has to be a little bit below that. To say, I'm going to give $1 to potentially make $4 on a $20 stock. So it's going to be it could be a volatile trade. We could sit here, we could wait for this 1975 level to show us that it's going to hold. Right? We could say, all right, let's just wait for it to show us that it's going to hold. And we just catch the momentum, you know, to the upside. It's trading, okay? Right now, pre-market, you made this $20 support. It's turning it into resistance. So, you know, I think you got to look to be a buyer here in 1975. All right, I think you got to look there to be a buyer at 1975. That's just my opinion. I think this is our level to be a buyer, 1975. All right, and look, if we don't get it, which look, it looks like it's turning around right now. All right, it pulls back and it doesn't hold. We stop out and we let it find its support. You just have to watch out, because if it pulls back and you break this 1975, you don't want to get caught on a bounce from 1950 to 1975, and then it just continues to work its way down. So what I would do is kind of just just watch and see what it does. If you start to see it hold these resistance levels and make them support, then you know you have your conviction there, right? So if we break through 1975, this is what I'm going to do at least. If you break through 1975, I'll look for a pullback in 1975. You know, enter it. I'll give it a little bit of room, and then that's that. All right. So that's Robinhood, 1975. We'll see if that holds. We'll give it a day. I already have this written down. Oh, and I wrote that down actually. 1950 pullback hold long or 1975 long. So far, that double bottom's working out. I didn't know that I wrote that down already. The target would be a break at 2050. 2020. 2050. Okay. All right, so that's that. If you guys have tickers, by the way, throw them in the chat. Microsoft. We were trading this all last week, guys. Microsoft is one of the best ones that I've seen so far. I was looking into Amazon and Google. I haven't done my work yet. You know, I like to watch a stock for a little bit before I trade it. So, Microsoft. Last week, we said, look, if we can get above 415 and turn 415 into support, we said we have nothing stopping us to get to highs and see if we can't get a possible break through highs. These were all the trades last week, right? Microsoft, Coinbase, because we're identifying the sentiment and what's going on around us. All right. So we'll look for that where we are right now. 40. What is that? 421.47. 421.50. So we're still sitting in Friday's range. We're making it up to Thursday's close. Snow, yeah, Snow has earnings this week. Baidu, yeah, Target downside. You have to watch. All these names have they all have earnings this week. And I have Baba. So here's what I was also talking about this morning. I need to get better at these streams. Your Chinese ETFs. Keep an eye on these. What that'll do is you can use this ETF to see, you can use whatever. I don't know which one would be the best one. You could do one of two things, right? You could use them for a hedge. Okay? You could use them for a hedge. Come on, what is going on here? Okay. So, China. Okay, so you have 3 times. So you have YNN, FXI, all right, which is the large cap ETF. Okay, they're rallying to the upside. You could find the Yang as an inverse. Okay, 3 times share. So let's say we take a long on FXI, and then we take a quarter of that position and put it on Yang. You have to do it at the right times. It's just saying, like, if it doesn't go your way, or if you're seeing a pullback, look to use some of these triple leveraged ETFs. And that's what I was going to say, that this week is one thing that I was going to do to try and get my, use in my trading. All right. Yeah. So I'm going to be watching these ETFs. I'm going to watch Bob and stuff. So let's go back to Microsoft. Pre-market highs. All right, pre-market highs. Right now we're holding Thursday's high, which is a good sign, right? You're kind of just sitting here. You're pulling back, consolidating off of Thursday's highs. It's a good deal. Oh, that's Baba. Shit. I think my stuff's messed up. Sorry, guys. Baba X, yeah. What is that? Oh, BABX. What is that? Okay. Is this a double, triple? Yeah. I'll have to look at that in 1 second. So let me just go over this real quick. My ADHD is so bad. All right. We have some nice volume. All right. Nice volume on Microsoft. So I'm still looking to see if we can catch a long on Microsoft, especially when we have the Dow leading today. Let's look for pullbacks and see if we can't get another 420 long and take this to the high of day, like 427, 428. All right, these are things that I'm going to be looking for. The volume to the downside did increase. I want you guys to keep an eye on that. All right, the volume to the downside did increase last week, somewhat. So if we get a bounce to, we'll say, what is that, Friday's high? If you guys see here on the hourly chart, and that matches right up. Let me do this. So that is the resistance zone. It's up there at 425. Not really. Okay. Just going to worry about here. That's that earnings. Yeah, that earnings high. Watch Friday's high here on Microsoft. Friday's high. I'm going to write that down, even though I have it written down. 417.50 to 420 long to 427. All right. Watch this Friday's high, because it feels like Wednesday's close, you can see, made it support. I'm not sure, you had a little bit of lopsided action Thursday on the bell, but you can see how Thursday's or Wednesday's pivot low here to like 422.57, which was the opening price of Friday, and it feels like, this middle support zone here, from Wednesday and Thursday, you turned it into resistance, is what I'm getting at on Friday. And you're doing it with, you guys can see that this volume to the sell side's coming in. But either way, it's a pullback. So in order to get a pullback, you need to turn support into resistance. So I won't look into it too much further than that. I'll just keep an eye on it myself, okay? I'm going to keep an eye on Friday's high. All right, Friday's high. Sorry that it's taking me so long again. I'm sorry. Let's go, because I still want to go to Tesla. All right. If you do get a pullback, just watch out for Friday's close and Friday's low. All right. That's.
Trend work says things are okay. Earnings are coming through. The market's less expensive now on forward earnings than it was in March.
Let me get this. Sometimes this chart, these charts piss me off like so bad.
and somewhat
Effector
perceived safer
Therapeutics,
stocks have been doing better. Consumer
EFTR,
cyclicals and transports have been
Speaking of that, what just came across the wire? All right, Moderna, Amgen, some of those biotechs are really going off. They Amgen was up 8% last week, or this month it's up 8%. All right, so Microsoft, write it down if you want. 420. All right, 420 is where I'd like to take the entry. Yeah, it's like 419.80. It's like 419.80 on Microsoft. All right, that's that. Long, and I'm looking to take this 2-3 days to the upside and test previous highs. Watch out for your volume. You need an increase in volume to break through these previous highs, to turn them into support, to climb higher. All right, so if we get a bounce and it's on low volume, chances are that 424.50, or 424 and 424 or 425 is going to be resistance, and you're just going to kind of put in a double top. What else do we have? Tesla. I haven't looked at this in a couple days. I do want to do something. Let's do this really quickly, because I want to go over BABA and whatnot. Boom, boom. Wait. Are they talking about... So Europe is getting ready to cut, and that's okay. That's to be expected. All right, so we have the 20-day moving average right now acting as a minor support level. All right, 20-day moving average. We'll make this a bright green so we don't get it mixed up. You can see we just made that support. So we're watching on Tesla the 20-day moving average and or the 50-day. Remember, we have a lot going on right there.
GDP, meanwhile, cratered by 15% in Europe at its worst, twice as bad as the U.S., but only came back anemically. U.S. growth has remained largely above trend. City economist Nathan Sheets tells me the U.S.
176 or 180 is a big resistance level on Tesla. And right now we're trading at 178. All right, we're trading at 178 right now. All right, I think that's a double top on that previous support zone. If we take a look at the volume, it's kind of outpaced. It's just, I don't know. Here's the thing that I mentioned earlier. We have Li Auto, all these electric vehicle names reporting. Maybe that has some movement with it, right? Rivian, I think, already reported. Until you can break over 180 to 180.25, that area is a resistance zone. All right, that area is a resistance zone. The thing is when you pull back, you have the 20-day and the 50-day just sitting there ready to kind of just like break your fall. So in my opinion, there's no real like momentum to the downside until you can really start to break that 50-day. And even then, like, look at the volume profile. You'll see, let me pull up like an hourly chart or 4-hour. We need to put in a new low in order for us to really get going. Dude, what is going on here? Why is it doing that? So yeah, we need to start breaking this level here, 171. You got to break 171 to get Tesla really going, right? To give it some momentum. So you're just stuck, guys. I feel like we're stuck between 185 and 170, or like 173. All right, so keep that on watch. Is like that area. Okay, you're just like, look at the consolidation there. You're just, you know what I mean? There's a lot. For every buyer, there's a seller, and for every seller, there's a buyer. All right, so there's no real directional move until you really start, unless you have a piece of news, till you have news or you break below this 50-day and this 170 level. I think until then, You don't really have much to help you go down. All right. So anyway, let me not bore you guys. Friday we had a nice up day. It did not hold 178. I did want to take that pullback short on Tesla, but I did not. Let's go here for 2. I think we still have a little more room to the upside, in my opinion. Wait, what am I doing? Again, I'm making my watch list with you guys, so.
Now you and the viewers, Joe, have
I would watch this level here, this area. I don't think I'm going to trade Tesla today. But if you can hold 177.50, 177.50 to like, look, you just turn that into resistance. So, look at that. You just turn these pivot lows back into resistance. So, I gotta say, you know, I don't know. Tesla needs help. Tesla needs help. It needs to see a therapist right now. It's just down bad. It's just not doing nothing. It's down. It's depressed. You know. No, it's not alcoholic or drug addiction. It's not doing nothing with itself. We gotta help it. So, you know, maybe 177.50. You know, watch that. If it breaks, look for Friday's low. I will say this. You have a nice level here at 176. This 176, like you can see, just straight down. It's not really a left shoulder, head and shoulder, but it's like you can see it's obviously a support and resistance zone. So can we make this level 177.50 support and break through Friday's high? Let's find out. I don't know, but you could watch this level right here, guys, on Tesla. I do apologize. I'm sorry. I know it's taking me forever. Wait, why does it look different here? Yeah, look for that level there. See what happens. I don't know. Does anybody, like, listen, if you guys, IRBT, I'll look at it. iRobot, I'll look at it. They did not, so I know iRobot laid some people off. Amazon tried to buy them, and then the government, Biden administration stepped in, the lady that he has in charge, and they said, no, you're not buying them. Like, what? And then guess what? The very next week, they did a huge layoff. God forbid the government steps in and says what you can and can't do as a business owner on both parties. I think a lot of people I think a lot of people in this world don't really see like the stuff that they should be worried about, which is stuff like that. You know, it's that chokehold on citizens and businesses where, you know, you can't do this, you can't do that. Oh, I'll let you do this, but I'm not giving it to you. I'll give you the tax deductions, but not you. That's not a free market. Anyway, though, iRobot, I can look at it. Is there news on it at all? IRBT. It's in a downtrend. Bingo. That's what I would say. Well, here's the thing. I don't know who the owner is. Because, like, the thing is like, iRobot was trying to be sold. So, it's like, You know, what if the guy's like, it's just too much work for me. I'm getting older. I don't know if that's the case, or if he's just like, I can't do this no more. Because here comes the point, right? Is when a company gets like that, you get to a certain point, and you have to be experienced to be able to run that business at that scale, right? You got to know what you're doing. Like, we're talking like an iRobot versus like a Chipotle or a Target. Like, when you start moving some big money and a lot of product, you need somebody that can actually know what the hell it is that they're doing and run the company correctly, right? Sometimes you see that. Well, I'm not going to say sometimes, because it's like all the time. If a company makes it and they started from, X, or they started from A and went to B, usually you'll see a CEO change once it gets to a certain point, because it's just too big they don't have the experience. It's just there's things that they don't know and haven't experienced. It's not to say that they can't do it or work with someone that's experienced. That's why, like Snowflake, right? We've seen Snowflake, and we're going to get the first quarter since the new CEO, where we're going to see what's the first quarter with the CEO, because he has not. The street thinks, it's not that they think, it's just like the CEO obviously has not proven himself to the street that he can do this on a big stage. You know, so we're gonna get that. We're gonna get that. All right, that's why Snowflake sold off, because the CEO that took charge has not proven himself. All right, once you get up to these big companies, Snowflake has like a beautiful inverse head and shoulders. I need to go live like tonight or whatever. We all need to go through charts, like just go through charts and find the best setups. Okay, so what did we say for Tesla? I don't want to get off track real quick. TSLA. So what are we saying? 177.50 breaks. We look for that to get you could look for a short there at 177.50. Take that down to 175, 176. I would say that. I'd be safe to say that. 179, 180. All right. So we'll look for those previous highs. So, and when we open up today, depending on where we are, we're going to be above. I think you might, in my opinion, Tesla might pull back off the bell, like what it's doing right now, and then try to rally like up to Friday's highs and into 180 and probably reject. I don't know if it will, but like I don't know if it'll reject, because it could keep going. Let's look at the volume. The volume is low. I don't want to spend a bunch of time on it, but those are my thoughts. What I would look for, two things. If we get a pop off the bell up into 180 and you start seeing that we can't get above it, then I'm going to look for the short and see if I can't take that back down to 176. All right. If we start, if we pull back off the bell, like the bell rings, it's 9:30. Then I'm going to look for a pullback into like 177.50, and I'll see if we can't try for a long there. See if we can't try for a long. Outside of that, your support level's down at the 20-day moving average. So take it for what it is. This is our. What is that? 173.
But who is he pulling from? That's the most interesting piece of data I'm looking at right now. If he pulls 22%, but pulls evenly from both Trump and Biden, he's a non-player. If he only pulls 2%, but he pulls.
And we said that Tesla's a $6 ATR, right, from high to low, roughly. Like Friday, 173, we'll say. 180. That was a big move. So that was a $7 move. 74, 79.50.
What to watch at JP Morgan's Investor Day.
So that's $5.50. Yeah, $5 to $7. $7, $6 to $7 on the high end. On the low end, $3 to $4. All right.
So this is pickleball? It's basically.
All right. So that's that.
It should be called wiffle tennis.
Let's keep it moving. So we have Microsoft, which was a long, Tesla short.
With E-Trade from Morgan
Well,
Stanley, we're ready for whatever gets served up.
you know, I'm neutral on Tesla. I'm neutral on Tesla.
Since you like to get schooled.
He's like 57. Yeah. Yeah.
Coming to our clinic. First
So I'm not sure what else Gary's ran, but I wonder if this is, you know, iRobot's pretty big. We'll see what happens. It's in a downtrend. You know, I don't know. You know, like you said with the acquisitions and stuff. Like I don't know if they can come up with like, you know, I honestly don't even like. I'm not even sure what it is that they do. Could they do a deal? Oh, guys, speaking of that, thank you for bringing that up. Don't forget about Oracle. Look at Oracle. All right, Tesla. There was news announced, right, that Tesla was going to use them as their data stuff. Oracle's a good company. I wish I owned this a lot lower. I wish I owned this, as a matter of fact. I do not own this because I felt like I never got the chance. All right, Oracle's a really good company. The state uses it. Companies use it. I don't know if I'm sure your guys' states might use it. I don't know who else is out there that can compare to Oracle. But we could see a test up here of like, you know, this. Let's see here. What do we have here? Let me pull this up. I don't really like this chart. But there's some nice, you guys can see that there's some nice volume. So I'm going to keep Oracle on the list and just say, you know, if we get pullbacks, I will look for an opportunity to try to take this thing to the upside. Is that from earnings? It is. Let me pull this up real quick. Okay, so that is all-time highs. Come on. My charts have been doing this ever since Charles Schwab. They've been messing up. Fuck. Did it just fix itself? It did. It fixed itself. Okay, good. Alright, so Oracle. Now, what Oracle does is, if you guys don't know, that it's like a big database. Like, you can set, like, anything you want, right? Whether it's, like, blueprints for the state, whether it's information, people's information, all that fun stuff. Oracle does it all. All right, they're good for saving data. So you could look for this level right there at 125.25, 125.50. I would look to see if we can get up there and break through that level. I would like to try and get long on pullbacks. This level down here, which we already held at 120, you can see it was prior support and resistance. See if we can't break up through there. Dude, I hate this mouse. Alright, so 125.38. We could look for a swing trade, look for pullbacks here, and see if we can, you know, if we can break through 125.50, we could look to start taking this back up to highs. So that's that. I just thought about that. So I just wanted you guys to, you know, kind of see this and know that there is a news catalyst with it. And it's coming into resistance right now. Somewhat. I'm spending way too much time on this. I need to go focus on what it is we need to focus on. Like, none of this stuff is that important. As to, like, Chinese names, crypto, and stuff like that. But anyway, you could look for Oracle. Maybe, you know, you catch pullbacks and you start holding. I would look for a long. If it gave us the opportunity, if it gives me the opportunity, like, what is this? Like 122. We'll say 122 to 122 to 122.30. 122.40. I would love to take a long on Oracle. I would love to get long Oracle right there. And I'll write it down, and maybe I could actually I'm going to set myself a reminder there because I want this, and I think we can. I think we can make a nice swing trade on this. And let me see here. Let me pull this down a little bit. Let me edit. Price level 2. Sorry it's taking me so long. Alright, so there we go. Alright, pullbacks. I hate this. I really do. I just want it to go right there. Right there. That's it. Alright, so pullbacks. Watch prior highs on Friday, too. Alright, you can look for Friday's highs, like 123.50. But I think we could get ourselves a nice little pullback. Alright. So, yeah, there's that. Alright, let's keep it moving. Let's keep it moving. And I literally just thought about something that I was watching. What I'm going to do is I'm going to set an alarm. I'm going to set an alert here on Oracle. I don't know if I'm going to get this level or not. I'm going to set an alarm. Create an alert. What is going on here? Is that what I said? 123. Create. And then I want to create an alert. Create alert. Alright, so I can have 2 of them. Alright, good stuff. Actually, I'll get rid of this and I'll watch 123. Alright, I'm setting an alert for 123 on Oracle. Hopefully I hear it. Okay, so AMCN. Alright, so Amazon is like, so if you look here on an hourly chart, it looks like it's putting in like a nice little, it's like, it's holding as support, okay? You have, yeah, I see a double top here, but I also see this 20-day moving average and this prior resistance zone right there. And you bounce off it today, 184, alright, as support. Okay, that's holding as support. And I want to see if we can start to test 188 and see if we can't try to get back to highs. Alright, I want to see if we can't get back to highs on Amazon. Alright, if I pull up the daily and weekly chart, you can see there's a lot of tails up there. There's a lot of selling pressure up there. Not a lot, but like it's not extreme is what I mean. Again, we got to see what happens with NVIDIA and what the overall market does like today. Sorry, I wasn't looking at the chat, buddy. MX investors are hating it, but short term I like it. Yeah, summertime. You know what's funny? Bingo is with IMAX. I went to Target yesterday, and the amount of people that were at the movie theaters was actually pretty crazy. Like, it was a lot. The movie theater was, like, the parking lot was full. So I know that they were testing, you know, the limit, as far as with the amount of people that were in there. All right, so we can see here on the daily chart, this level here where it's pulled back to like 184.50 to 123, like, you know, resistance. You close up there, you gap up, pull back, right? Open at 186, pull back off of 186, you know, and you're just still testing 184.75, and then you bounce, pull back, bounce, and then you're pulling it back. You gap down, up, come in, down, up, gap down, you come down, or you tried to go up and then you pulled it back, and then you're kind of just sitting here. Now these candles are getting smaller, so it's like, look at Amazon, right? We have this wedge. we have that wedge there, and you'll see a lot of the other names are doing the same exact thing. Okay, same exact pattern, and I'm going to show you guys. All right, flat top, or you have support, and you're coming down in there, and you're either going to break out or down. But usually this is a reversal pattern. Let's go to the hourly chart, which we already were here.
Got some positive market commentary today as well. We'll get to all of that. Our roadmap begins with the ongoing melt-up for stocks and why one longtime bearish strategist has finally capitulated. It is NVIDIA's week, and at least 4 analysts upping their targets ahead of results on Wednesday.
Okay.
And then Apple's ongoing China challenge, reportedly slashing iPhone prices to some new levels to counter competition.
You have a lot of look at the volume that's up there, right? Look at the volume that's up here. You could use this whole level here, but this is where the target would be for me. It is 188 to 187. So it's like $1 wide. This is the buy point, it looks like. And listen, whatever you guys have, if you guys want to if you guys know, whether it's news or just anything that you see on some of these names, throw them in the chat. Say, hey, I like the downside for this name or something. If somebody comes in here trolling, just talking dumb shit, I don't know how to weed that out. But if it feels like you're just trying to throw people off, it's not a good look, and I'll probably have to block you. And I don't want to do that. So we're just here to make some money. All right. So daily chart, not too oversold, not too overbought. 4 hour. It looks like we get a nice pullback. I'd like to try and get long this name. Let's go to a 30-minute. I don't put. The reason I'm not putting this prior support at the resist, I mean, I could. This would be your going into this level could be your first take profit, which would be here at what is that, 187? That would be a target. All right, so I'm going to write this down myself. We'll check in on Coinbase, which has the same exact pattern. So Amazon. I don't want to have a bunch of things going here. I'm battling a few things here, right? Okay, so this is kind of just pulled back, consolidated here. Right now it looks like it's trying to hold Friday's highs, okay? You can see here Friday's highs. This area, 185, looks like it's trying to pull back there. It looks like it's trying to hold it. Google, if you look at Amazon compared to Google, right, you'll see the big difference between the both of them. One of them is a lot stronger than the other. You know what I mean? So it's do I want to? I'm just gonna let Amazon show me what it wants to do. I'm just gonna keep it real with you guys. If we can hold, if it looks like we're gonna hold this level, then I'll start to look for the breakout. And that level is going to be 185. Right? It's going to be like Friday's double top. Right, you guys can see there. You guys can see here, it's just... Maybe you get another shot at 183.50. So, I'm going to keep it on my radar. I just don't really care for this thing. It's just not giving me... there's no real clear setup in my opinion, outside of getting down to the 20-day and getting that long down at the 20-day. Okay, so let's do this. It's important to recognize that the Mike Wilsons of the world are not a new phenomenon. They're an old. That's funny because there was a... Okay, 15-minute chart looks a lot better. 15-minute chart looks a lot better at 185. It does.
1081. And I kept thinking, you know what? All the naysayers could be wrong. I'm going to buy Texas. I bought Texas Instruments. I bought Motorola. I bought companies that just were going, I mean, I hate to say this, but had momentum. And it's
All right, so pullbacks in the Friday's close, like 185. I'll call it. I'm gonna say it now. Pullbacks into 185 on Amazon. I'll look for a long. All right, that's what I'm gonna do. All right, because if we can just like see, we're at it right now, and it's trying to hold. It's trying to hold right now.
That I got. I didn't take it out from here, and I didn't take it out because I thought it might be a jinx. Of course. And I just don't want to be part of the jinx. I also am afraid myself to say anything that sounds like cheerleading.
See, I'm trying to be exact with you guys. It's not like, oh, if it holds down here, like, no, it's not. I don't think you're going to see 183.60, 183.50. You could, but I don't think you're going to see it, you know, because you are already down there. You would have already had to have been a buyer. So where can we look for? And look at this. We have, you know, you filled the gap Thursday, pulled it back, turned it into resistance, turn that into resistance, resistance. Now you broke above. Okay, so here's the picture, right? 185. So look from like Tuesday into Wednesday, right? Tuesday, you had a nice rally, and you came in Wednesday with a gap down, right, off of 187. So you pulled it all the way back to the 20-day at like 183.50. You bounced to 186, and then you pulled it back, and you worked your way back up to where? From Wednesday's low into Thursday's opening price, which was Thursday's high. You filled the gap, and you tested Tuesday's high. So if you look there, you pulled back, you filled the gap, and then you pulled back off of it. It ran back up. Right, and I'm looking on the bottom left here. Okay, you can see it. Look at it turning it into resistance and making this wedge there. Right, you can see that wedge going into that gap fill, and then what's it do? It solidifies it as resistance. Pulls back, hold. You get a bounce off 186. 186 breaks, and then what happens? 186 resistance breaks. We're at 185. Breaks, bounces, doesn't quite get there. But Friday, what do you do Friday? You double top, flat top resistance at 185. And now we're above that 185. So the trend has changed. Right? The trend has changed. So you can see this double top here, which was also support, resistance, resistance, double top. Now we're above that double top of 185. All right. So you guys can see this level right there. It's like 184.96, 185, same difference. So we're sitting on top of that level as we speak. And here's the thing. If it turns 185 into resistance, then we know. All right. Then we're looking for 173 on the downside. All right. Or wait for it to get into 173 to be a buyer. All right, we'll see what happens. In my opinion,
And the fact that he didn't leave himself that, the fact that they go with 3 rate cuts, will leave them to be discredited. I've learned this. I've been doing this for
184.80, so it's like a 20-cent range. So you can see here Friday's close was a really nice level. That close is a nice level of support, but whatever. All right, anyway, let's keep it moving. Amazon, I'll write it down. We'll say 180. 185 to 184.75. So your stop loss should be just below Friday's close. All right, that's just my opinion. It should be, your stop loss should be like right down in this area. Maybe make it your stop loss below Friday's VWAP close without pre-market on, okay? I'd put my stop loss just below like 184.45. You know, just be patient and see if it starts regaining these levels. Because if it does not hold 185, right, and you don't get no liftoff up here in this area, then it's still in a downtrend. Let's not fight it. All right, so let me do this. I don't even know what time it is. It's 9:10. We have 20 minutes. Okay. All right, guys, let's go here to Coinbase. All right, Coinbase. So Microsoft, Coinbase, and I want to go to a couple Robinhood and Chinese names. So Coinbase, same thing as Amazon, same thing as the other names, right? You have this consolidation, pullback lower. You're starting to find some support. Do we start to bounce out? Can we bounce out of this? I will say this on the daily chart. And again, we were watching this last week because of what's going on. NVIDIA, Microsoft event, AI. You can watch AI as well. Meme stocks, crypto bounce. Would pulled back, held to 50-day. Right? Retail earnings, feminist, Chinese ADR. So these are all, right? And financial and utilities, which have strength. Okay? So Coinbase has a lot of sell-side volume after the Wells notice from the SEC. All right, 20-day moving average. So what I'm going to look for right now, we're at 209. All right, we're at 209. We have not reclaimed 210. I want to reclaim 210 and be a buyer at 210. All right, to try and get up to 220. All right, 215, but really 220 would be the level, and I'm going to show you guys why. So here's a 4-hour chart. You can see this nice long wedge. All right, you can see that nice long wedge. That's what she said. Yeah, so this is where I want to be a buyer. All right, we're starting to pull back off of, so we're rejecting 210. You have, this is a major support. See, this is, it's hard with these wedges because it's like, I can identify like a few different levels as support. But it's like the volume that's popping up off of these levels isn't that great, which is not what you want to see. Right? You want to see an increase in volume off of these bounces. Like, look at that sell-off there from 220. All right. I'll just tell it to you like this, all right? Resistance, 219.75, 220, and support down there at the 100-day moving average at 195, 196. All right. Pullbacks into Friday's low and Thursday's low, 199, 200. You could look to be a buyer. If we get pullbacks down into there, you could look to be a buyer. You have this middle zone here at like, which it held Friday. It looks like it held 205 Friday. And now we're trying to. So here was the thing. This is what I was looking for, right? I wanted us to hold this level, and we did not. We failed to hold Friday's high. All right? We failed to hold Friday's high. Where's the next buying point? You know, I'm going to give it to 207. I'm going to give it just under 208. Let me actually see if my cat wants in. I'm going to use the restroom real quick. Give me 1 second. Let me do this. So that's Coinbase, right? I'm going to wait and I'm going to be patient with these. I want to see what we do today, how we start to, you know, what the market starts to do. But, you know, these are some of the things I'm looking at. But let's go to BABA. So if you weren't clear on the levels there, all right, I was watching Friday's close to hold, okay, which is 207.95. So your stop loss would be just under that if it breaks, and Friday's high of 210. So watch if we start turning 210 into resistance. If we turn 210 into resistance, then I'm going to get short. I'm going to get short at 210. All right. I'm looking to get short at 210. If we cannot hold it, you know, if we run back up there and test it, and you start seeing, okay, it's rejecting 210 again. There is a little bit of this 205 level is something else.
Climate researchers are weathering a data storm. That's because CDW transformed their devices and infrastructure with Lenovo ThinkPads.
Could watch 205 there also. 205 could be another level.
Giving them the scale to stay ready for whatever's next.
Here's the thing.
Make amazing happen.
You have a gap fill, guys, up at 220. Yeah, I was looking to fill. It's like 219.70. So if we can find support, you know, I don't know. I think the selling pressure might just be a little bit too much.
Swing into summer and save when you go pro. Invest with an advantage. Be prepared for any market with CNBC Pro's exclusive stock screen.
I'm going to use the restroom real quick.
And stock picks. With CNBC
Give me 1 second. All right. All right, so we had Lee Auto this morning. Again, we have Palo Alto this afternoon. So keep an eye out for those names like CrowdStrike and stuff like that to give you guys, you know, some opportunity there with if you want to try to play earnings or something. You know, finding the low IV names where you're not just going to get crushed with implied volatility. All right, so I want to go look at some energy names, and I want to look. Well, actually, I want to look at Bob and stuff first. Robinhood looking like $20, wanting to turn into resistance. And that's okay to have a pullback off of a nice day like that. Again, a double upgrade. JP Morgan pulling back. That's wild. Goldman Sachs is going for 500.
funding. What's next?
Do you see yourself enjoying a comfortable retirement like these folks? Well, as I remind our clients,
Exxon, so it's back up there at 119.75.
but are you sure it's the right one for you? Creating a plan with Fisher Investments gives you the confidence your money can last.
See if we can get some selling pressure here.
Plan to meet your unique goals, needs, and lifestyles so you can enjoy the retirement you dream of.
Get a fresh perspective. Have a Fisher professional review.
So let's see if Bears step in here on Exxon.
If your investment portfolio is $500,000 or more, call 1-800-350-4411.
If you're thinking of retiring or you're retired and want to enjoy it more, Fisher has answers. And our fees are
Apple's turning Friday's low into resistance. I know there was news out with Apple sales. They're at 189.40. That they were, you know, putting foes on What are your thoughts on the value space? Depending, I mean, you can never go wrong with it, but it is exactly what it is, right? If you're talking about long-term investing and stuff, you know, it is exactly what it is. It's a nice, safe place that you don't have to worry about, you know, volatility. You know, I think it's good to shift into those names when you start to get worried. Me personally, I like to be able to be a part of the rally, and then, you know, get out and maybe get into those names, collect a dividend for, you know, when there's some uncertainty. You know, it's good to have. You know, it all depends on who you are and what you're looking for. You know, if you're younger, older, if you're, you know, it all depends. If you're running a retirement accounts, and, you know, depending on how old they are, it's good. I like them. I buy them. All right. So looks like we're gonna come in today with the gap up, a small gap up. Keep an eye out for Friday's close. Keep an eye out for Friday's close to see if that becomes resistance. All right, Tesla pulling back like we thought. All right, let me save this stuff and let me get some of the other. Let me get some stuff going. Wait, I did not look at BABA. So BABA was a trade I took on Friday. All right, I went long BABA on Friday. I would watch $88. I'd watch $88 on BABA.
If you look at antitrust and you wanted to be bought by Honeywell or by Train, this administration would not let you do that. Now, arguably, I would tell you maybe it's
So Kramer's talking about
these guys have kept their they've kept a lot of their customers.
buyouts and stuff like that, where he's talking about, like, you know, if 3M wanted to buy him out, this administration wouldn't let you do it. Like why? Like, that's the question I have. Who the fuck is the government to tell two people that they cannot do a transaction together? Because they assume that it's going to hurt someone else. Or they think, like, it's just, or they don't want them to get too big. Not that it's going to hurt somebody, but they don't want them to get too big. Like, what? The psychology around that. And we let it happen. It's wild. You know? JP Morgan, all these other places can get bailed out, but yet not one. Oh, watch airlines, too, everyone. See if we start getting a pullback in airlines. So I'm kind of like broadening my my looks here. Again, I'm going to take Monday. I'm going to watch. I'll keep an eye on a few things here. And see what the overall markets do. Maybe I trade the overall markets today. Maybe I, you know, I don't know. Oh, silver. Keep an eye on silver, like AJ. Keep an eye on AJ. This is trending. Silver is trending right now. Look at that level at $8. No. I knew this was going to happen. When I put these boxes there, I can't. It messes with me. Like when I.
Go for the walks and the rides. Go for the savory and the sweets. Go to celebrate and rejuvenate. Go for the win.
You came for a day of total relaxation. If you're lucky.
So we are down there. Okay, so we're bled up. Watch for Friday's VWAP on BABA. Watch for that VWAP on BABA. Friday's VWAP. Let's go over what they call a day 2 VWAP. All right, and it works a lot of times. You'll see you'll get support or resistance there. About a week away from being able to get long-term capital gains on Solana. Going to be the longest week ever. Oh, I'm sure, bro. I'm sure, man. Alright, let me plug my stuff in. Let's get ready for the day. I got that up. I got the stuff saved. Let me charge this up. Looks like we got 5 minutes here. Alright. Boom. Let's go over this really quickly. Let's go over AG. Now again, this is trending. Or was trending. Let's see if we can start to get some nice upside today. Look at that volume on Friday. Alright, and also remember, look at CCJ. CCJ broke out to a new high. These things went from 6 cents. Listen, 6 cents to $3. Like just crazy type of gains. Excuse me, I'm sorry guys. Pop-Tart and stuff was not a good mix. Look at that move. Look at that move. Alright, look at that move. Alright, if the dollar keeps pulling back, look for energy, gold, and silver, DXY. I could look at it on whatchamacallit. So we were looking for a bounce to like 105. Alright, we're looking for a bounce back to like 105, 105.4. Just to get that retest to solidify, hey, we're going to make that resistance. We haven't done it yet, though. So, so that's that. Shit, do I have the live stream up, y'all? Did you guys hear me? I'm sorry. Damn, that sucks. All right, you could look at PSYG, I think it is, physical silver. Google silver, like silver ETFs and stuff if you don't know anything about them. But the one name I like, which let me log in. Shit. Sorry guys, it's down to the wire right now. Let me log in. All right, let's go to AG real quick. Daily chart. A little bit of upside here. You wick down. What is that? So we're above $7.99, $8. We're above that right now. Oh, this sucks. Not sure if it's going to work. Not sure how much room it has. We have 1 minute and 27 seconds. Yeah, look for that level there, guys. Watch Friday's close. This level here at $7.99 for AG. And see if we can test that prior high there at like 8. Oh, we just opened up at it. Damn it. That sucks. Whatever. All right. 3 minute. All right, so what are we watching for? What should we watch for first? Let me get the S&Ps up. Look for pullbacks to Friday's close. Watch for pullbacks on the SPY in the overall markets down on the SPY 529.50.
Some stores that are profitable, you have to close the ones that are not. That would have saved a lot of companies. Bed Bath & Beyond could have been saved by closing the non-performers.
Sorry, I'm just trying to hurry up here. 20 seconds. Take your time, all right? Take your time.
Where they even didn't time and they're doing it at the market, which I hate because that means you can't move it up.
Take your time, everybody. Take your time. Just watch the markets. Let's keep an eye on stuff. Listen, if you guys see anything with relative strength or weakness, throw it out there. Let us know, all right? What's relative strength and relative weakness? That's double the volume, triple the volume to the upside or downside. It don't really matter, all right? So day 2 VWAP would be like 528.75 on the SPY. And look at it, pulling right back in there to go long. Tesla, watch this level here. So we said I didn't even write it down. Amazon, nice volume so far. It's a nice volume there. Watch that level right there. Look at that. See that resistance that came in there? See if we break above 185.50. That was a big resistance level. If we can break it and hold it, that's a nice long opportunity on Amazon. There we go. All right. I'm looking for Amazon right now. I'm going to look for pullbacks on Amazon. Nice volume there. Look, it's just going, guys. It's just going. Shit, man. Told you guys, 185. If we could bust through that thing. That sucks, man. You had to be long right off the bell on that, guys. I got to look at the S&Ps on my on the other thing here. Shit. Sorry for the language. Oh my gosh. Come on, man. This sucks. Alright, so look. We already filled the gap, but the target would be 187 on Amazon. Alright, Amazon 187 is what I would be looking for. I gotta fix this. I'm sorry. Um, 185. What do you have? 187.50 there. Look, it's already at 186. This thing's just ripping, guys. Oh my god. Here you go. You're in the resistance there at 186 now. You got some resistance there at 186. 186. I can't believe that. I cannot believe that.
TSLA just leading the S&P. What are you talking about tonight?
Well, look, one of the things we know from endless data, whether it be from MasterCard, which put out a fantastic piece last week, that this is still the biggest bargain, or from Steve
It's a lot of
the cruise. Norwegian Cruise has lagged the group. Frank Del Rio used to run the company. No longer. We've got Harry Summer.
Looking at the 187.50s if we get long Amazon. I just don't know if that long's going to happen now because it pumped right out the gates. If we can turn, I need an entry at 185. Pullbacks in the 185. Then I'll take the long on Amazon. So if Amazon doesn't give it to me, it is what it is. All right, it is what it is, which it looks like it's not going to. Because you're breaking above 186. We're headed to 187 right now. That's where she's going. That's crazy. That sucks to miss that trade. Damn. I tried. I was trying. When we tapped into 185, it pulled back really quickly, and then bang. It just went through it. And right when it pulled off of 185, I tried, I was trying to go long. I was trying to, but that's a nice trade there already, it feels like. So, what the fuck, man? You gotta be kidding me. 184. Like, we're already damn near, we already did like a full ATR on Amazon. I mean, if you guys want to go after it, you're more than welcome to, but I would not. You got to understand the damage that you're potentially doing yourself, especially, unless you're a person that's buying the stock itself, maybe you wait for a pullback because you don't have to worry about the stuff that I worry about with options. You got room to 187. That's all. That's all I have. Fuck, man. Sorry for cussing. That was a nice green trade there. It just had to be a little bit quicker. I haven't watched Meta in a little bit, but I was watching this, and it looks like, you know, we have a gap way up there at like 480. You know, if you do see Meta starting to hold 472, could look for a bounce higher to try to fill those gaps.
Well, what moves the oil market? Now that was The Economist has a kind of a piece that suggests foul play.
All right, energy's pulling back. AG pulling back here on some sharp volume.
We know that we still have. There's
If we can get a bounce back
in the Permian, at least for
on AG,
really jack up oil, but it's not.
if you get a bounce back to like 790 or so, if we could take this lower to like, man, that'd be a nice.
The nominal demand that came from, the marginal demand that came from China may be out. Right?
Oh man. So these things used to be a lot.
Climate tech and all of that.
AG used to be a lot more liquid than what it is right now. So I'm gonna lay off of that. If you guys want to short this name, I would wait for bounces. Wait for that bounce back to 785 or so. But watch out, they're trying to squeeze it. Let's look at Tesla. Tesla's falling. Alright, so Tesla broke 176. Tesla broke 176.
WIX, Wix set the highs up 15%, $155, following their earnings report earlier. That's
Copper's a great
X rate.
byproduct of gold.
WIX.
Maybe I was thinking about looking at the gold miners just because suddenly they have dross that may be gold.
Interesting. We mentioned JP Morgan a few moments ago. Our Leslie Pickers there at Investor Day. A lot of the comments, Jim, were
Investor Day with JP Morgan.
banking overseas, trying to quantify some of their AI use cases.
They are the ones, just for the
Tesla might have room back down to 172, y'all.
they're the ones that I think have been trying to figure
Watch
out.
Tesla there, 172.
There's no doubt about it that they've always been a remarkable machine.
Giving some other
172.
responsibility.
Well, that could be interesting because even in the
173.
Yes.
and at some point,
I just.
Jamie will do it.
Fuck, bro, that's brutal.
Is a much loved
What's Microsoft doing?
investors,
I can't believe I.
and I think that
Fucking Microsoft too, man.
Of course, JP Morgan,
Well, our longs are working out, guys. Was anybody able to get these? Like, you know, I'm hoping to be able to help make some other people some money, and you know, we work together and make some money and feed each other. You know what I mean?
Charlie's picking up only
Damn.
55 and 65-year-old guys that didn't become
Now again, we've been sitting on these since last week. All right, we've been looking at these names since last week, waiting for these to set up, and here they are.
They recognize that they don't have enough time to be a 10-year
See that day 2 VWAP there at 420.17?
worked at Visa just says, all right, I'll take it. And he's quietly building up a real investment banking powerhouse.
Semiconductors, continue to watch them,
He's got the momentum. He's
but I didn't really have them on my list today.
got his fall. All new board, all new team.
I felt like we could see a lot of outperformance there with like Amazon and Microsoft.
a real evolution in the mortgage business now, I think, in the past.
Yeah, I think that they want
Unbelievable, bro. Unbelievable.
they want
I don't know what to do. Like, they literally just took these trades with like the first 5 minutes of the day. Like, look at this. 420 to 424, guys. That's a $4 move. Exactly. I'm right there with you.
Jim, Micron,
Yeah. I'm with you there. It literally did like the full ATR and just right off of the bell. Yeah, I'm looking for Tesla to get down to 173, 172. I need a bounce back, though. I need that bounce back off that pivot low of Friday.
being negative for too long.
Let's see here.
Micron was a mistake, staying negative. I like that.
You might get a little support down here at like 174.
There's some humility. This is
But-
a stock that when you get it right, when you get it right, you have to start when it's horrible.
I don't know.
Really hate it.
That's
but I
fucking
have to tell you,
horseshit,
of course,
man.
everything that Sanjay Marocha said,
God, that makes me so mad, bro.
Sanjay was saying, listen, the inventory
Makes me so mad.
And that's when you see that first, like the base camp on the way to Everest. That first base camp was when he said wow, maybe the long-time followers of Micron realize you can't wait till it's better. And this fellow, Joe Moore, waited till it's better. And that's just not what happened. It can lead for 2 years, then go back down. But they have now a less cyclical business. They have a secular growth business that's related to data centers. And this high bandwidth memory is fantastic. They're great manufacturer. Notice.
All right, look there. What did you get? 174. Damn, not even once. Oh, we haven't got there yet.
What the Commerce Secretary is doing. I love it. But Sanjay is his own Commerce Secretary.
I need to.
Make it here. And Gina Raimondo, I think, she's spending a lot of time with Intel, which is great. I would check that balance sheet of Intel. But I do think that Micron can do it alone or do it with someone. But Sanjay Mehrotra is the king of American chips, not Pat Gelsinger.
Interesting.
Oh, on the X Odyssey,
And
the
by the way, a
expiration
quiet man
was
and
full
not
year
a braggadocio
2023 first quarter
just goes
results
about
for
making great
2024.
chips in
That's
an
right,
area where there's only a couple
23.
companies and it's really dominant. And that's why that stock can go still higher.
Speaking of making things in this country, this vote out of Mercedes on Friday did not go the UAW's way.
Wasn't that something?
Were you surprised?
Well, the South is different, but yeah, I was, because I know that when I look at what Ford.
I'm still here. I just.
Well, these people are basically voting for status quo, and if you look at the deals that they got,
Look at Wednesday and Thursday's highs.
I mean, they were great. Now,
It's just falling out a bit.
my wife would say, Jimmy,
Bullshit.
so-and-so CEO's making
Fucking
22
bullshit.
billion, why shouldn't they make it?
All right, if you can get a,
When Toyota came here, they were, and
if for whatever reason Tesla can just get itself.
But I was surprised.
Meanwhile, Reuters has a piece on Tesla about the company trying to.
I need a test up here, and then maybe we can get some downside at like 74, 75. Like this one in front of like 176. We have VWAP up here. See if you get a low volume bounce, and then, you know, you don't really have much on the table there though. That's the sorry part about it. You know, if you look to the left of us, we don't really have anything stopping us to the downside. So if I can get this 176 entry in front of 176, I feel like we have room down to the low 170s, which could still be like a $2-3 move. All right, we opened up at 177.60, call it 177, and we're at 174.50. So 654. So that's $3. So we've done half of the ATR right now. So we still might have some room left. 177.50, 174.50, 550, 650, 750. So we've done $3. We could probably get $6 out of this. All right. So I will look for this right here. I'll put it on and then I'll take it off if it doesn't work. Bounces into 175.75, 175.75 to 176. All right, that's what I'm gonna look for, and see if I can't take a short on Tesla there. Just watching the manner in which it does what it does. Let me pull this back out a little bit and make sure. Yeah, I'm looking for this level here. I'm gonna look for a resistance level. Oh my God. I don't know. I'm just fucking pissed because this shit's.
Doesn't mean I want to buy the stock. I'd rather buy companies that are betting the revolution.
And look, there it was. But I keep messing this shit up. All right, so yeah, you guys can see right here. I'm looking for a rejection here. Let's see if we can't get that rejection right there. 175.50. 175.50 in front of 175.75. I don't know how to get it back to where I had it. I just had my screen set up the way I wanted it. That sucks.
Last week about maybe cooling on the idea of an all cash.
Yeah, David's been right on that. I always joke with David, you killed Paramount.
I'm not even going to be able to get it, guys. I'm not even going to be able to get it. I don't even know what options to look at right now. 170s. It's going to go. It's going to go. Hold up. I'm not in anything just yet. Make sure you have a look. It's above it. Okay, so just be patient. Just be patient. 170s.
There are people who just say like
170 puts. Wait, hold on. Let me make sure that's where I want to be. 15,000, just under 10,000 in volume. 13,000 there, 175. 175 or 170?
I'm just looking at Dow components year to date, Jim, and where Disney ranks. Yeah, I mean, we talked the other day about its lack of contribution to Dow, 40K over the last big milestone.
You know, I've done enough to say negative things about Bob Iger. My child trust is in it.
So look, what I'm going to look for is a consolidation right here. Okay, let it consolidate for a few minutes. And then I want to see this trade line on a 15-minute chart. I want to start to see this thing, you know, kind of pull itself down here. Once it gets close, we should get like a move, which would yank that down a little bit with it and really get the trend going here. I really want to get this trend going because I'm going to use that as an entry point. It's already at 140, 139. I'm going to keep an eye on... See, like right now, guys, I'm doing a lot of things. I'm keeping an eye on the option price from where I can see like a range, right? High to low. What does it get down to, right? Versus where the levels are. Not really that, but, you know, just, you know, I'm watching the option prices. So there's a pullback right off the bell.
Those of us who still go to the movies feel
176. Volume's pulling back.
Look at America. But you know, when you have to, there's not as many cinemas, and like I think I went to see The Fall Guy. I thought it was like fantastic, and I said, "This movies are back." And it was like then I saw it didn't even bid on the box office. You know,
131. I saw 132. I'm not even in.
The Costco big screen.
Let's see, 170s. What is that? 170s. Again, I'm just being patient.
I mean, you know, I paid $7 for a box of Good and Plenty. There's like fewer Good and Plenty's in there. The goods, there's more goods, less pop.
138, 140.
It was $100 outing to go see The Fall.
And no sitter.
No, yeah, I just.
PTSD, data storage is getting a pop here on very light volume. That's Delta
no, I mean, you can't go to the movies without spending so much money. No one.
I don't like that reversal.
Going up, yeah, $250. It was like fantastic, and then you get all the shrimp you want at Red Lobster, but that obviously.
What you're arguably giving up is that communal experience.
Here we go. Come on. Can we get it here? Just watch it. We gotta break this level here at 174.99. You gotta break 174.99. Gotta break that level there. Turn it into support, or like you pulled back to it. I don't know. You guys can see that where it turned it into resistance, and now it's bounced. It bounced above it. Now it's pulling back into it. Yeah, that 176 was a nice entry. There it goes. It's got to break this level here, though. Watch that level right there at 175. Watch 175. Again, let's see if it just consolidates. At least this is what I'm looking for. You know, I'm going to look for consolidation and really try to get this thing back down. I'm not in anything just yet.
That's HIMS. 1746 now, up about 20% HIMS.
HIMS is going. I feel like I've traded that before. It's not the first time I'm hearing about that. There it was. Fuck. God damn it. You see how those options just jumped, guys? They just jumped. As soon as it cracked it. Should have got short up there at VWAP at 175.62. It gave us the entry. There's a nice double bottom possible. Look, and it's breaking it. Wow. It's at 160 from 130. That's still a nice little gain, right? That's still a nice gain, guys. Let's see if you turn 175 into resistance. See if we can turn it into resistance here.
consumer cellular, you get the exact same nationwide coverage as the leading carriers for up to half the cost.
I know what you're thinking. What if I don't have one of these amazing stores in my town yet? Can I get these phones sent to me?
Yes, you can.
That's brutal.
Switch over. Or Ally for $15 to make my own family plan.
All right, so watch here, right there. Watch if 175 you start turning it into resistance. A low volume push. All right, 175 on Tesla, rejection. You needed to get short that bounce back because you would have already had a piece off going into low a day from $1.30 into $1.60. You'd already have whatever that comes out to be, 20%, whatever, on that trade. All right, so Coinbase pulled back. All right, nice pullback on Coinbase. Nice reversal. Etching for high a day, closing at a higher high. Look at it going. Come on now. What are you going to do here? Let's go. All right, again, we have a gap fill on Coinbase up at 220. So, you know, watch for this thing. You know, in my opinion, it doesn't really have the volume right now. It doesn't have the volume just yet. That doesn't. Coinbase is a weird stock because I'm going to tell you all right now, that volume can come out of nowhere and dwarf whatever it had prior, okay? Like, you haven't hit 200,000 shares yet in a 3-minute candle. But outside of that, you know, you start breaking you start breaking the opening price. Look for places to buy the pullback, which would be like 208. Get a pullback into 208, hold it. See if you can't stretch yourself on up to like 215. That's what I would look for. But so far, this level is a resistance level. So far. Until you can break above it, you know. Because you got above it pre-market, and then you just turned it into resistance and fell. But here's a reversal, so. Again, gap fill up there at 220 on Coinbase. Baba's rallying pretty nicely here. And we said, see if you get pullbacks to 88.25, 88.28 right here. We're right there right now. You got to make your decision. Pretty much right now.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Okay, ready to watch this? 1 second, I gotta finish my laundry. Jess, it's nice. 1 second, I use Rinse. What's Rinse? The company that will.
Remember to locate these type of candles if you see them. Right here. You start seeing them close and they're the same size. Just do. Take it. Identify it as quickly as you can. You know, you want some volume with it. Make sure it's got volume. This looks like a low volume pullback. So far, that's a low volume pullback. I might try Baba. I might try it. I'll give it a short stop, and we're going to go for that like 90 level. Hold on. Where's the target at? Where's the target? You have some resistance up there. So what are we targeting? You have a gap fill up there at 9150, we'll call it. So far, we're on the right side of the market. Long Microsoft, Amazon, Tesla pullbacks to 172. I mean, just had to be quick on those, man. You had to be quick in identifying those levels. What am I looking for here? So 12, 3, 4. What is that? 90. Oh shit! It's only $88. Baba's only at 88 right now. Let's go, Baba. I'm gonna let it show me I'm looking at the 90 calls.
It's time for Jim and Stop Trading.
Steve was a disturbing piece today, though. One of my
All right, 90 calls there. Let's see if it holds here.
weakening category, declining market share. Well, I don't know about declining market share because they're really, really good. But I would tell you there's a slowdown in U.S. mass unit
Watch
sales.
level 2. Watch time in sales.
And it's including Amazon.
Know the order flow.
Costco, Ulta. I don't know what to say. This is a group that had been very, very strong for a very long time. And it's just cracks. There's cracks everywhere. I thought it was just...
I'll come back to it in a second. And there she goes. Again, we're targeting... I would target the 20-day moving average down at like 172. You had to be quick on these trades today. You had to be quick. But they were right, and you got paid. It's a mean bounce on the SPY. Fuck. Let's go over to
Expanding their delivery partnership. It's almost the inverse of, remember your Instagram trade? Yes. That was
all right, so what did we say this morning? So we said watch for us to start making what is that? Yeah, I still think you need a pullback to 530.40. I think the SPY is getting away from itself here. I do. Oh my god. Not the auto range. God damn it. Now I gotta reset everything. I'm sorry. Like, such a joke, man.
It's their time, whether it be country, whether it be denim, whether it be management giving you a good return. It's their time, and terrific, just terrific stuff.
Look forward to tonight, Jim.
Thank you very
Busy
much.
weekend ahead.
Good show.
Mad Money.
Yeah, I would. Well, you made this 530 support on the S&Ps. All right, look for pre-market highs. I think you got to. Your prior high is sitting right up here. 531.50. 531.52. If you want me to be exact.
AT&T, it's super fast.
Reliable. You locked us out? Solution-oriented. And most importantly,
Is the internet out? Don't worry, we have AT&T internet backup.
the next level network. I sold a pillow.
This is our future, Ma. GoDaddy Aero creates a logo, website, even social posts in minutes. How? AI.
Let's see here.
Like it. Who wants to come see the future? Get your business online in minutes with GoDaddy Aero.
Each year, 6 million pet
530.50.
dogs are diagnosed with cancer.
Dude, we're way extended, guys, above VWAP on the SPY. Kinda. Like, look at that. We are way extended.
The groundbreaking early detection cancer test for dogs. Volition RX recently announced Antech, the largest global pet care company in the world, is now selling their test. Global distributors now
You can always use the double and triple leverage to ETFs, guys, as well. If you're looking for some, a little bit of risk to throw on for a nice gain. Okay.
Indeed you do.
SPXL, things like that. Alright, so here goes the Qs. Just destroying it. Destroying it. Let's go look at the NASDAQ. What do we have? Is Microsoft still going? This is insane, guys. It's already at 427. You gotta be kidding me. It did the moves. Like, these are the trades. It's already done the moves. I don't know. Wow, I guess. Wow, just wow.
High-quality municipal bonds from across the country. They provide the potential for regular income, are federally taxed
208.
and have historically low risk.
See if we can hold 208 and break up through 210. And we'll hang on that long.
That's 1-800-376-4376.
Wednesday, May 22nd. Join CNBC's Financial Advisor Summit. Economic experts focusing on market growth and risk.
Alright, there goes Robinhood. That's a nice hold there. Nice pullback long. See if it can hold that level.
Is about allowing you to be in control of your own life. We're not about trading. We're about investing. We'll empower you to take care of your life.
Get invested. Join the club today. Go to cnbc.com/Jim's Club.
I can't believe that. What did Oracle do? Yeah, Robinhood's breaking down. RCO. Oracle broke out as well. Some... Wait. Okay, is Baba getting ready to try to do something here, or... Let's see. Unbelievable, man. Unbelievable. Not quick enough. It's a nice buying that just popped in there. The volume is not that great.
And then NVIDIA, big stock to watch this week. The company set to report earnings, getting a number of price target hikes ahead of those results. It's coming off of 4 straight weeks of gains, up more than 20% in the past 1 month alone, and up another 2.6% this morning. So, Carl, that's where we begin the week ahead. Not a lot of macro data. That was last week until we get really the PCE report, which is next Friday. But as far as this
Alright,
week
here we
goes,
go. Let's
it's gonna
see.
be more earnings, retail space, things like
What am I going to look for? 89.90.
of course, the NVIDIA earnings, the Microsoft Developers Conference tomorrow. I mean, we're watching for the Fed minutes on Wednesday. I think the key question on the minutes, because remember, this is the notes from the last meeting, so it's always a little bit stale, but the big headline of that last meeting was when Powell said it's unlikely the next move is going to be a rate hike.
Yeah, that's what I said this morning. It's exactly what I was talking about this morning. That it's very, like, it's not even that he just said that it's very unlikely we get a rate hike, but it's more so we don't see the trend that points to a rate hike. As in, the Fed doesn't see a reason for them to, you know, like, that inflation's coming back, the labor market is tightening up more, like, you know, we as in the Fed. Fucking Tesla, you're such an asshole, man. Gosh, man. Man, like, that's like a kick in the you-know-what. Like, when you're like, when all of your trade ideas are correct, and it just does it right off the bell. Like, that hurts, man. It fucking hurts. Okay, so 186. Wait, 185.50. Gave you another chance at 185.50, but maybe you still got room to 187 from here and take what you can get.
Services spending, which has been a weaker part of the economy. So looking forward to that target number later. As far as inflation, you know, as we try to monitor post CPI, which thankfully for the Fed and for the market came in a little bit, you know, in line to weaker than expected. Finally, for the month of April, FactSet did a good chart of how many inflation mentions.
All right, so there goes Amazon off pre-market highs. Let's see if we can continue with the volume there. Coinbase, not at pre-market highs. Let's see here. MSFT. Bro, this is insane. Unreal, guys.
So that's I guess a good data point as we wonder whether the inflationary trend. Look.
Oh shit! Sorry, man. I did not see you guys. I didn't see the chat.
I think that's a key question right now. It was what, above 4.7 on the 10-year yield at the end of April.
Just looking to fill the gap. 175 is better than sorry, TGT is hitting. Nice job, bro. You know, like Target I haven't traded in a while, but they have earnings coming up. So
Does that argue for the top in yields, and is that going to be helpful for stocks?
I like Target. I just think the reason why Walmart you know, Walmart and Walmart stock is kind of beating them is because Walmart has so many more things. I think they're two of the same, but they're not. I don't know. I don't know how to explain it. Like I need camping gear. Let's go to Walmart. Okay. I need camping gear. Let's go to Target. Chances are you're not finding the Targets around me. You're not going to find anything for camping or like, you know, anything of the sorts, right? They don't even have that many like laptops and stuff. I don't understand it. Target could be a lot better. Could be a lot better. I don't understand why they don't have nearly half the stuff that like Walmart does. At least the ones by me. There's a big Target, like a super Target, like a super center Target or whatever you want to call it. You know, up the street, but I haven't, you know, I still feel like, you know, I don't know. I don't know. But that's that.
Here's how we answer that question.
This is not merely our battle, it's also your battle. Because if they were to achieve, if they could knock out Israel, they got the Middle East. And if they got the Middle East, they're going to be going right after you. They say it.
TLC highs now 13.78.
This is the worst part. Not only conquer.
All right, Tesla's bouncing back. See if the market pulls back here. Watch the S&Ps, watch the Qs. See if we can break pre-market.
Nuclear warheads that could hold any city in the United States hostage. I don't think you want that. So confronting Iran, rolling back Iran's aggression, preventing it from getting nuclear weapons is not merely Israel's interest, it's America's interest.
All right, Amazon. See if it is not capable of holding pre-market highs here.
14.11 now.
And notice, I want you guys to take notice here. Look at Tesla, okay? Watch for this inverse. See if it starts to put in an inverse head and shoulder. Baba did bounce. I did not get that. Notice if the market, as in the SPY or the Qs, Amazon, Microsoft, okay? See if they start to not hold and they start to pull back to VWAP. Even though it's a nice trade there. Alright, and notice how Tesla, if it pulls back, notice if Tesla goes higher. Tesla's been doing this. Alright, you're finally up at VWAP, trying to hold VWAP now. Ironically, at the same time, the SPY and the Qs are trying to pull back because Microsoft, Amazon, and, you know, big cap tech. Like, look at that. Look at Amazon not holding pre-market highs, which is okay. It doesn't necessarily take the trade away from us. It's just I'm pointing out something here. And there's your pullback off 427. I know Apple's down. I have not looked at Meta. Google up. Google's a monster. That's all I gotta say. Google is a beast. It's doing really well. Alright, so let's look at XOM because crude's apparently going right now. It's turning back around. Means gold should start to turn itself around. But anyway, keep an eye on that. Keep an eye on that. Keep an eye on the divergence between the overall markets and Tesla. Alright, just because I know there's institutional managers that are noticing that and they're paying attention to it. That Tesla's been doing pretty much the opposite of what the overall broad market's doing. SPY's pulling back, Tesla's going to higher. Or like, going, making higher lows. It's just weird. Tesla pulls back, the market is going higher. So here's our consolidation. You're getting that 15-minute trade line. What time is it? Is it almost 10 o'clock? It is 10 o'clock. All right, look for that trade line there. Let me pull the S&Ps up here.
I do think that it's something, if you see it really build towards strategists feeling like that this is an unstoppable market.
Watch 176. Look at that trade line. And what's the SPY doing? Is the SPY pulling back? Not yet. I mean, that might be a lower high. Look at Tesla. That's a nice move. Damn. Look at that. Just be careful. Don't get sucked into it. It's got to break above 176. I think you got to break above it. Look at this inverse head and shoulder that could start to form, but the only problem is that the volume is not on your side. Like these pullbacks, you want them to be lower in volume. But a pattern's a pattern, you know? A pattern will be a pattern. You wanted to see 175.50, start to pull it back, right? And then you start to get above it, right? That's a beautiful inverse head and shoulder. Pull back, test it, bang. I would love to see that. I would love to see it. I haven't been able to trade a bull like a pattern of any kind in a while. The last time I seen this was on the SPY, which was like 2 summers ago. Like on an intraday chart. On an intraday chart. So Friday, pull back.
HIMS Hims and Hers getting a pump to the high, $20.11.
Absolutely. I think we've seen with earnings season that there are companies out there who are growing. Inflation is helping them out from a pricing perspective and revenue perspective. But, you know, I think overall it's
I still want to try to catch something here. So there's BABA. Doesn't really have the momentum like it had Friday or Thursday. It's kind of cooling down right now. Let's look at the let's go look at the heat map and see where our relative strength is. Like what has volume. Okay, so you're AMAT, those type of names. NVIDIA obviously had an upgrade. Micron, it's been very strong. Come on. Yeah, Micron's just going off.
In terms of earnings growth for individual stocks, or
what is that? 125, 127, 130.
We think that the overall GDP growth is
130.
Continue to think
nothing.
That's going to be what occurs throughout the rest of 2024. But you know, I think it's not going to come down so much where it's going to be problematic.
Meantime, I wonder.
Abby was coming in here meowing at me. God damn it. Where's Micron headed? It's just going to make a new high? Blue skies from here. Micron looks nice. It's just one little volume there that's a little shady. Like, look at the volume here on Micron. This thing could just continue to go higher and higher. Look at that. This was one of my favorite names, though, in the semi-space. I feel like a lot of people don't know about Micron and what it is that they offer. That's some nice volume. If you get a pullback down here, you could probably take it this long. It's up 4%. This thing could be up 6, 7, 8% today. You know, this could be something that's got some relative strength. I would have to look and see 130 to be a buyer. Look at the ATR on the daily chart so you'll know kind of what it does on average, and then take it from there. Right, if it does $3 and it's done at $2.50, you know you have 50 cents less. Is it worth it? Your risk to reward, is it worth it? Let me throw up a 3-minute. Let me go back to the chat. Let me take this back. That's a mean. That was a mean sell candle there on the 5-minute. Alright, guys. See if we start pulling back the test VWAP. Oh my gosh.
Plus, if 2023 was the year of AI hype, 2024 is the year of disillusion.
This is why I don't like laptops.
One top thought leader in the space. He's going to join us later to discuss.
Also, another company getting in on the
I mean, they're not bad, but
action, and that stock is rallying double digits right now. We'll name names when we come back. Squawk on the street, just getting started. Don't go anywhere.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing...
all right, so what I'm looking at on the S&Ps is how far above VWAP we are in that gap, which means we should start to pull back to it. P Nutty, what's up, gang? How you doing, bro? How was your weekend? I like that, P Nutty. I like that.
abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance.
I feel like I heard that in a song. I feel like I heard that in a rap song. Maybe not, though. My cat gonna come in here and yell at me. She's gonna have to wait a minute. She's all good. Alright, so the SPY banging out right there. Man, everything worked out today except you just had to be on it. That's wild. So is it giving us another opportunity to buy the dip? Are we getting a buyable dip here? Like Amazon? Like, she gonna wait because it's 10 o'clock. We got 1 hour of, like, moving around. We got another 45 minutes, and I'm not missing it. I'm getting on. All right. So, all right, markets. Let's see. The SPY, I did not pull up. Sorry about that. So look, SPY's still going. Watch the Qs. Pay attention to the Qs. The Dow is still ripping higher. IWM is pulling back to pre-market highs. And we said watch that 208 to go to 212. If the IWM and the overall markets continue higher, you don't really have anything stopping you. Other than that level right there, you're not even close to it. Wow. Alright. Let me see. See, it just looks like you don't really have much outside of like 209. You get through 209, you just kind of... I don't know. I don't know what chart it was. Maybe it was an hourly chart. Yeah, so here we are. We're up there. Yeah, so we're holding here. Yeah, you get through like, you get up to like 209, 210. You really don't have anything stopping you until you get up to that resistance up at 212. So, it's the IWM, which is weak right now though, so whatever. Let me just keep it moving. Keep it moving, bro. Keep it moving. Look, another 106 rejection. Look for this inverse head and shoulder on the SPY. It is very possible. Keep BABA, relative strength, on your watch list. Alright, for a nice setup. If you start to see the pullback happen with an increase in volume, like pull back, find support, and then start like really, you know, trucking along, you know. What else do we have? Coinbase we're watching because of crypto. Man, I wish I could play music.
We don't have any information about the regulatory deliberations. And despite the recent
JP Morgan.
we think it would be naive to predict the outcome with any
I know, baby, you're going to have to wait a minute. You're going to have to wait. I'm not doing this with you. If you walk out that door, it's getting locked. I'm going to shut it on you. Sorry, guys. She can wait an hour. I just gave her a good amount of food. And she has dry food and stuff like that, and it's fresh. All right, JP Morgan can watch 204. Amazon getting a nice little bounce there. Tesla pulling back still.
These shares are down a little bit today, but still near a record high and nearly 2 times book. So expectations coming into today. Yesterday.
Yeah, I would. That's a nice gain, bro. That's a nice gain. I missed it on Tesla. I would have had about the same on that Tesla. You just had to be quick. You just had to know what options you were going to take, where you were going to take it, which we did. You know, we sat right here. 175.50, 176 was our resistance level. Keep an eye on this. Anybody that's out there, watch this. The volume isn't there, but I'm telling you all right now, this is a beautiful inverse possible head and shoulder here on the intraday chart. Left shoulder, head, right shoulder. Like, these are what I call patterns outside of the volume's not matching up to it. That's the only bad part. You don't want to see an increase in volume on the sell side. That means it usually will fail. So keep this on your radar until like 11 o'clock. And what would also would help, in my opinion, is if we could really start to get this market to pull back. It just doesn't seem like it's going to happen. Now remember, this is now if you're looking at the volume, also the SPY is breaking out to new highs right now on a decrease in volume. So chances are, if we get a pullback, you may not hold it. Like, you may not hold that previous high. You could, but just chances are, right? It's a probability game. QQQ. I went and fed her. Sorry, guys. She just was doing way too much. Way too much. All right, Q's pulling back here. Watch the volume. Let's keep an eye on that volume. Nice grind higher. Watch this 453.60 level, 454. What's this previous high here? Oh, that's because that's a 1 minute. That's why. I'm just looking for.
Is there any indication that this could happen soon?
So look, I think Jamie has, is under.
Man, look how far from VWAP you are. You're not that far, but kind of are. Let's see. That's a nice setup, though. Remember, I always talk about these.
Feedback has been uniformly positive on both women. So I think investors will be very, very happy with those two women, albeit those are really tough shoes to fill, I would say.
Unbelievable.
Erica, as investors try to figure out if banks are a good bet right now, where are we in the cycle?
If banks are in a good bet, you're buying highs. What are you talking about? What the hell kind of question is that? CNBC cracks me up.
How do you answer that question? What do you tell investors to
What do you tell them to do with banks? If you don't own them now, don't own them. You missed the run. Wait for a pullback.
But what we've been telling investors is while, you know, the picture for banks looks, you know, pretty good under a
Yeah, that's what's up, man. You made some money today? That's awesome.
they're currently the sector that is the
Nice job, bro. Nice job.
portfolio managers. So a soft landing for portfolio
All right, Micron's pulling back. Keep an eye on semiconductors here. NVIDIA, kind of. SMCI. SMCI is pulling back. SMCI is at a new low a day. AMD, new low a day. ARM.
is a stalwart in portfolio, but I would say that Wells Fargo would fall under that bucket. Truist would fall under that bucket. And as we start thinking about election returns, and if we really have softening in regulation, and if the UMB Heartland deal is an indication of...
Damn, look at Roku.
I would say, you know, tell investors...
Oh, never mind. That's not that serious. Bro, look at Roku. That thing just... Alright, so Tesla never did the thing.
As we go to break, let's look at some gainers on the S&P. NCLH continues to lead the way. Not just the best S&P-er, but the fourth most active today.
Yeah, Celsius is doing really well today. It was a pre-market leader. It's making new highs. If you guys see LH. You guys can see as Celsius is making new highs. Okay. Let me do this. This.
Rose Sparks, engineered for the spontaneous. A dual action formula with the active ingredients of Viagra and Cialis. Faster acting and long lasting.
Look at Apple today, guys. Apple's a nice runner. It didn't look like it was going to do all this pre-market. Holy shit.
RSLS reshaped life sciences receiving FDA 510K clearance to reshape calibration tubes and gas suction catheter industrial sandy. RSLS.
Look at Moderna. What the fuck? You gotta be kidding me, bro. You gotta be kidding me, man. There's like so much good shit. I don't know what to do. If I should just FOMO and buy here and wait for a pullback. I feel like if I wait for a pullback, it's going to be a day where I don't have a trade on today. I don't have a trade on. You know, it just sucks because you had to be quick on these names. You had to be quick. It's whatever. Amazon, I might be able to take a short. I might try it. I might try and see if we can get back down to low a day. Or watch for a consolidation here. If we can consolidate here on Amazon, so those are the two things I'll watch for. Is if we can consolidate at this level. Or do I try to go short and get a long? Or do I, you know, get a short and break this level and try to get back down to low a day? But I don't know. It's all good. Maybe I'll have to look at some small caps. I don't know. I'll figure it out. Matt, what's up, man? Good morning, buddy. How you doing today? Hope everybody else out there is doing well. If you guys could, hit the like button, subscribe. If you guys want to donate, you guys can. Links in the description. I'm trying to get another a different user, or like a different method. So let's see here. Let's go to the overall markets. So Amazon, let me pull back up BABA. That's going to separate itself from the markets. It's just it's testing high a day on low volume. Tesla, nice little double bottom right there. That 174 is holding strong this morning. So Tesla's holding on. Amazon's holding on. JP Morgan is looking like it wants to actually go down to like 202. keep an eye on that. Financials aren't doing so hot today. Oh, come on. And let's look at LTR. Damn, Palantir got work too. See, I hate when this does this. Like Thinkorswim, you have to watch out. Like, if you hit the right side of your mouse and then the left one, you can be pressing buttons and your charts will get messed up, and you're like, what the hell's going on? Like, what did I do? And you won't even know what you did. You know, I don't know if there's a way where that you could go back and erase, like if I go to TradingView, right? And then let's just say I do like a box or something, right? Oh, I did a box. Or if I press the button, right? Zoom in or zoom out. All I got to do is just go to this arrow back, right? It'll take me whatever mistake I made or did. I can just keep hitting that arrow. And I wish Thinkorswim had something like that. All right, here goes Baba. Let's keep an eye on Baba. See if it can try to test high a day and break through it.
Okay, Pippa, thank you. Pippa Stevens, still ahead. If 2023 was the year of AI hype, 2024 is the year of...
So this is a day 2 VWAP. We're getting above it now.
As we head to break, check out this mystery chart. The stock rallying double digits right now. Has now more
I don't know though. I just feel like it doesn't really have that much energy. If I do.
Positive by a few points.
JD.
CNBC Crypto World is sponsored by Crypto.com, trusted by over 80 million users worldwide.
Google. So, alright, there's Google pulling back now. Amazon pulling back.
Just your achievements. Not your ambition. But it's not the critical counts. And you know that.
Let's see here.
From the beginning, you couldn't be stopped.
Let's see here. Let's see here.
Breaking resistance.
It does. Yeah, it does. It does. So what do we say here with Tesla? Remember, you guys know what I said. I said, let's look to see if we consolidate here and bring that trade line down. It's exactly what's happening. Look, now if we can meet this trade line at that level, see if we can turn it into a rejection or start pulling back and crank it down through that level. I'm just gonna say this. Whatever this guy's saying, that's cool and all. I don't care what the Fed is saying, because they're obviously saying one thing and doing another, and Powell's telling us another. You know what I'm saying? Like, there was no reason why anybody should be talking about rate hikes when Powell keeps saying there's nothing that's showing us that we need to raise rates. So I don't know where this is coming from. Even though he knows that his friends or his colleagues are talking about rate hikes. Like, what? What? Wait, what? That's why I don't even give a shit about the Fed minutes. Like, we know what's up. We heard Powell say we don't see anything that suggests to us we should be raising rates. Then, you know, so... All right, Amazon's breaking that level. Look for a test of low a day. Watch for that low a day test. The SPY. Look at this wedge. Oh, look at the SPY. Look at the SPY. Oh, that's a nice wedge. Look at that. That's a beaut. Holy. If we get a test up there a high day, I'm going to grab some puts. I'm grabbing some poots. Q. The SPY, that's a beaut. Look at that ascending wedge. Let it consolidate and then see if we can't get something that looks like this. Just get like it might start it now. They might try to get ahead of the move and then it bounces. And then whoa. Let's see if we can get this thing to break down, bounce, get that boop. Get that short on the bounce back. I would much rather get short up there with a tight stop.
Microsoft expected to unveil its vision for AI PCs at this year's Build conference. Let's get to Steve Kovac soon.
Microsoft does have an event coming up, which we'll be playing. Here it goes. It's trying to break it now.
This is about AI PCs.
Look, it's trying to break it now.
So let me explain what that actually means.
All right, MSFT. No, is that what it was? Microsoft, or was it the SPY? SPY.
AI tasks without necessarily an internet connection or just a lot faster than normal. And we're expecting Qualcomm to
So that event should be today. All right. Qualcomm is a part of that with the Microsoft news. See, it's kind of rallying today.
Steve, what do you make of AI PCs? Like,
I'm going to go back to the SPY.
drive a whole new cycle of all of us needing to buy a PC? What is the catalyst?
Here, listen to this. I'm going to watch the SPY real quick, okay?
talking a lot about that. There's a ton of talk about AI hardware recently, but it's still unclear what those kind of hardware and gadgets can do. On the software side, they really need to explain that, Microsoft and Apple, frankly, in order to get themselves out of this PC slump after COVID that we've been seeing so far. We're expecting even more, though, Sarah, on the software side. Tomorrow, when Build officially kicks off, there's going to be a big keynote with CEO Satya Nadella and his top executives as well.
But I really just
Steve, what do you make of AI PCs? Like, is this gonna drive a whole new cycle of all of us needing to buy a PC? What is the catalyst for them and the potential of the size of the market here?
Yeah, that's the hope, right, Sarah? That this kind of idea of even if we're just marketing them as AI PCs,
sure
people are going to run out there and want to upgrade because of that. But like I said, they really have to prove a use case. Why is an AI computer, what can this computer do that I couldn't do with a computer I might have bought last year? That's kind of the sales pitch they need to kind of clarify and explain, because right now it's just very limited. You know, for example, a lot of the AI stuff that we've been using, ChatGPT, Anthropic, Perplexity, that all happens on the internet. You don't need special hardware to do that. So the question becomes, what are they going to have in the operating system side?
Microsoft sucks with AI because you got to worry about them saying you can and can't do things, unlike ChatGPT and other stuff.
Does say that if 23
you know, I don't know much about it, which I'm going to
24 may
do
be the
more
year
of.
Disillusionment.
But I don't like the fact that I want to make a picture with Powell or do something. Microsoft's like, nah, and their faces like, what? Like, when did we become so
works for us? Professor, thanks
such
for the time today. Good to
bitches
see
and
you.
pussies? Like, fuck these people.
You've
It's
consistently
bullshit.
offered
There's no
gut checks
reason because
about
you type blood
hallucinations,
that there
lack of
can't be a little blood in the
progress,
picture.
the
What
way
if
in
it's
which
Halloween?
this is not the pipe dream that
Like,
some
come on.
envision.
Nope, it's got
Have
blood
any
in
of
it.
the
You can't do
recent,
this. You can't do
product
that.
introductions changed
Like,
your mind?
why make it?
No, I mean,
if nobody's,
we're
if
still
you're
basically
not
working
gonna
with the
let
same
anybody do
technology.
anything,
It's still
why
designed
make
in the
it?
same way.
Like,
it takes a lot of
I don't mean to
statistics
curse.
from a lot
I'm
of
just
words and
saying. You
tries
know what
to
I'm saying?
predict what happens next.
It's crazy.
And as soon as these things come out, people start playing with them on
Well,
Twitter.
this
and
is
so forth, and
offensive
you see a lot of
material.
examples where
It's
they're
got
still making the same
BLOOD.
boneheaded mistakes
I'm
as they were
sensing you're
before.
saying the word blood.
Nobody has
Yeah,
actually
motherfucker,
solved
because it's
hallucinations,
October
and I don't
30th.
think we can with large language models. I think we need genuine innovation here. So what happens is we have a trap right now where people propose things like the humane AI pin.
You know, Microsoft's
imagining that
not
AI
going
is
to
solved, and then they put it out
attract
in the world and
anybody
realize, no, it's not
until
solved.
they
And I'm afraid
get with
that
the
hasn't
program.
happened yet. I do think eventually we will solve AI. We will have AI that can fulfill all the promises that have been made lately, but I think we're at least a decade away.
Oh, you said Powell?
Are you going
yeah,
so
this
far
is
as to argue
offensive.
that the wave of
Can't do it.
investment
Sorry,
that very
bud.
smart companies are making right now
So
is
funny.
misplaced?
I think people are putting in too much money
All right, here
too
we
fast.
go.
I do think it's kind of premature. Sam Altman talked about raising $7 trillion. That's like Series H money or something like that when you've really established your business model and so forth, and that just hasn't happened here. I've publicly predicted that OpenAI might turn out to be the WeWork of AI. People might scratch their heads and say, well, this is a solution in search of a problem. We haven't really found the problem. The whole industry spent something like $50 billion last year, made $3 billion in revenue. That is not
530s are
sustainable
even
in the
better.
long term. So either they have to make it better, which is
I gotta try at
difficult,
530.
but they
There's
have
a
to
lot of
find some
volume and
killer
open
use
interest
case,
there.
which they haven't really because the performance is unreliable. So yeah, my guess is that a lot of investors are going to be left holding back.
A lot of companies that we interview, a lot of investors that we talk to would disagree with you, Gary. They're so excited about the promise of this technology,
Well, I've seen
the
this
efficiency.
before. They were all excited about driverless cars, and I said in 2016, this is
I'm
really
not in it
going to
yet.
work with
Hold
current
on.
technology.
I'm just trying to let it
And
pump.
it's
What is
still-
the risk that you're so worried about?
the risk you said?
The risk, yeah.
Well, I mean, there's lots of kinds of risk. And on the financial side, there's a risk that the stuff's just not really going to
All right, let's go for
sustain
it.
itself because it doesn't really work very well.
All right,
There are
I just took a
risks on
small
the,
position right there.
global
I don't like to
stage,
fight
so
trends.
these things
Okay,
can
yes,
be
I
used
know,
for
man.
misinformation
I know.
because people who generate misinformation
I
don't
know,
care
it's a
about
risky
accuracy
play.
and truth, which are the Achilles heels.
All right, keep a
of
tight
these
stop,
systems. And
everybody.
so we're starting to see it used for elections.
All right,
and
that's a
scams
spy
and so
put
forth.
for the
In
530s.
the longer term, because we
For
don't
today.
really control this AI very well. It's black box AI where you put in inputs, you get outputs, you don't really understand what's going
Doesn't
on. You
have
can't
to
make
do it right
guarantees
like
around
the
it.
best.
So
Like
that
you want to be up
raises
there.
some
And
safety
I'm just looking
risks,
for
I
a
think, for the
pullback to
entire planet in
VWAP.
the long term.
I mean, people also compare it, though, to the steam engine and to electricity and to the internet, other
Yeah,
major
and they don't want to
technological
mention that
advances.
they don't want to mention the jetpack, right? I mean,
Relatively
we've had
strong
lots of
today.
ideas, or
Look, look, look,
dirigibles.
look.
I
Keep a
actually
tight
think
stop. Keep a
dirigibles
tight
is
stop.
the best
Let it go.
analogy, right? Until
Tight
the
stop,
Hindenburg
guys.
was like, well, this thing scales really fast. We'll
That's
make
what
it
I mean.
bigger.
You got to
It'll
keep
be
a tight
awesome.
stop
And
there.
then it turned out
I was just
dirigibles
looking
were
at that
not the
3
right
minute.
way. And instead, we made airplanes. I think that
I'm still
we're
in
in
it.
an early version
Got a
of
Pop-Tart.
AI.
I was
We
trying to
a
get my
better
3 minute
version.
volume
But
up.
just assuming that the thing we have right now in hand is the right one,
I'm going to be
I think is a
getting out here
mistake.
very
And we're
soon.
seeing that over and over again.
Just
You know,
put it
the
back
AI
on.
pin
See, this
was
is
a
where you
bomb.
want to be there.
The company
But
called
again, we're
Ghost to
relatively
try to
strong
use large
today. We're
language
holding
models
that
to
90
make
MA.
driverless cars
They're
fail.
still closing and holding it.
Stability is having trouble, etc.
Keep tight
We're already
stops.
seeing some signs that things
Right,
may not
because
be
this
working
could.
out. And also, a lot of people are leaving OpenAI.
You know, it
Some
could
of
just
it's
break
around
out
safety,
higher,
but
but
it's quite a lot
ascending
of people
wedges
leaving. If they're
usually
really close to AGI.
are
I'm not sure those people will be doing it.
reversal
I wonder, do you
patterns.
think that's why when we press corporates for examples of use cases, at least at the moment, they keep saying it's around the bend? Do you think there'll be a moment of reckoning where they say, you know what, this is not panning
all
out as we
good.
thought?
Just take
I
it
mean,
out.
they're
Look, the
already,
volume's increasing,
privately
guys, on the 3
scaling back,
minutes. So
expectations according to some reporting that I've seen. They're already saying, yeah, I know you think this stuff's amazing, but
Okay, so we're
let's
coming to
be
highs.
realistic
Hold on
here.
here. Hold on,
They're starting to tell the clients there. The
hold on.
fact is,
Hold
the
on, hold on,
stuff
hold on,
make-
hold on, hold on,
the-
hold on,
the
hold on.
systems, large language models,
Hold on, hold on.
make stuff up, and they make absolutely head-scratching errors. And so, if you have a mission-critical application,
so
you can't afford to do that.
3150.
Like it might work for customer service
I'm
for
down
you
a few
most of the
pennies.
time,
It's all
and then it
good.
might say something
I'll give it up
ridiculous
here.
that gets you in trouble. So
We'll
it's
see.
hard to trust these machines. They're fine for things like brainstorming.
Yeah,
where
the
there's a
volume's to
human
the
in loop,
upside and
but I'm not sure
everything.
that that's
I mean,
a trillion-dollar application. People will use it. They'll make some money off
sometimes
of it.
it
It's
is
not
what
that
it
there's
is.
zero
Again, you got to
money
keep
to
a
be
tight
made.
stop.
But when you look at the
Got to keep a
capital
tight stop.
investments of
That's
$50
where we
billion
wanted to be
this year,
short,
maybe
right
another
up
50
there.
last year, another 50
You
this
know,
year.
you
and
don't
so
really
forth.
want to be
Like,
short on a
you
day
have to
like
have something
today
huge
either,
to
though.
justify
Man,
that.
shut this guy up, bro.
Well,
He's not doing
reliable.
anything.
Large language models were subject to jailbreaks, and they all failed.
I'm personally still in it, but I just want to see if we can get a little pullback and maybe a test of VWAP or something. The deltas on these are pretty high, so if I can get 50 cents, I'm looking at 15. I'm looking at maybe not necessarily 50%, but
Every CEO said, go put this in our product line, and I think the results speak for themselves. Some people are using it. A lot of people are like, yeah, it's not really ready for prime time.
We're going to see over time the degree to which you're right, Gary, and then of course we'll watch to see how prices adjust if that's
Sorry.
the case. Appreciate the gut check. We're going to talk to Gary Marcus.
sorry, I wasn't looking at the chat. I'm just 15-minute chart. 29.30. I'm still in them. I'm still in it. It's a small position. I'm just looking to try and, top itself out. See if we can't get a pullback. No, what is going on? This chart is ugly. Again, today we're bullish. Again, I don't suggest this stuff. Tight stops. Again, tight stops. All right, there's no reason to lose money or that much money. All right. If it didn't work, it didn't work. The entry was wrong. The entry was wrong. Just let it go and move on.
You need new replacement windows.
All right, I see an ascending wedge. 7 times out of 10, that ascending wedge is going to break down. Just because it doesn't do it this time doesn't mean the 2-3 other times that I do this with a tight stop. You know what I'm saying? 0 or 1 day. Today, they expired today. 5 30s. 5 30s for 30 cents. 5 30s, 30 cents. I'm just looking for a pullback. All right, if I can get 30, if I can get 10 cents on 30 cents, well, let me know what that is. If I can get 5 cents, if I can get a nickel on 30 cents, you tell me. What is that in a percentage? Here we go. All right. Let this bounce. Be low volume, but it's not going to be. We got to break the 9 EMA. Got to break it. And we may not. I could look at the Qs. Come on. See the volume is not stepping up down there? I'm going to take this off, guys. I'm going to take this off here. Yeah, I'm out, guys. I just took that off. So, I took that off. We're not getting the extension. So, I paid commissions. I might have made a penny. But I still paid commissions. So, it's early. This is good. Like, you want to see this low volume bounce. See if this volume right here starts to decrease. Right? And again, I'm just looking for a pullback to like 530, 80. Like a 50 cent, 75 cent move is what I was looking for. I might have been a little early, and that's okay. Because, you know, they'll do the old shake and bake. The old shake and bake, right? Like, oh, we're going to break down psych. Yeah, that's where you needed to enter. And now it starts to roll itself over. But we'll let it do what it needs to do. And look, we can see here, it's just taking a little bit more time. I don't really like it anymore. I still like a pullback. I do. I still like a pullback up there. So yeah, that's a 0 day. If I say a daily or whatever, it's always expires today. Damn, look how far above we are from Fridays. What is that? 531.20. And look, we're coming up there to Thursday's high. Like, even if we could have got a pullback to 530.80, that would have been a nice move. But we'll watch it. Maybe we take another shot up here at like 531 to see if it like just can't get the energy to break out. It should hold here, and then you should start to get like a little pop. There. You can see it's turning this 531.25 into support. Trying to right now. It's trying to right now. Look at it pull in there. Bounce. Alright, Tesla back up to 176, just consolidating. Doing exactly what we said. Doing exactly what we said. So there's a 15-minute trade line. Let's see if Tesla actually starts to pull back now and tries to break VWAP and really tries to get going. I don't know if it will, though, because now it's like it's up there closing and hanging out up at like that high of the consolidation. I don't know how to explain it, but you guys can see here. See how it's up here? We opened, closed here. You closed there, and you see how we're up above these two closing candles? You know, just, I don't know. You're not above 175.55, but, you know, let's see here. You're above VWAP. So, I don't know. I can't explain it. That's the only way I can explain it. I'm sorry. So she's not really moving, which is okay.
We've actually talked to about 15 out of 33 different resellers we talked to said they had positive reaction to those new promotions that Palo
It's a
Alto
nice
put
little
in
double
place.
bottom.
It's having a positive impact, not a negative impact.
So we noticed here,
We think they can put up a nice quarter here, roll that through next quarter.
these two levels.
And growth back to that, high teens, 20% growth rate next year.
I would like to try and get her down to 172, guys. I would love to try and get Tesla down to 172. Just don't know if it's going to happen.
It's certainly not a secular shift. I mean,
I feel like we need a bounce back to like 178, 177, 75. Is that what the, or 177.50? Let's go up there and see if we can't test high a day or the opening price and see if we can't take something up there on Tesla. That might be it for the every single trade worked out today. You just had to be on it and ready. You could have just picked one and said, all right, I'm trading Coinbase, or I'm trading Microsoft, or I'm trading Amazon, or I'm trading Tesla. They worked. You just had to be ready when the bell opened, because they all moved really quickly right off the bell, right out the gate. SPY. All right, Microsoft pulling back. So once you have Apple going, excuse me. I want to keep my eye on Oracle. Oracle's still going. Baba, did I miss it? No, Baba's pulling back. I don't expect Baba to do much today. Meta has a gap fill way above us. If it does get any, if you guys see Meta get any type of strength, and you start seeing 472 hold support, you got a nice gap fill up there at 180. You have, if you hold 172, I'll look at it. I like to look at it this way. You see this like sell off here? This is like a wall, right? This is like a wall right here. Other than the gap fill at 173.25, you get through that and you hold this level here at 172, and you can get going, right? Let's just say this is your gap fill, right there, right? And you just were able to break through this. We kind of hold this. Maybe you bump into that once and kind of pull it back, and then bang. Once you get above that, you make this support, and you hold that gap fill as support. You have nothing stopping you, right? You have a minor level there at 176, but that's a $3 move. That's just going to be a straight shot, kind of like what Amazon did today, this morning. And you get through that 173, guess what? You're in the gap, and now you still have nothing except the gap at 181, right? So it'd be a take profit in front of 477, 476, or no, we'll say 476, taking profits going into that level, and then you just let it go. Let it go. That's what I'm going to do. But again, you need some strength there. You need some news or something. Come on.
You came for a day of total relaxation.
So that's an idea there. Just have minor resistance up there at 476. It's just hanging out sideways. It's not doing anything right now. Coinbase, keep an eye on crypto. Coinbase just puttering out, not really doing anything. You might find some support. No, never mind. What is that, 207? Yeah, look at it. See how it's getting a little volatile? See that little pop in volume? You saw that little pop in volume right there? I don't know. I don't trust it. SMCI. Let's go look at semiconductors. SMCI, big down day. NVIDIA. NVDA. I know you guys know what the ticker is. Damn, NVIDIA is making a new high. AMD. Bouncing. That's cool. I can dig it. TSM. Bouncing, just chilling. Micron. ASML. Oh, so I read something this week which really made sense. And it was an explanation on why AMD was at the lows. And that is, it brought up, so this was somebody, I don't know if it was Tiger Global, I don't know what fund it was. But they said, if we own NVIDIA and we own ASML, why do we need to own AMD? It feels like you're adding more risk than necessary when you own the two biggest names. Why do you need to go own AMD? And I'm like, I could see why. And I think that is why AMD has been underperforming, because the big boys are just hanging out in the ASML, NVIDIA, maybe time with TSM, maybe Micron, whatever. But even then, it's just ASML and NVIDIA. If you own those two, why do you need to go looking for more? Those are the two names. ASML, they make a device that allows the semiconductors to be created, for those that don't know. All right. So there's that. Man, I was really hoping for an inverse head and shoulders. Like, I have not had a bull pattern in so long. SPY is still kind of rejecting up there. Let's see if it gets another bounce here and puts in a lower high. I might try to take that short again at 531.40. It is just inching. You're right. I know. It's there. It's there. Amazon consolidating at 175 or 185. That was our level we identified. And I almost got long on that pullback off 185. It was just so quick. It hit it and it pulled back one time on this first candle here on the day. Pulled back and then bang. So you had to be quick. I don't know what Fed Jefferson said. Something about both sides of the mandate. I don't know. Pretty much he swings both ways. He's a you know what. I'm not going to say it out loud. Because it's cool if you do. Listen, live your best life, bro. No, I'm just playing. He did say something about, I don't know, playing both sides of the field, whatever that means. I don't know. What were we talking about though? What were we looking at? SPY. Yeah, SPY. So here's a nice setup that I remember before I went to Florida, and I was telling everybody in chat, when you have the indexes or like the SPY, the Qs, when you have a down day, which this was not necessarily a down day, because we opened up here. Now we closed green on the day. Yeah, we closed green on the day. But if you have a down day, you have a light pullback, and you come in the morning with a gap up. Look for the pullback into like that 2-day VWAP or like the close or low, and look to get long. Especially in a bull market. Look, there it goes. Here goes the SPY, but it's on low volume. Be careful. That's why I use the 1 minute. All right, because I want to see the volume that's underneath of this thing. Now it can pick up, but there it is. There's your ascending wedge. All right, it's a reversal pattern. And look, those things are still at 30 cents. So for anybody that sat through those, oh my God, come on. He's saying that he doesn't know, nobody knows what the balance sheet needs to be, blah, 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 blah. But Powell said, so here's the thing. He's saying two different things than what Powell's saying. This is exactly what I'm talking about. Because Powell said we're going to start to stop the balance sheet reduction. Right? And he's talking about, yeah, we don't know how far we need to go or not go. Bro, the man just said he's about to stop. They're starting to stop. So I don't even want to hear it. Like, they're trying to talk the markets down. But when Powell gets on stage, he says something completely dovish and backwards. So I don't dual mandate my ass. Whatever. Like, what is it? Just tell us what it is. If you're not, then just let asset prices go higher. Then say, okay, well, you guys raised the prices of everything, so, like, talk about cuts or raising rates and raising the balance sheet, like the amount of time that you're going to do balance sheet runoff. Like, just say what you're going to do, because Powell is the one that makes the decision at the end of the day. They could all vote for one thing, and Powell could do something completely different. He wouldn't do that, but it's just I don't believe him for a minute. I really don't. And look at that. You even got the movement, and you're still down 27, 28 cents on just that bounce back. So this is why we keep tight stops, and we do not stay long. That's the bounce back rejection we wanted, but we need volume. That's our first decrease in volume right there to the upside of that wedge. That's the first time we got that right there, which was a low volume bounce back, and look for the rejection. You have the 9 EMA right there you're looking at as a rejection point. Let's go. I think the volume for the most part is low today.
Cautiously optimistic we can continue our battle with inflation and keep the economy strong. Job market resilience gives Fed space to maintain focus on lowering inflation.
Whatever the hell that means. When they say like rates have helped them, are going to help them, like holding rates higher for longer will help them be able to cut more. I understand that one, but we're starting to see the labor market soften a little bit. I'm going to see if I can find him wherever he's speaking at. If you guys want to hear it live. Yeah, see, the SPY just doesn't want to pull back to VWAP. It is what it is. So, we took a trade. It didn't work. Unscathed, right? Break even. Made a penny, but paid commissions. It's all good. No big deal. Keep it moving. Let's watch right here. The volume's just poop. Watch it pop higher. That's going to be a failed breakdown if it goes higher. You know how we can spot this sooner? Look at the Qs. Yep, look at the Qs. The Qs are breaking down. SPY should follow. SPY should start to follow here, though. Come on. The Dow just hanging out up at highs. Wait. Ransomware breach who? What, when, and where? What?
That is Golf Echo.
GE? So GE just had a cyber attack or a breach or something? Look at Palo Alto. No, not PanQ. Pan... Pan W, CRWD, CrowdStrike. See if you're getting, look for pumps out of like CrowdStrike. No, they're not. So it means nothing. It means nothing. All right, Tesla's rejecting. So Tesla was never able to get back above and close above 175.50, 176. See if it just starts heading back down to 172 now.
The VIX is definitely one worth watching. With your help, sticking with the markets, our next guest is a little less bullish on the economy, sticking a soft landing.
Yeah, that 531.21 on the SPY. This right here, this level, we're right there.
A challenging backdrop. Here to discuss Northwestern Mutual Wealth Management CIO Brent Schutte.
I would watch that level right there. See how it's turning into support. And what I could do is actually this, because this could be your test. Like right there. It could be rejecting the uptrend. And then after that, that's it. I think this wedge is not... Didn't play itself out, and it's all good. Let's see here. Tesla, NVIDIA, Amazon. I have Amazon right there. Microsoft, CrowdStrike, MSFT, pulling back, mRNA. Look at Moderna, guys. It's still going with an increase in volume. Unbelievable. Shit.
It sounds like you're saying we're going to get our cuts, but there's a good chance they're going to be late.
100%. I mean, the Fed has never tried to say always want a soft landing. At least looking back historically, there have been very few, if any. Overall,
GDs.
Business cycle, and to me, in order to get inflation sustainably back to 2%.
All right, GDX is making a new high today. New high a day on GDX. All right, watch AG, watch silver, gold.
So at Northwestern Mutual, what are your advisors telling clients to do? Pare back on equity exposure at this point and do what instead?
Sure. I mean, so we've added to our fixed income over the past couple of years from being a very underweight. We've added to duration recently. I do think fixed income offers investors
GDs and BDs.
will be able to cut rates, an opportunity for real returns over the next 12 months or so. And so to me, that's area number one.
Unreal. This is what we love to look for right there.
Not just in the near term. And I think
Look at that volume too. Oh my God, bro.
And those parts of the market trade already with some recession discount. Valuation is an imperfect.
I just want to look at these 140 calls.
And those parts of the market traded similar discounts to large cap as they did in the late 1990s, which this market reminds me of. And that led to outperformance in the coming years, which I think will occur this time also.
You think it's going to be a traditional recession playbook where you want to hide out in consumer staples or
Look at that, guys.
over tech stuff?
That's why it's important to find it.
AI momentum that we have in this market.
Could have
Given that some of these
bought the pullback $1, $1.20, $1.30, and you could have been up 100% by now.
I think they're already priced for that, though. If you think about
It's 11 o'clock.
the earnings growth has been in those names, I think the question is how much
That's why it's important to find those.
impervious to recession, and is there competition in the future? Look, every economic cycle
I want to figure out how I can make a scanner or use ChatGPT
I can take you back 40, 50 years.
to scam
To me, this is where my outlook's a bit odd.
and just give me, like, I think some people might use it for the wrong reasons, but just give me all the names that have 2 to 3 times the volume than or you know, buy or sell volume than normal, like 2-3 times the daily average. If I could get that shit sent over, like, we could find these trades. We just have a list of them. So if anybody knows how to use ChatGPT or thinks that they're good enough to do that, let's work together and do it, man. We could just make a fortune off of it. Like, honestly, you know, just finding those trades, because they happen every day. It's just you have to locate them.
But I do think, and I know investors hate to hear this because they haven't worked for the past few years.
GTBP hitting intraday high now,
Opportunities pushing forward.
$9.09.
I mean,
About 190% of Tango Bravo Papa.
I would add in there no earnings, because you're going to have the stocks that have earnings have a lot of volume,
I do. And if you look back historically,
like Lee Auto, which we said we were looking for 73, but damn, this thing is done. So this thing was only pricing in $3 or $2. Yeah, it was $2. And look, like, it went well past $23. I told you guys I was looking for 23, and I thought that was a ways away.
Their cash hoards, their invulnerability.
BLKB, Blackboard, FDA press release, finalizes
So-
orders, FTC.
So with them having earnings, that could throw that type of trade off.
Allegation the firm's security failures led to data breach at BLKB.
I remind you that the S&P 500 tech sector hit an all-time high, I believe, in 1999, and then it took 17 years for it to make a new high. And so you have to tell me what is priced in and what is not just what you think it is. And I guarantee you,
Right here, guys, with BLKB.
and sometimes it's hard to know the answer, but I think regulation, I think competition, I think the evolving nature of what actually happens pushing forward.
Let's go look at GME. Told you guys I was looking for a bounce on GME, that I figured once you got down to like 19, you could start to see a bounce. That $20, $19 level. And we're getting it today. This should be a nice relief bounce. I was just eating a Pop-Tart. I didn't want to chew in front of the mic. Come on, Abby. Just come over here and lay down with me. I know you want to play. Just come over here and hang out, Bobo. Come on. I'm not sure if you guys can hear her or not.
I don't know if that was those people. So I guess maybe they were wrong there.
All right.
Look, I
There goes the SPY. Trying to, but they're not really getting no. You're not getting any type of continuation because it's a bull trend, right? We're trending to the upside. Come on, baby. Abby, baby, come on.
And so to me, valuation still matters. I know that narrative changes quite often. I think it will matter.
Okay.
It doesn't always matter in the near term. It's not a perfect timing tool. And certainly you have seen earnings growth in those big names. I guess the question is always what happens.
You guys notice how she loves to mess with me when the markets just open up? She loves to just mess with me and not let me be able to do anything. Go ahead. Come on, jump up here, please. Girlfriend, I love you to death, girl. Come on. Come on. All right, you lost it. Come on. Come here. Come here. Yeah, come on up. There you go. There you go, sweetheart. I know, you just want up here. Just gotta move the screens. I know you want to lay up here. Alright. So, SPY, nice rejection here. So look, that resistance that was trying to hold as support is now, or was trying to turn into resistance. It broke back above it. Damn it. GME pulling back. It sucks that like on the day, like GME will be green pre-market or come in with a gap up, and then during the day it sells off. Look at GDX, guys. Keep an eye on GDX. We might be able to have a long there. Watch GDX. If we get a pullback, I'm going to look for a long to see if we can't try and do something with GDX. Matter of fact, bro. Dude, you guys see how my charts can get messed up? Let's see. I feel like I'm gonna have indigestion. And I don't want it. Let me look at the daily. Alright, so we are testing that gap right there. Let me go back to the other charts, 'cause I know you guys can't see it, because I can't see it. 37.20. Just give me 1 second. I'm gonna leave this up for 1 minute. Tesla. So Amazon's hanging out. We could take a long here on Amazon. We'll watch it, and we could try for a long on Amazon there and like make this somewhat of a swing trade. The problem is that it literally, the whole trade idea was to take that trade to 187, and it pretty much went there. But it doesn't mean it can't go there again. So keep that Amazon trade on watch. Yeah, I feel bad for anybody that has trouble getting out of their GameStop options because they keep like they run it up pre-market and then they sell it off. Like, just sucks for anybody that's in there. So I want to go look at Amazon real quick. Let's go pull up a chart. So we have Amazon that's doing really well right now, and Google. All right, let's not forget Google. Alright, so it's not holding just yet. That just stinks, man, because it ran up and...
Natural gas prices right now around their highest level since January. Our next guest sees
Same for Microsoft. Like, that's a nice uptrend. That's a nice uptrend that I wouldn't mind being a part of. Right? Like a nice little pullback. See if we can't take it around 177.52 at the pre-market highs. I'll look for it. Let's see here.
And so all of these things I think have helped let the market know that there is some sanity in the supply and demand side of things. But yeah, you know, we think that the market is still oversupplied, but
77.33. This is a nice uptrend. I just hate missing those. I'll never forget Goldman Sachs here. That Goldman Sachs trade I met. I just, instead of day trading it, I should have like bought a lot of time with it. I could have been done for the year. Like, that trade would have been massive. We were in 410 calls and the stock, which was like 3 weeks ago, 3 weeks ago, maybe 4 weeks ago. The stock is pushing up to 500 right now. And we were in 410 calls. It's wild. And I knew it was about to go on a run. I don't know. I could have done many things with that I didn't. Right? Even with JP Morgan, we could have just said, all right, buy the dip, sell it, buy the dip, sell it. I mean, for a year, buy the dip, sell it, buy the dip, sell it. Just ride that strength, but go long calls. Like, you know. My cat's like, what the fuck was that? Who's here? What is that? It's 11 o'clock right now. Oh my god. No, I don't. No, I do not want to remove it. Okay, so here we go. Can we get a JP Morgan short? Let's go look at some of the news for JP Morgan. I feel like there's a lot of talks behind this name today. And so, JP Morgan co-CEO Troy Rober said he will remain a significant player in the private credit market. Monday's rapid fire, Johnson Controls, Micron, Nucor, Norwegian Cruise Line. We'll have to go over this. I've been hearing Jamie Dimon and JP Morgan being talked about this morning. I just don't know exactly what it is. There we go. Now we can get it up here. Just not sure what's going on. Like, if he's given a date when he's stepping down, or if he's stepping down, or what's going on. It's something like that. Well, strategy. If you guys notice, bro, come on. UUP. If you see a lot of volume, or like you think you could trade the options and get limit orders filled, I think the dollar is a nice play right now. I do. So if you look here on like the Dixie, I don't know why. Every time, I guess I gotta click the box now every time, but it's highlighted blue, and then I go to type it, and it just completely messes itself up and types on the behind or in front of the previous ticker that I had, and it gets old quick. It gets really old really quick. All right, Dixie daily chart. Okay, so look, we broke below this level. This is the dollar, right? 105, 104.99, okay? We're getting that bounce into that resistance level I was telling you guys about last week. was that it? Can we get that downside move back down to like 103? I think we can. I think we can, because I think now we're in a new range. But on a side note, if I look at the indicators and everything else, it's saying, hey, you still got a little bit of room to get back up to 104.40. So maybe there could be a hedge there, right? Maybe we could grab triple leverage calls for like a short dated time, right? Like, I don't know what we would play the dollar with. So yesterday, I don't think, no, it was TNX. Does anybody else that has Thinkorswim have trouble bringing up TNX, the 10-year treasury? Or is it, no, TXN is Texas Instruments. Like, I don't know what's going on here. TNX was the 10-year, was a way to play the 10-year. Right, TNX. It's not coming up. TNX. So you could do it both ways. You could play the 10-year one way and play the dollar the same way, like as a hedge. Because yields, what I'm saying is yields should also bounce and reject this level. Dollars should bounce and reject that level. But
The last three stories we mentioned, whether that's the cover story.
let's go look and see how liquid the options are. And we'll look to see if we have a double, triple leveraged. See, like, look at this. The 3 and not available. Calls. The volume is 2 and 26 and not available. Like, really? So it's not liquid. It's a shame because this could be a fun vehicle to use to trade with. But you got to worry about getting out and getting in and getting out. It sucks. Freaking sucks. So, we'll just look at Tesla. Fuck it. We'll just stay trading Tesla. Some of the other names, Reddit. Who else is surprised to see Reddit up there? I am. I was surprised to see it back at all-time highs. I was like, what the hell? Then I heard the news that they were going to do something with AI or something. But anyway, sorry, I know I was blabbering on there. Let's go through some of the news and see what we can't get going here. It's 11 o'clock. You know, that might be it for the morning. You had to be on those trades early and ready. I don't want to call it quits just yet.
It's super convenient thanks to the ingredients in Super Beets. And now new Super Beets Advanced Heart Chews with a clinically researched dose of CoQ10 plus the grapeseed extract you love for 2-in-1 healthy blood pressure support. Why take CoQ10 separately when you can enjoy twice the benefits and the added power of CoQ10? The choice is simple. We're Super Beets, the #1 cardiologist recommended beet brand for heart health support. Get a free month supply on all bundles at trysuperbeets.com.
In 2023, over 100,000 people died from a fentanyl overdose in the U.S. Now, Nutraband, a NASDAQ-listed company, stock symbol NTRB, is on the path to commercializing Aversa, a revolutionary abuse-deterrent transdermal technology that can help prevent the abuse of fentanyl. Nutraband's transdermal fentanyl patch is a patented technology in 46 countries, addressing a multi-billion-dollar problem. Nutraband, stock symbol NTRB.
So I was just listening, like, every time I see this, so, and you guys might get mad at me and that's okay, but, you know, there's a commercial on CNBC and it was something about heroin overdoses or something like that, and it was like a penny stock, right? I don't know what they make. They do something to stop people from dying or whatever from dope. What if the person does want to die? What if they want to? What if they don't want to be saved? Is it up to you for that to you know, I'm kind of asking, I'm not really, you know, I think we all know the answer there. Who are any of us to force someone else to live that doesn't want to be here anymore? That's tired of suffering. Who are we to tell them, you know what? You need to stay here and try and fix it. Or whatever. Like, yeah, the first couple times, you know. But after a while, it's just like... Do you know what I'm saying? I don't know. Maybe Maybe it's just me. Because I know if it was me, and like, you know, we know with these things, at least I know, if you're fooling with those, like, you know what can come with that. And you know that, you know, at least the videos I saw, the majority of them, they're ran down. And they know that is likely an outcome if they do too much. You know, so who are we to say you must stay here and suffer? That's all. I was listening to a commercial and they're like, you know, they're not dying. Motherfucker, who are you to say that motherfucker's gonna die or live? Like, who gave you the, you know, I don't know. It's just weird. It's just watching. I've noticed that too, that CNBC has been, and again, like, don't take it wrong. I don't want nobody to suffer. I don't want nobody to go through that. But I'm just saying, like, as a decision, as a personal decision, as one makes for themselves, who are we to tell them otherwise? That's all. But anyway, I've noticed that CNBC has been doing a lot of penny stock ads. Whether they're a penny stock or not, it's just like they've been doing a lot of stock promotion lately. I'm kind of wondering how much they get for a commercial. Because I'm going to have to try and reach out and do, like, you know, hey, let's, like RIG or HP, right? Look, man, to the moon, baby. To the moon, we're going. Short squeeze is on. RIG, just throw me like 30 grand. I'm going to pump it every day. Or I'm going to do an advertisement for you every day for a month. 30 grand. CNBC going to charge you a lot more, and ain't nobody watching them. Don't nobody watch them anymore. At least the 11 o'clock to 12 o'clock. But I've noticed that. There's a lot of talks with Norwegian cruise lines today, too. Let's see here. Let's go to, let's go do this. Let's do a check-in. I'm going to use the restroom really quickly, or I'm going to go grab a bottle of water. So, look, Bitcoin is up at that resistance level on the 1 hour. It's up there, man. Can we break through this? If we break through this level, we're going to go test all-time highs. It's coming. It just stinks that it feels like the Wells notice is stopping Coinbase from doing what it could do. Look, GDX, man. GDX is all ready, guys. Did anybody take that long? Fuck, I forgot about it. I can't keep track of everything. Look at this. GDX is already... Look, on an increase in volume, we should get to pre-market highs. We'll be up about 1% and a half on GDX today. Should be. It's a lot. It's a lot. Anyway, let's see here. All right, Amazon holding up good. Let me see. Microsoft pulling back. Google. Actually, I'd rather have Google than the others. Apple has some really nice volume. AAPL. It's hanging out at highs. And look at that failed breakdown with the SPY. See if it gets a bounce here and can get through that level. May just consolidate here because we're going into lunchtime, but because look, yeah, the SPY has surpassed the Qs now. The SPY is pretty much at high a day, and the Qs are not there. Like, if you look at this middle screen here, like the Qs are like technically like right here, right? They're trailing now when they were leading. So, give me 1 second. So I'm gonna, like I said, I'm gonna grab some water, and then we'll run through the charts, and we'll come up with a game plan for anybody that wants to hang out and listen. We'll cover some of the news and whatnot. We will go through the charts between, you know, Chinese names, crypto, semiconductors, and get ourselves a game plan going into today, into tomorrow, if this rally continues or not. And yeah, we'll do that. So we'll go over some charts. We'll take this time. It's 11:30, and we will. Oh, Microsoft event, guys. We still have the Microsoft event. Microsoft live event. Yeah, we still have that. Shit, hold on. Give me 1 second. I'm gonna try and find it because I know. Does anybody have a link to it? Let me see here. Let me go to. Can you send me the link for today? May 20th. Seattle, the event expected future new software. Okay, yes, I know. You can follow the live updates and announcements for the event starting at 1 p.m. Eastern Time. For detailed coverage, you might want to check the live blogs and updates from sources like Windows Central Engagement. No. Listen, I'm a Microsoft guy, bro. Not like really, but come on. Keynote Live. How to watch it. Let's see. Yahoo. Build. Okay, it's right here. Wait. 21st? No. It's keynote. Okay, so this one says May 21st. So there's like all kinds of stuff going on today. I'm not sure if we're... Let's see. Yeah, live. Microsoft. Microsoft Live.
And inflammation support. And Cunol has the #1 doctor recommended form of turmeric. Cunol, the brand I trust.
Municipal bonds don't usually get the media coverage the stock market does. In fact, most people
maybe it'll...
But if you're looking for the potential
Windows
income that's federally tax-free, now is an excellent time to consider municipal bonds from
I don't know. I'll have to find it, guys. I'll have to find it. Event.
We'll send you our exclusive bond guide free with details about how bonds can be an important part of your portfolio. Hennigan Walsh has specialized in fixed income solutions for 30 years and offers high-quality municipal bonds from across the country. They provide the potential for regular...
There's no question.
Shut the heck up. Alright, give me just a minute and I will come back and I will find it. Yeah, Microsoft Build. Okay, so I have to register for it. Oh, mate. See, look, bro. So some sites are saying May 20th, and then other sites are saying May 21st, and now this is saying May 21st. And I was wondering that over the weekend was, okay, is it May 20th or is it May 21st? Because even down here, yeah, see, it says May 21st, so... That may not be until tomorrow. That may not be until tomorrow. Microsoft Build Live, May 21st. Runs from... Yeah, so there was a lot of... I would love to see if there was still an ad that showed for today. Now it's all changed because I feel like people were getting it wrong because somebody or whatever, one of these event places had said May 20th, and now I feel like, yeah, or at least over the weekend there were like a bunch of like places advertising it and saying the 20th when in fact it's the 21st.
2022, and everybody on the planet knows there's a huge beat and raise coming. And so I think that's
And look, right here.
in the sense
It's hosting a special
expectations are sky high. The
press event May 20th in Seattle. Unfortunately, the event is not being streamed live.
5-year average on a PE
Alright.
basis. And so that's why when I thought
Microsoft event 2024 live blog. All the Surface and Windows 11 AI announcements as they happen. May 20th, 1 p.m. for the latest Windows 11 and Surface announcements from Microsoft. Special press event May 20th in Seattle, where the company is expected to unveil the new Surface hardware powered by Qualcomm's upcoming Snapdragon X Series SoCs, as well as detailed how it plans to add next-gen AI experiences to Windows 11 this year. Unfortunately, this event is not being streamed, but we will be on the ground to cover the announcements as they happen. So to follow the event along with us, bookmark this page right here. You can click down below. May 20th at 10 a.m. Pacific Time, 1 o'clock Eastern Standard Time. So, yeah, that sucks. I'm not sure how until we can actually see some video proof of what it is that we're dealing with and looking at. I don't know how the market moves off of it. Unless the market has somebody there, which I'm sure they do. I'm sure there's been a few funds that have some people there that they've sent over. Oh my gosh, this is what I hate. They have Dan Niles on right now on CNBC, but if I play it, it's going to get I'll get copywritten. I don't know why this section has it, because what's his name got mad at me. Because I've seen other people on YouTube play this section or this time slot on CNBC, and they get paid for it on YouTube, and they don't get copywritten, I feel like, or they wouldn't be playing it. So, alright, so that's the plan, okay? Give me 5 minutes, just 2 minutes, and then we will, we'll go over some charts, and then at 1 o'clock is the Microsoft press meeting, which we'll get into. And then right now, I'll turn on some Schwab, and unfortunately, Dan Niles is on right now. Crazy.
don't think that this is a straight stair step up, because it wasn't for the internet either.
So why the discrepancy in your view between, say, a Meta, which I think you love, extremely well?
Well, yeah, but they're both acting extremely well. But this question.
So there's the pullback on GDX. Let's see if I can get long GDX right now, guys. We'll get the water. I feel like we have room 38, so I'm doing it, guys. I'm going to try and take this. I'm going with the 3750 calls.
Cut the cord on the way you get market news. It's Market on Close.
I'm going for a
Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street.
No, I'm doing 37.
Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free.
Hold on.
Only on the Schwab Network.
Regardless of what you believe of where Fed rate hikes go.
Welcome Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you are with us. So look at developing stories. We have a slew of earnings, including Palo Alto after the bell today. Diane King Hall, senior markets correspondent, is here with us, giving us a preview on this name, some of your thoughts on what we're watching for.
Yeah, so shares right now are pretty range-bound, basically. They're a little above the flat line at the moment. That makes sense when we know their numbers will come after the bell today. The expectation, adjused EPS expected to be $1.25 a share. Revenue is expected to come in at $1.97 billion for Palo Alto. Now, investors are paying close attention to this cybersecurity company because they guided lower on their last quarter. They lowered their outlook. They talked about client spending fatigue. That was one of the issues that they called out. They flagged in their last quarter. They slashed their billings guide by $600 million in the last quarter. They guided below the street for their third quarter as well. So we'll look for some updates on what they talked about, their platformization strategy, which is essentially trying to create this kind of one-stop shop for their client base. And just what else does their customer look like, especially when they talked about that spending fatigue issue for their customer base. So the stock year to date is up by 10%, so trailing the S&P 500. So again, we'll want to see the direction of their outlook. What's going on with regard to this one-stop shop? Is that solving the problem that they had with regard to their customer base and their clients, and can that pull customers away from rivals?
And as I was looking and I was thinking, oh, Palo Alto's so great. It's been a great one. It's up almost 70% in 1 year. But the big loss was on the last earnings. It lost almost $100. I just did a chart in 1 second. About $100 on the last earnings. So, folks, pay attention today.
Yeah.
Diane King Hall, thank you so much. I mean, it's been creeping back, but it just shows you how dramatic earnings season can really be. Thank you. Now it's time for the disruptors, and we're watching and staying in the tech realm here. George Sillis is with us, senior markets correspondent, taking a look at Dell. This is a name that has also been doing well in the big picture and some price target hikes and such. Some of your thoughts on Dell?
Well, I think if you look at Dell, I mean, it's been actually a really good performer over the past year, Nicole. It's up over 200%, and it's really in the space that the Supermicro is in the server markets. It's essentially integrated its hyper-converged software along with its server hardware, and it's basically now also cybersecurity play. So if you think about artificial intelligence and what's been going on with NVIDIA and Supermicro, Dell Technologies is actually one of the front runners in that space as well, considering they have about 28% market share in total in the server markets. They are competing pretty aggressively with IBM and Hewlett-Packard Enterprises, and I think they're well positioned to continue to integrate new technologies alongside the demands for artificial intelligence. And that's the primary reason why the stock is higher over the last year, considerably higher. And the expectations are still to the upside for the name, considering if you look at JP Morgan, they raised their price target to 155 from 125. It's really based upon coming up with earnings in terms of guidance for sales, as well as earnings on a forward basis based upon, again, the integration of artificial intelligence needs for high performance servers, which again is in high demand. If you just look at companies like NVIDIA and Supermicro.
So how would you go about an example trade then for this name?
Just give me 1 second. I'm back.
Yeah, so looking at this, Nicole, if you look at the price action, it's been gapping higher over the past couple of months, and this is based on upgrades as well as some resurgence in the hyper-converged markets and servers, but also the storage and memory. We talked about Micron and Western Digital, so I think they're moving together sort of in tandem. But with that said, looking at the price relative to the 10-day moving average, it may be a little bit extended. So I'm expecting a slight pullback. So what we're going to do in this case is go out to June with 32 days to expiration and sell right around that 10-period moving average, a cash-secured put. So we're going to be looking at selling the 140 put, and we can actually earn about $6 a share or $600 a contract in credit. So effectively, it gives you flexibility all the way down to $134 in case there's a pullback. But placing this trade, you have to be willing and able to take ownership of 100 shares per contract at 140, but your cost basis is $134. So
It's a yield-enhancing strategy. We're selling essentially a low delta at around 30, so there's a high probability that the option
anytime
will
you see a
expire
30 delta,
in the money
they
effectively, or the
say
stock will expire above $140 by expiration of 30 days.
It has a good chance of expiring in the money.
George Sillis, it's great
For
to
anybody
see you.
that doesn't know
Thank you
that.
so much. A good look there at Dell today, which had the price target hikes and 148.22. Appreciate it, George.
She got the,
on our
she got the
Disruptor
brown
every
jacket.
day.
She's starting Monday
Coming up
out.
next, our 360 round. We got to talk all about things that are Bitcoin, digital assets,
I'd like to
crypto.
know how old she is.
What do we need to know next?
Just curious.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
All right, guys, so keep an eye out
I was
for
born on the
GDX
south
here.
side of Chicago. It's been a long road,
his
but
pullback.
now I'm working for
Get that
Schwab.
pullback,
I
and we
love
can
to
just
help
stuff
people
this
understand the
level
world
again.
through their lens and invest accordingly.
again.
You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab
Tesla
Network is
looking to get
available
ready to break
anytime,
174. We
anywhere,
said look
on
to get down
any
to
device for
172.
free.
I mean, day after day, gang.
Schwab Network.
Day after day.
Ethan! How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Amazon breaking down, spying them breaking down, failed breakout right there. At the
Welcome back to
high
Trading
day, guys.
360. It's time for our 360 round.
Let's
I want to
see
bring
what
in our
happens
panel
here.
to talk
Keep an
all
eye
about
on it.
Bitcoin, crypto, the halving, what we need to know going forward. Mark Connors is with us, head of research at 3IQ, and Andrew O'Neill, digital assets managing director at S&P Global Ratings. Thank you both for being with us. Mark, in the past, you've been very bullish on Bitcoin. You know, there are a lot of folks who still say it's heading higher as well, and it took a little blip, but it's been creeping higher once again. Do you see the 100,000? What's going to propel Bitcoin higher in the near term and longer term?
Thanks for having me on, Nicole. And yeah, we're still very constructive on Bitcoin as a remedy to debasement, to investment opportunities, just like we saw with the internet 30 years ago, where information became democratized and decentralized. So where does it leave us today? Bitcoin's higher because if you look at the 13F filings, there's evidence that those RIAs, those small accounts that got in the ETF in the opening innings of the 13F filings, these are compelled filings that start at the end of every quarter. Well, now we see that larger institutions came in. Millennium owns over $2 billion, not in just one ETF, but across 4 of them. And then you have folks like State of Wisconsin, which is one of the more progressive pension funds out there. I think they're the 9th largest state pension in the country. They own on the order of 150, 250 million, 200 million rather. So adoption, people are realizing that this is an asset, they can invest in it, and they're coming, and many are already here. So yes, 100,000 we think is a low base case for the end of the year.
There was a time when I could not witness that. I had no idea.
That's pretty amazing because I like the inside look at the book type of thing, you know, and to your point, you had smaller accounts, the RIAs, you had, and then the larger institutions come in and these ETFs, and you see the big players and the pension funds. Once the pension funds are on board, forget it. You know that's a go. You know, it's sort of like a Wall Street thing, right? It's sort of where they're putting the smart money.
Guys. What's going on with JP Morgan?
It's not a recommendation, but that is, they do at least have some of the portfolio in there.
I was going to get short
Andrew, some of your thoughts, because
shut up, Nicole. I'm sorry. I know you're beautiful, but damn, hold on, guys.
And you do continue to see this sort of regulatory push. How does that impact your strategy? How does that impact how you think about capital allocation and just the optimism?
And I'll talk about some other ones. So the disappointment with Basel wasn't that they just, you know, the number. And, you know, sometimes people make it look like, you know, it's us versus them. And the disappointment with Basel is like, what is it?
What's it sound like, guys?
Do they want private credit to grow dramatically? Do they understand the risk of private credit? Because there are some risks to it. Do they understand what, you know, a mark-to-market world is or not mark-to-market? I wrote a very specific thing about trading. We have $80 billion of capital deployed to trading.
This is what I talk about.
We've lost money trading in the last 10 years 30 times, 30 days. We make 100 million a day. And the average day we lost something like 92. Okay. In the great crisis with Lehman, the worst quarter ever, we lost 1.7. We have 80 billion of capital deployed. Basel III would have made it 120. Who's the beneficiary of these great markets? And they make it seem like we're a hedge fund. We make $100 million a day, like almost day in and day out. With obviously volatility when things go up and down. The beneficiary of those markets is retirees, pensions, investors, schools, states, governments, The federal government, we have the best markets in the world with very narrow bid-ask spreads, and the knowledge of those secondary markets and the research around it are what create the best primary markets in the world. So what's the point of going from 80 billion to what might be 120 billion of capital? I think the QIS should have been done beforehand. I think regulators should be telling you what they want the outcome to be. They've already driven 80% of mortgages outside of the banking system, and then they just announced the FSOC. I think the FSOC just announced, well, maybe there's so much risk in these outside bank mortgage folks. They don't have the liquidity when there are bad markets to fund
seeing anything. Look at this.
Securitizations, et cetera, that they want another insurance scheme to protect mortgage brokers.
Abby,
I mean, they
just
kidding?
lay down. You have.
Is that
I don't know what
really
you
want to do? And I
know
think
you're trying to find a place to
far
fall
more
asleep,
forethought
but I
about how
cannot
these
just
things were
sit here
done.
and cater
And I wish
to you.
some of the president would ask those questions. Was who invented operational risk capital? They were supposed to clean up GSIB 10 years ago. Dodd-Frank, we've been waiting 10 years for this. There's constant rules and regulations, and I think they're damaging America at this point. The more we think the average mortgage costs 70 basis points more than it should because of bad, excessive securitization and servicing requirements and origination requirements. That's what they should be thinking about. What's the right thing for the system? What do you want? Plus, think about forward-looking. What's our biggest risk? What's the biggest risk in the financial system today? Do you think it's CCAR? We do 100 stress tests a week. This is one test, and it actually does make people think that they've conquered their risk. They can do something with CCAR. We do 100 a week. Okay, CCAR doesn't worry us all. You know what worries me the most? Cyber, trade, deglobalization, Taiwan. And then I think we could have created a banking system that you would not have something like Silicon Valley Bank or First Republic. So we're not even talking about that anymore. And that's why it should be forward-looking, thinking about the real risk of the system.
I completely agree with
What you see are cyber, and of course, as people go to the cloud, it creates a whole nother level of cyber risk, which you've seen already if you read some of these announcements coming out. So, and then of course, these additional rules. I mean, people say, what will be the consequences of that? Is that fair? I mean, you're all aware.
Right.
How many of you have ever gotten a parking
stop
ticket?
Fucking backing.
What happened when you didn't pay it
stuff
on time?
I mean,
they doubled it. If a bank doesn't offer certain products and services, the customer is going to pay more. And you know who they often pay it to? The government.
Right.
Taxes, parking tickets, municipal bills, who charge excessive fees relative to what a bank might do. So they should be asking, how many clients are going to drive out of the banking system to Reg II, which by a lot of these are going to end up in lawsuits anyway at this point. Do they really understand what banks do to, a bank account, that debit card is cash in your pocket, but it can't be stolen. It costs a retailer 5% to process cash, and it costs 40 basis points to do a debit card, which is like cash to them. Is that fair to tell an industry you cannot collect your costs at all? And so it's time that the industry is pushing back on these things, and they should. And on the consumer side in particular, what will be the outcome? So I think Marianne kind of said it. We will adjust. We don't think our average returns will change over time. It may very well change in the short run. You lose, $500 million of revenue, but over time you may be a slightly smaller business, but you probably have the same return targets. You'll just bank less customers of a certain type, or you'll charge a little bit more. The first Durbin Amendment pushed 5 to 10 million people out of the banking system, and they can't even acknowledge that. And so, this is serious. We'll be fine. The other thing is, what do they really want? A lot of the things you heard about are going to hurt mid-sized banks who literally have traditional lending and deposit businesses, and they may not be able to afford all this change.
Watch here, guys, for Wednesday's low.
That's what they're going to get.
Or Friday and Thursday.
They should have thought about it beforehand.
Thursday's low. Taking out 2 days worth of price action there.
Question on buybacks. Just kidding.
202.
I want to get your perspective on private credit.
I wonder if this
Troy
is
made
in
a lot of
Wilmington
good comments
or if
about
this is in New York.
JP Morgan being a great lender, financer, partner to the industry. I believe it all.
This might be right up
We
the
do
street
watch
from
more
me.
middle market loans be made on the private side. Some large corporate, more of the asset-backed finance world is migrating there through either
really
bank partnerships or
curious where this
sales.
is.
Or insurance companies now. Another whole level of risk. Yeah.
with a big
Or if it's
multiple,
at the
too.
Chase building.
So the question is
We're here in
how
Wilmington.
much, I want to get your perspective on how much of what are
wonder
traditional
if I
credit
could-
markets owned by banks in the past, better off in
Jamie
that
Dimon is
amount?
probably
It
a
might
few
be
miles from me
a
right
regulatory
now.
arbitrage
He's
thing, or
either-
it might just
I mean,
be
I don't know where
locked
he's
up
at, where
long-term
this is at.
financing. But it seems like more is
find out.
migrating over there. Just figuring you're in the best position to help us.
Yeah, I mean, so the first thing I think what Troy has mentioned about is we will compete. We can do effectively private loans. You know, they're unitranche, done differently, done
It's in
quicker.
New York. Okay,
with
that's what I
different
figured,
covenants
at-
and
at the
terms and stuff
corporate
like
center.
that. So when you come to us, it's really, if you're the client, it's what you want, not what we want. As it turns out, private credit costs more money for the most part. That changes all the time. So right now it's 200 basis points more. I think we've seen like 10 or 15 deals. They got out of private credit, went back in the syndicated loan market to save the 200 basis points, which they're very sensitive about at higher rates, and maybe are less sensitive at lower rates. And so we're going to compete. And obviously, you know, when I mentioned publicly that, you know, that some of these folks are dancing in the streets, they're out there publicly saying that we're dancing in the streets. Of course, it's regulatory arbitrage. You know, and again, if that's what the regulators want, so be it. But again, we will compete. We'll be fine. The other thing which has always been in my mind is I'd rather earn the 200 basis points more. And remember, when we earn the 200 basis points, we also get other revenues. These folks don't. So our relationship, we have payments and custody, so we get other revenues. So in some ways, it's a better economic deal for us. But if I were them, I'd look at private credit has some real pluses, private markets, which is, it's good that you can get private money longer. It's good that some of this money is financed longer. That's not a negative. There may be other pluses, but here's some negatives. Okay, some of these things are not mark to market with the same discipline that we do. I think some of these private credit people are very smart. They're very good. They know exactly what they're doing. But my experience of life, that's not true for all of them. The problem isn't caused by the good ones. It's caused by the bad ones.
So it looks like
And when
we
the
have
bad
room
ones
down
cause
to
a problem, what's gonna
200 if
happen?
we can get that.
And you
If we
can
get this
predict this,
rejection here.
like the sun coming up, they're going to look at all of them. And some of them are going to say the little, and now they're going to retail, not mark to market. That's going to be very different than
Oh my
institutional,
God,
not
look at
mark to
that.
market,
Look
which you
at
saw
that.
in private equity. But when retail
Look
has
at
a different mark to market, that little old lady is going to say, I didn't know they didn't have the same transparency as public markets. I didn't know they didn't have liquidity around these loans. I didn't know that they were being marked on a different
and look
basis,
where it
you know,
takes us.
theoretical mark to model as
much
opposed to mark to
198.
market. And
Massive
it may
support
cause
level.
problems. So, you know, to me, people should be analyzing things beforehand, not afterwards. And so in any event, we'll compete. We're going to be fine. We'll be okay no matter what happens with any regulations anywhere. But the question they should be asking is, what does it mean for the United States of America?
Exactly.
Oh, the other one last thing, a lot of those
This
folks
is
who took
why
private credit loans
Biden
will
is
be
losing
stranded
the
when the
polls.
shit is the fan.
Well, this isn't why, because most people don't pay attention to this
Because
shit.
they can't roll over a loan at 14%. The company won't be able to afford it. So banks tend to work with the borrower, and a middle market loan in the crisis,
and to
we were getting
ensure
LIBOR
a
plus
rollover like that, or
175, maybe you can
14%.
charge them LIBOR plus
I don't even know if you can
225,
get that
because we
insured.
want them to survive. In the mark-to-market world of private
sure you
credit,
can, but-
they have to, as a fiduciary, book it at par, which means they have to roll over 14%. Private credit hasn't dealt with high interest rates, hasn't dealt with a recession, and it hasn't dealt with high spreads.
Yep. Oh, those high spreads.
We are not going to buy a private capital
High
company.
spreads keep.
I mean, wait, let me take it back. The way we run the company is Mary and Troy and Jen and Doug and Filippo and all the people they should be thinking all the time, regardless of what I say. Okay? No, I mean that. I have an opinion, but they came in and said, we've got a great thing that makes sense for us, then yeah, fine, we should do it.
Succession?
Yeah.
How much longer do you intend to be CEO? And I guess, we're looking at 2.5 years?
Yeah,
What's
good
the
luck
chance?
getting that
I
one
know I
out of him.
grabbed you in the hallway that you would go to
luck.
government and go out before the 2.5 years. And what's the chance you add on like another 5 years after
Yeah.
these 2.5?
So here's some basic principles. It's up to the board, and we have some board members here. It's not up to me. I have the energy that I've always had. That's important. I think when I can't put
He
the
will
jersey
say
on
some
and give it
stuff
full
to just
thing, I
spice
should
things
leave,
up
you know,
to get people
basically.
talking about him. Remember
The
who we're
board
talking
probably, it's up to them at the time. Will I stay as chairman for a while? We'll see. But I think and we're on the way. I mean, we're moving people around. That's the other thing I should mention. If you look at our company, a lot of these folks have been all over the company now. They've been in CFO jobs and in the consumer side, the investment banking side. So they have deep knowledge of the whole company. The whole operating committee, which I think they're almost all in the room here, they all know all parts of the company. So you've seen succession. You've got built-in succession with Daniel Pinto. How many companies can say that? And then you should evaluate yourself. You guys, all the analysts in the room always ask that question, like, is there good potential succession? You could evaluate the people you see as leaders yourself. And I think most of you would say, yeah, there are actually some really great potential CEOs here and stuff like that. So the timetable, it's not 5 years anymore.
Whether it's M&A starting up, capital markets activity coming up, wealth management that can actually get a tailwind because asset prices have come up. I think those are areas that you can broaden the rally.
They're scared. They're scared to raise their hand to the boss.
That's it.
Yeah,
Ibrahim, go ahead.
Comps are going to be really hard for.
Just one quick question. You've been pretty vocal about the U.S. deficits. It has an impact on rates and the economy. Just give us a sense of what the end game here is, how we should think about just the tail risk event from that, how you manage the bank for that. And you had a lot of discussion in DC. How does this resolve itself given just the size of the deficits today?
Yeah, I would put myself in the concerned about that too. What I don't know is the timetable. So the debt to GDP is 100%.
Hey!
The deficit's running 6 or 7%. It's the largest peacetime deficit we've ever run. Remember, that deficit is large. Even if you look at the world, it's still a large number, and most other countries are doing it, not to that.
But we're doing
that extent
great.
in size.
We're doing such a great job.
The debt to GDP is going to grow kind of straight line for 10 years, and then it's going to grow like a hockey stick after that, mostly because of medical. Somewhere along that journey, and I don't know if it's 6 months.
I wonder if we're going to get a
6 years
pullback
or 16 years. It will be a problem. So
Exactly.
obviously, for the United States, the sooner we deal with it maturely, the better. We
Yes,
shouldn't
I
wait
agree.
when we know it's out
I
there.
agree.
And it
Let's
can
do
cause
it
something.
now.
Today, you were reading about the Chinese are selling some of the treasuries and mortgages. And there's a whole section in The Economist, which is the best thing. If you don't read it, you should read it every week, about the deglobalization of financial systems out there because of sanctions and war and restructuring of global trade. And it goes to the history of reserve currencies, et cetera. We simply don't know, but I would put it as a risk out there. And I would tell you that if you look at future issues, so forget current, the consumer's got money, wages are going up at the low end, companies are making more profits.
Oh, do we unlock the free
but
trial?
all of that is also
Jamie
fueled by
says to
fiscal
read it.
spending. All of it. Corporate profits are made at the margin. When corporate profits, when sales go up 3%, profits go up 10%. When sales go down 3%, profits go down 10% or more. It depends what kind of industry you're in. And so we don't know the effect of that. We do know the consumers are running out of excess money. Small businesses are running out of excess money. We don't know when it's going to end, but it looks like sometime early next year. And we don't know the deficit problem. But remember, if you go back to 1970, I'm going to go back to 1972. No, go back to 1980 when Volcker was there. The debt to GDP was 35%. The deficit spending was less. Okay, inflation had started going up in the 70s, guns and butter, Vietnam War, so much smaller deficits. But inflation hit 12%. So when Volcker raised rates, on a Sunday night by 200 basis points, the debt to GDP was 35% and the deficit was 3%. Something drove that inflation. And so if you look at the future, and looking at the future is very different than saying what's happening today. Well, inflation is going down. It almost doesn't matter. It's possible that inflation is embedded in the system at 4% for next year. And there's not a damn thing anyone can do about it. That is possible. And I'm not saying it's going to happen. We don't make bets in the future, though I also don't believe in central base cases at all. But that is a risk. And if rates go up a little bit more, think of the 10-year bond to 5.5%, 6%, spreads gap out a little bit, that's a different world. It's a different world for real estate. It's a different world for assets. It's a different world for private credit. It's a world that a lot of people in this world have not seen. 1972, the market had an all-time high of over 1,000. It didn't hit it again until 1987.
Oh, wow.
It hit 1,000 in 1968.
Wow. Yeah, I thought it was something
Shit happens.
crazy. 20 years later.
And I'm not even talking about the geopolitical world, which is even far more complex, including the effect of oil. The oil, we've been talking about, there's an article in the paper today about internet cables, fiber cables. We've been preparing ourselves for those to be cut for years. They are very vulnerable. So are pipelines for oil and gas. And so I look at the world situation and I'm quite cautious. I like having a lot of extra capital right now, to tell you the truth.
Okay, Stephen Trubuck back there.
So you guys can hear he is going
Thanks,
hard
Michael.
on the
Jamie, wanted to ask you on two
again.
topics. The
But he's
first
right.
is
It's just,
QT.
but who's
now
to say that we can't
they're at least
go
slowing
on
the
without
pace. Want to get your
200%
perspective
GDP,
on how you could see this unfolding.
150%?
What are
What
some
if we have
of the potential tail
1,000%?
risks
We just
that
keep
you
inflating it
envisage?
because that's
And
how
then
it's meant to
second
be.
one, just
It
on
was
the topic
made
of
to
private
inflate,
credit,
and we just keep
the
going.
regulators have
Till we run out
outlined
of
at least some of the
resources.
risks that you flagged,
I think
but
that's
they've
the real
also
problem.
indicated that they don't necessarily view the risk as systemic, given lower leverage as well as better asset liability matching. So I want to get your perspective on both Fed QT as well as the systemic piece related
So
to
then
private
we
credit.
do the private credit. I don't think it's systemic either, by the way. So I'm not sitting here saying it is systemic. It's growing rapidly. Anything that's growing that rapidly, if you look at almost every major financial crisis, it was new financial products, often around real estate, but new financial products, almost every single time. So new financial products that are untested often cause a problem. Whether it's systemic or not, that remains to be seen. I don't think private
GDX
credit
making a
itself
new
is big
high.
enough to cause a
Did
systemic
anybody
problem.
grab
But
the
remember,
short
markets
or
panic.
the long
So,
on that
something can
pullback?
cause a market panic. So isn't it they're systemic, but panic can become systemic all on
Green
its own.
trades after green
The
trades
financial
after
crisis
green
was the first
trades
time you ever saw
after
that
green
the
trades.
market, what was happening in the market affected the real economy. It was usually the other way around. So, of course, market panic will happen again. I guarantee you, every single one of you in this room will panic one day. And you want to sell your stocks and get out, and the sentiment will go a different way. At that point, we're not going to panic because we prepare for that kind of stuff. And so I don't think it's systemic. QT, I just don't know. I mean, I look at it differently. We've never had QE.
You mean QT?
We've never had QT.
Yes, exactly.
The
We've never
government
had
has
it.
spent $10 trillion, our government, since COVID, $10 trillion, borrowed it and spent it. Okay, and I don't know how that's not inflationary in one way or the other. And then the government also bought $8 trillion of bonds, $4 trillion in the great financial crisis, $4 trillion in COVID. Now, those are huge, and this happened globally. It wasn't just, the ECB did it, Bank of Japan did it, et cetera. We've never had QT, so it's hard to say, here's what's gonna happen. I'm a little worried about it. I do believe that it will cause problems in the marketplace at one point. One of the things that we didn't put up here, maybe one day we can have, Jeremy can do it, is that, with all these constraints the banks have, there will be a point in time we have $1.2 trillion, 1.2 trillion of cash and marketable securities, and you're going to come to us to want us to bid in $40 billion of bonds out of a mutual fund or something, or to do a repo against very good collateral so you can liquidate some of these portfolios as people panic. They're going to panic, and people are going to want to liquidate their mortgages or liquidate their bonds or liquidate their stocks, and there's a way to do it. And we're going to say, we cannot do that. And you're going to say, well, why not? You have $1 trillion of cash, 500 billion at the central bank. And we're going to say, because it's sitting this little constraint over here. It may be SLR, it may be LCR, it may be CET1.
SLR rule.
So those constraints will hurt. Now they're talking about fixing the discount window, which they should have done 10 years ago.
For anybody that doesn't know what that
but I do
is,
think it'll cause that.
if you were
you
one
will
that
see,
got,
like we saw it, was it February,
if
in
you
COVID
got
in
your
February 2019, and they go back to
COVID money
that,
late,
the second they started doing it, they got
it
to a
could have
certain
been
level,
because
it
the
caused a
bank
little bit of
couldn't
problem in the market.
accept it
That I can guarantee will happen again. We're not there yet. We're
until
quite a ways
others had
away from that.
withdrawn. Because they were only allowed, again, the government saying JP Morgan and others, you can only get so big, and other companies.
Jamie,
You can
Tim
only get
Chowsky
so
with,
big.
ACRL
Okay, if I can only accept X amount of dollars,
I think today exemplifies.
right? And y'all are planning on giving out $7 trillion. Y'all just forgot. We can't accept that money.
Company.
So
Two things.
I know some
One,
people
could you
got
talk
theirs
about,
late.
over
They
your
had
career.
to change rules, and like he said,
How
they
would
should
you
have
say
changed
you
it 10 years
identify
ago.
people that you want at the operating committee level? And then second, as you move to non-executive chairman and beyond, how do you think about keeping this team of rock stars together?
Yeah. Well, I mean, again, it's when the board makes a decision about who the next CEO should be, that's one of the considerations is keeping the best people. If you put a new person in a job and they drive with everybody else, that obviously wouldn't be a particularly good thing. But I think it all comes down to, that everyone, including the young kids, are treated with trust and respect. And that they know that it's not about being a friend of Jamie or about being right about something or about, but they know that when they walk in, that they can contribute to the best of their ability. They're treated respectfully. That we want the truth, the whole truth, nothing but the truth. We don't spin stuff. We don't spin it for the board. We don't spin it for me. We don't spin it for anybody else. People are supposed to do a full assessment, including all these people decisions. Like when we make people decisions, a lot of the people on the operating committee get involved in those decisions too. One of the things that people think that people crawl their way to the top of these companies. No, very often they're pushed to the top because people want to work for them. And I actually wrote my chairman's letter this year. What makes it, do you want to work for a jerk? Anyone here? Well, of course not. Do you want to work for someone that treats you with respect and just to try to do the right thing for the client, the company, the country, the community? Probably. And so you know that's a different level. I mean, we need you to be smart. We need to be dedicated. We need you to have all those disciplines and discipline. I mean, a lot of companies don't have deep discipline about where they make money and how they make money, why they do it. And Troy mentioned, I just want to reiterate.
All right, look. It's
products
back
we're going to
under.
make very little money
It's
on.
back
We
under
have
on
to
that
do
bear
that.
flag on JP
But if
Morgan.
the client relationship makes sense, it's okay.
Hold up.
We're okay with that. We're adults.
All right.
We're having all these disciplines, but then having the heart. Several people mentioned here already, the heart, the curiosity, and the thing that people want to work there. And so, hopefully, we'll continue that. And I think you get better at that over time too.
Oh, I missed it, guys. I wasn't paying attention. I had it up. All right, so look, this could be a nice trade
I believe
here.
in your last shareholder letter, you spent a lot of time talking about AI. Can you share a bit more about your latest thoughts on AI? How do you think AI is going to change the world in the banking industry?
I'm just going to let that trade go.
Is positioned to navigate through some opportunities and challenges as a result of the rising power of AI?
I think we were quite clear. I mean, everyone talked about it up here. Okay, it's embedded in what we do already, but and I think it's going to change every job. Like every job, there'll be no job. Some of it's just going to be a co-pilot helping you do your job. Some of it may eliminate some jobs. Some of it may create additional jobs. But you can't envision one app, one database, or one job where it's not going to help aid or abet. That's from trading. We already use it on trading. It does our hedging portfolios. It does a lot of risk fraud. Marianne mentioned there's several things we try to analyze every part of it, like what's the ROI and stuff like that. But I'm very cautious of that too, because sometimes it's just so broad and so deep. I tell people certain things don't do MPVs and ROIs on. It's just a waste of time. It's better customer service or client service. I remember people trying to do it years ago in digital account opening. And then you have 1,000 assumptions in there. It's replacing this, and can you get rid of a little bit of real estate? What about advertising? You're wasting your time. Clients want it. You damn well better do it and get right to it and stuff like that. So, but I think the most important part, Daniel already mentioned it, was that Teresa was here. If you want to talk to her, she's one of our resident experts who's one of the business leaders here at the, at the management table. So that is responsible for data and analytics, and is a mirrored organization. So they have data analytics and credit card, wealth management, small business. I want to
get short, but
and it's really how people think. Now, as people start thinking about how you deploy, the management team in here is going to come up with 1 million examples.
But
we don't even know today.
Move.
So my view is make it just part permanent what you do. It's like exercise.
Takes us down here.
We don't have to debate the importance of it anymore. It is important.
199.
And it does change the cloud journey. Makes it far more important, and that we do that right, whether it's public or private cloud, and how we use data. But I also put that down as one of the bigger risks to the banking system, by the way. And it's not just us; it's all the things we're hooked into. And so,
there's the balance.
If I was the regulator, I would literally, I do, because I think we're from Venus and they're from Mars. I would stop all the stuff they're doing. I tell the management teams, focus on interest rate exposure, QT exposure, cyber exposure, data exposure, and all the linkages that can take down major important institutions in America. Because it's every day now. And you might have read the thing, there's a bunch of stuff about Russian actors, Chinese actors, North Korean actors out there. It's pretty scary stuff. We are very well protected, but I'd say the system is not yet. And I think in this case, the government is doing a better job focusing on that.
We're another question down here.
Yes. Hello. Hi, Jamie. I would like to pick your brain on something that I've been reflecting a lot around. So you have millennials and Generation C right now living in a world that is constantly changing, that is becoming more expensive, more challenging. We have AI that is definitely going to change the way that workforce works. With this in mind, how do you see the role of banks in terms of advocating for policies? How do you see the role of banks in terms of helping the generations to be able to plan for their future that is becoming every time more challenging? And how do you see the changes in political landscape in the US, particularly where this is becoming more intense, changing? Do you think that because of this push of, more expensive lifestyle, or everything's just becoming more expensive, do you think that this will push the US into having a more socialist approach in terms of healthcare, education? Do you see that switch happening? What are your thoughts on this?
Yeah, so I don't feel so bad for Gen Z and millennials, just so you know. I tell people, my grandparents, who were all Greek immigrants, came here, literally with the shirts like I'm sure a lot of your great-grandparents, great-grandparents, with the shirt in their back. That generation is going to inherit a world worth $400 trillion. Okay, just so let's put things in perspective a little bit. They're going to be working probably 3.5 days a week. They're going to live to 100. They're not going to have cancer. They're going to be in pretty good shape, provided the world doesn't destroy itself with nuclear weapons, which is the biggest risk in the world. But I'm going to answer your question now. Okay. We reach out everywhere around the world to the 30,000 middle market companies, real estate companies. We reach out to states. We reach out to unions. We reach out to large companies, sovereign wealth funds, countries, governments, 80 million American consumers. In addition to that, we have devoted programs for advancing Black leaders, advancing Hispanic leaders, reaching out to LGBT. We've got special jobs for neurologically disabled individuals. We feel great about that. Okay, we're opening community branches. We just opened one in Fordham Road in the south, and not northwest Bronx or whatever. And we're going to continue doing that. I think our people like it. We like it. It lifts up society. I think it's a good thing to lift up society. We march to our own beat. So we're not going to sign any things anymore that say we're committed. We're going to, we have aspirations and goals and stuff like that. And, of course, we're getting from the left and the right about energy and solar. We're great at both. We're great at all of them. So we're going to continue doing all of that. And the younger people do like that we have a heart and a soul and a purpose. And we unabashedly are going to be lifting up society, which I think is good for the country, for the people, for our business, for everybody. It is not a zero-sum game. If you have part of your side is doing terribly, and we do, I wrote my chairman's letter about the lower paid 20% have gotten a raw deal. They're dying 10 years younger. They have less medical insurance. They drive through crime-ridden neighborhoods. Their schools are failing those kids. Half the kids don't graduate inner city schools and stuff like that. What the hell did we do as a society? Now, I also point out to my Democratic friends, that was not because JP Morgan was successful. That's not because Apple was successful. We should look at those problems and fix it. And we do play a role in that. We get involved in work skills and inner cities, and we're going to continue to do that. And then we also advocate for better policies in Washington, D.C. around mortgages, financial education, health, things like that. So, the government, we're going to deal with government.
He feels the same exact
Democrats,
way.
Republicans,
Big companies
over
are not
the years.
the enemies,
Obviously,
like they say.
some have different
like
meaning for us than others, and so.
Come on.
Can I add a comment?
Sure.
Can I add a comment to that? Yes, indeed. This generation is going to inherit, like what you said, $3 trillion in terms of investment, the best health.
300 trillion.
300 trillion, sorry.
Yeah.
In the best healthcare, the best education even available. The problem is access. Even right now, today.
I agree. And we do the best we can in that, both directly in our communities and trying to advise the government. I totally agree.
Jamie, Gerard Cassidy, RBC Capital Markets. I echo Betsy's comment to you and your colleagues and Michael putting on an outstanding investor day. Coming back to something you said earlier about possibly being in the position if there is panic and somebody has to sell $500 billion of bonds and you guys could be there maybe to execute the trade. How about banking? We all know our careers have been littered with bank failures. Obviously, you picked up Washington Mutual during the crisis, and we all know about last year. Is there a risk?
So
that
she's trending lower here.
From
Abby,
some of
what
the
do you
folks in
need?
Washington that
Just
you
leave her here,
won
baby.
the
Come
First
on.
Republic? Is there a risk
She's
that
just
you may
extra
not be
today.
invited to the
I love her
table
to
on a
death,
bank
but-
failure, or is that just crazy to even think that?
Look,
If you guys could hit
we
the
would
like
not
button,
probably
subscribe
run
if it's your first
Republic
time here.
if the system didn't need
Let
it.
us know if you have a
And
question.
we were quite
Post it
clear
below.
about that. We knew we were going to get a lot of good stuff, and our folks done an unbelievable job treating the people properly, learning from it. We always learn from everything. But it was, if you look at it, we knew we could handle it.
You're tired. You gotta
And
relax.
that we can hedge all the risks right away, that we understood all the loans, we understood the consumer system and stuff like that. The FDIC has a requirement under the law to sell it to the lowest cost bidder. Now, if they wanted to come up with a way to make it skewed against us, I'd be fine with that. What we wouldn't be fine with is that if we're not there and it costs another $10 billion, as opposed, so that cost the FDIC $10 billion or something like that.
All
So
right.
Silicon Valley cost 20. It should have cost 10 in my opinion.
SMCI
And that's
is
one of the
down.
reasons I said we should bid in
Sorry.
this thing, because we have to pay 20% of the difference. And so, yeah, they should do the right thing, but if they want to skew it, there are ways to skew it which are mathematical, like, giving a smaller thing of cheaper loan or something slightly different, but the politics can't keep you out because the law is quite clear. And we'll see. They should be concerned about, they need to allow banks to merge. They need to stop preordaining whether it makes sense or not, because every bank's in a different position. And they should stop acting like the banking system's static. It's not. They're very successful small banks. I've already mentioned a lot of startups who some are doing quite well, including Square and PayPal, and Apple Pay is now what you guys sent me the number over the weekend, $25 billion a quarter going through Apple Pay of our own clients. Okay, so these are serious matters, and so hopefully there'll be a deep understanding of what we're trying to accomplish in the banking system. We do have the finest financial system in the world. It is one of the reasons that America has one of the best economies in the world, the most prosperous nation. Hooking up capital and people and ideas, and with transparency and rule of law, research, low cost of execution. They should make sure they keep that.
Jamie, over here.
Yeah.
Right here.
But that's the thing.
Maybe to ask the
It
AI
feels
one
like-
a little
just like
differently,
BET,
as you
they
think about
don't
the
want
impact of AI and
poor
technology
people
generally
being able to
on the
make it. They don't
banking
want people
industry
making it.
in lowering costs and
GDX.
providing better outcomes, how much do you view that as a
Get that
proprietary
higher day.
differentiator to extend your lead on overhead ratio or take costs out of the banking industry generally, or as an industry-wide kind of cost of doing business improvement for consumers that doesn't necessarily translate to better margins,
bouncing up. Look at
returns, similar to
some
like
cues.
Buffett's textile machinery analogy or Red Queen race, where everyone just has to keep investing in it?
Yeah, my own view is that we shouldn't be complacent, because if I start saying that because we're bigger, we can spend more money and become a competitive advantage, that may be wrong. It may also be a great
It is
levelizer.
wrong.
The other people who step in and do things better,
So we gotta
faster,
do it
quicker, cheaper.
responsibly.
We
Do
also
what
have to deal
we're
with
supposed to
open
do.
banking laws.
Trustworthy.
So I don't know yet. The answer to us is deploy it as best you can, as fast as you can, as safe as you can, and it puts you in the best position. I think in some cases it may very well be a competitive advantage.
Qualcomm,
I think in
Ripper.
some cases it can become a competitive disadvantage.
Guys, 1 o'clock.
Remember,
We
a lot
had
of
the
competitors will
Microsoft
get it not through us,
meeting
they'll
as
get it
well, so
directly
it's still
from
a jam-packed
AWS
day.
Or Fiserv or something like that, who will have a
When we
pass-through
thought we
system
weren't going to
give that
have
benefit
much
to smaller
movement
banks, too.
today.
Okay, we'll take the last question from Betsy down there.
Oh, hey, Jamie. Okay, it's going to be a two-part question. One is, how do you think about special dividends? You did raise the dividend. Some people thought off-cycle, but just want to understand how you think about that as a way of optimizing capital structure. And then the second one is in your chairman letter. You have a new sixth focus. One is to be a source of strength, particularly in tough times for our clients and countries in which we operate. Do you feel that you're already there with your LCR, your capital ratios and everything? Do you feel you're providing that source of strength today, and
no, don't
you don't
be
want to go any
mean.
lower, or maybe give us a little bit of an understanding as to
swat at
how
me.
this came in as a
I'm
new
just loving you.
element to the shareholder letter.
Yeah, so
Thank you.
it's new to the shareholder letter. It's not new to the way we think. It's just, in reality, I should have asked, why didn't you add it sooner? We've always felt that way, that for JP Morgan, wherever we do business, we should be a source of strength to that country, the clients. We don't want you worrying about us. We want to be there in good times and bad times. We run the company knowing there are going to be good times and bad times. I look at the economy a little bit like the weather. I don't worry that much about pipelines and growth in this quarter, next quarter. So the things driving profits today were decisions made over the last 10 years. If you said affect next quarter's profits, we can make a few phone calls, Charles, right over there, take a little more X, Y, or Z risk, or Jeremy, do a little of this, or take $1 billion out of the marketing budget. All wrong to do. But we can affect next quarter's profit by billions of dollars. And we don't do that because we want to be a source of strength. So that should have been added before. I kind of missed it before. And the other question is, I don't love the idea of a special dividend. When we finish Basel III, we're going to know about the second round of Visa and then the ultimate round of Visa.
JP Morgan's holdings.
That may be something we should think about. We'll probably be soliciting some of our shareholders about what might make sense. But I personally just like leaving it there and going to use it when the time is ripe, and it will be ripe. And so let me just end by thanking the management team, not just the ones who presented
Pretty
today,
much everything.
who did the most heavy lifting, but behind them, there are a lot of people in this room who did the real work.
What is this?
But all the folks in this room at JP Morgan, it's unbelievable the job they do. I get to see it around the world, what we do for consumers and communities and all parts of communities, cities, schools, states, hospitals, governments, countries, Ukraine, Poland, helping our clients where we can through good times and bad times. And I don't know about you, but they make me very proud of this company. So thanks to the JP Morgan people here, and we'll see some of you up at lunch. Thank you.
Thank you. Thank you.
Thank you for attending the 2024 JP Morgan Chase & Co. Investor Day. We will now conclude the day with lunch. Please make your way out of the presentation room and up to the 13th and 43rd floors.
Let's do it.
Our event staff will be happy to help direct you.
Yo, we're getting sandwiches, gang. Who's coming to the 30th floor? Let's go get it. I'll be there in about 3 hours. Hey.
Ego always doing the most. Out of touch and not even close. Drama always follows you home, but I won't be waiting no more.
Why does this feel like it has a mix of the 80s with like new? Didn't it? Because they didn't say doing the most back then. And that beat was like from the 1980s. It's a little mix, a little time capture, or like a little time machine. A little old, a little new. Find out if we get a little copyright later on. But anyway, so that just happened. We have the Microsoft getting releases of the Microsoft that's coming out at 1 o'clock, 11 o'clock Pacific time in Seattle, with Qualcomm's QCOM. I mentioned this morning. Ripping, because this is supposed to, Microsoft is going to showcase the new Surface Pro, or whatever the hell it is, with Qualcomm's new GPU. So that'll be coming out at 1 o'clock. All right, we heard from Jamie Dimon, looking for a 198. This thing's just pulling back. I thought about grabbing some puts here on it. It's kind of late now. Abby, I love you to death, my darling. If we get a bounce back, maybe I'll try it. But this bear flag here, it's a beautiful, beautiful bear flag. It's really nice. Right here. And look, now it's just going. So, I don't know what about what he said is making this thing sell off, or if you're just naturally if this is just giving the stock a reason to pull back, because it's been on a tear. So little pullbacks, this little pullback isn't, it's like, this was the, like, this is just giving it the reason that it, just an excuse to sell off. Just an excuse to take profit. Oh, he says that, you know, he's been saying the same thing. I think we're all saying the same thing. Things are not okay. All right? At least we don't know if they're not okay, because you'll, what are you just going to continue to do this? Because when you borrow the money and you're like 2-3 times in debt of what you're making, and that person has to wait a long time, what if they're not there, and what if they don't show up anymore to give you the money to rent it, or to borrow it? That's where this that's where the problem in this lies. Like, it's not about, oh, we have, I mean, it is about, you know, having 100% GDP, but it's like, you know, you're going to take it to a point where they're not going to do it, or they're, you know, I don't know. I guess they can do whatever they want, they say. So, at least that's what Biden said on 60 Minutes. God, we can do whatever we want. It's the United States, my guy. Come on, we can do whatever we want. Maybe you can, but we can't. So, I am curious what they gave him for, like, now, you know, people are sometimes people are tired because they're working. They've stayed up working on things and have been traveling, this, that, and the third. But I am kind of curious what they give him on, like, on days like the State of the Union and stuff. I'm kind of curious what they gave him. I would love to know. Biden over there busting out trend. Like it's his day job. Biden with that trend body. Abby, don't hurt yourself, boo-boo. Oh my gosh. Girlfriend? Girlfriend? In different trial phases. And so you're going to see large overweights. She was getting ready to swat me, boy. Quick, too. All right. GDX. Double top. JP Morgan. So pullbacks here. 9 EMA. You can look for this. You have a gap fill. It's like down here at 198, 197 or so. If we get any bounce backs, I'll try and take it. All right. I'll try and take the short. I didn't take it up there when we fell because I wasn't sure that we would get it like this because the volume started to dry up, right? It started to dry up there, but it gave you the follow through. If you took the gamble, you paid off. I do think you get downside. I mean, it's obviously showing us the direction. Maybe we could put it on and see where it takes us tomorrow. I'm going to wait for bounce backs. All right, GDX is another one we were looking at.
We're going to talk about all of them in the ETF Edge segment coming up, but I want to just switch. You had a big hit last year, the big ETF hit.
Come on, get a pop right here. Look at this. See if it can pop right there and look for a long. There it goes. There it goes. Come on.
Why are you making a concentrated bet on China right now? I know the MAX was a big hit last year.
NVIDIA spinning back up around. AMD going back to high a day. Are we going to get some outperformance today in semiconductors? Oh shit, we could. What time is it? It's 12:30. Oh man, I might try it.
Keep an eye on that China ETF concentrated one. We're going to have a lot more on these groundbreaking GLP-1 treatments coming up. ETF Edge, 1:10 p.m. Eastern Time. Joining Dave, Todd Rosenbluth from Verify, who's also, by the way, going to update us on the move to T+1 settlement date. That's going to happen next week, and we'll talk about
next week is a T+1 settlement date, by the way, too. For anybody that doesn't know what that is. All right, 1 o'clock. Microsoft's live event will be coming up. I'm going to go over some charts.
Lucky 8 ETF is intended to provide concentrated exposure to those companies that are really moving the needle when it comes
Just give me a minute.
to Chinese consumer.
I'm going to
and
go
Chinese technology.
through
So
some charts here and see if I
when's
can
this
come up
launching?
with something.
We filed it on Friday, so about hopefully about 75 days. No specificity yet.
We'll keep an eye on that China ETF concentrated one. We're going to have a lot more on these groundbreaking GLP-1 treatments coming up. ETF Edge, 1:10 p.m. Eastern Time. Joining Dave, Todd Rosenbluth from Verify, who's also, by the way, going to update us on the move to T+1 settlement date. That's going to happen next week, and we'll talk about the implications for ETFs about that. ETFedge.cnbc.com.
Oh, watch this 100-day moving average on AMD,
Thank you,
guys.
Bob Pisani still ahead, playing a strong defense. The aerospace and defense ETF is hitting fresh record highs today. Do have some ownership in that space. You may own the stocks as well. We'll trade them, debate them.
Yeah.
We'll do it next.
Oh, yeah. What's up, bro? Sorry, I didn't see the chat.
ETF Edge is sponsored by Invesco QQQ.
How's everybody out there doing today? Just wondering. How's everybody doing?
What took you so long? I'm sorry. There was a long line at the Thai place.
You get the sauce I like?
Of course.
Damn, the
Look at
50
man.
day is there too?
I wish.
Are you
The future
serious?
isn't scary. Not investing in it is.
Oh, that's wild.
NASDAQ 100 Innovators, one ETF. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
Interactive Brokers pays up to 4.
Wait, this thing is actually playing commercials right now. That's funny. So, we have a kind of a death cross on AMD. It's just, I don't think we have that much volume. Look at that.
You can learn a lot about someone on your first trip together. Like the fact that they're not a huge fan of heights. Somewhere to smile about. Ocean City, Maryland.
Just give me 1 second. Yes, I'm getting tired. It's all good. I need to go over some charts to get a game plan going. I mean, I have game plans. I have a few in mind. I already know kind of what I'm doing, but I figured we could have, like, I wonder if we could, like, have, like, call in. People call in, and I'm trying to think of, like, something cool we could do on the stream. I could turn the camera on and wait. I just thought of something. Never mind. Alright, so AMD, look for this 20-day moving average there. You have the 50-day crossing down below it on a golden cross. You don't have an increase in volume to the sell side just yet, though. Keep an eye out. If you do not reclaim the 100-day and you close red today, which you would have to, you'd have to close below. What is that? 165.57. Keep an eye on the volume, because if you have an increase in volume and we make a new low of day today, I hate this daily chart. Come on, bro. Then we could start to see an increase in volume on that, on this chart here. So you can see if we can get an increase in volume here on the sell side, that would really help the it would help the story for the downside, that's all. Sorry. But semis are strong right now, so. It's sad but true. Oh my god, come on. Bro. All I'm doing is clicking. I just want to move it. Boom. Alright, there we go. And then 50-day.
where geopolitical tensions were probably as calm as we've witnessed, certainly in my lifetime. Now we're entering a period where geopolitical tensions are becoming more intense, more strained, and I think you do have to have the exposure. What's interesting about the ITA,
All right, there we go.
is I hear so many
That's
people
it.
saying, well, let's take a position.
Done messing with this thing. All right, so there we go. We got the 50-day, the 100-day, and we're stuck kind of like right there in between it. All right. What's that resistance up there at 170? Let's do it. Let's go for a 170. Look at that increase in volume to the upside. Let's do it, man. Let's do it. I'm tired of this shit, bro. Let's go long. Fuck it. Let's go long AMD. Let's go. I'll let you guys know when I get filled.
Tensions were probably as calm as we've witnessed, certainly in my lifetime. Now we're entering a period where geopolitical tensions are becoming more intense, more strained, and I think you do have to have the exposure. What's interesting about the ITA is I hear so many people saying, well, let's take a position in Boeing. Just go buy the ITA.
It's a huge...
Boeing's 14% of the ITA, so you get a little bit of Boeing, and then to Sarat's point, you get some of the better.
Yeah, but then you get punished, though, when Boeing lays a big egg, which is why the ITA is up 7% year to date and underperforming the market.
Okay, so far year to date, it's been underperforming. I'll give you that, but over the long term, this is a stock that's reaching, I believe, a new all-time high. So, you know, you can't. Yeah, you could criticize where it is so far year to date, but being in this ETF has been the right thing.
Sure, but I'm just saying if you want to make it one of the benefits of being so leveraged to Boeing because it's such a large part of the ETF, well, you're going to pay the price.
Yeah, you are, but it's a lot better than going out and buying Boeing outright.
Yes.
You know, you're still getting a little bit of Boeing.
Maybe buy neither. You ever consider that as the third option?
No. It's funny, Scott. I think it was last year. Both Josh Brown and I had ITA as one of our top 4 picks, and both Boeing and Lockheed kind of smoked us. Lockheed's in there. It's the one that we own. It's up roughly half what you're saying about ITA. So it's even worse. It's 12% of the construction of that. I think from a portfolio construction standpoint, you cannot own all the same things. So having some optionality to geopolitical tension or acceleration in the demand for aircrafts in the economy is not a bad thing to have in a portfolio right-sized.
All right, Mike Santoli is going to join us next with his midday word. We'll be right back.
Tesla's still holding 174, y'all.
Too often the AAPI community are seen as model minority. Quiet, hardworking, good student. But that also means that we are often forgotten. It took me years to find my voice, to advocate for myself in the workplace. Remember, a diverse viewpoint is important and ultimately benefits the bottom line.
Yeah, she's really tired. My Abby girl is really tired. All right, let's go over to the big charts. If you guys have any tickers or anything you guys want to look at, watch, do, let me know. Let's see here. We can always also go see what's going on with current events. And we'll go through some charts. It is 12:48. I need to put JP Morgan somewhere. Microsoft's pulling back. It's bouncing. It pulled back and now it's bouncing. 25. You can't do nothing with that. Damn, look at that. Look at that second leg higher in the Qs, man. That semiconductors help leading the way there. Wow. Look at old Quali. Just running, man. Wait, man, on Abby.
SABE, Spirit Airlines eliminating change fee and cancellation fee for customers and the Alpha Victor Echo.
We love helping you do what you love. Are you investing in municipal bonds? Let Assured Guaranteed Bond Insurance guarantee your principal and interest payments.
Damn, airlines did fall off today. This was something I've been trying to keep in my back pocket here. American Airlines, and then DAL is the leader, so it's probably not down that much. Man, this shit is tiring, bro. I would kill to just like take a 5-minute nap right now, but I cannot. We still have Microsoft getting ready to come out. Remember, here at 1 o'clock, just a couple minutes, 10 minutes. It'll be on, you just have to Google it. It's not a live event, like it's being taped or anything, but it's like a live blog that they're going to just, I guess, type out loud. I don't know. Give me 1 second, I'll pull it up. And by the way, it's horseshit
commentator
that
Mike
my Red Bull
Santoli
is
joining
over
us for
with,
his
that
midday
it's
word.
finished.
2 things stand out to me, Mike. I'm sure you as well.
Probably the saddest news of the
NVIDIA
day.
back at 950, a couple days ahead of the number. And by the way, now Apple's above 190, 191.5 too. So it's a technology kind of day.
It is. It is a little growthy. Some of the value sectors are backing off a little bit. To me, what it says is the market just continues to kind of rotate around and stay supported, as opposed to necessarily just sort of pushing hard on a single theme that's carrying things. So, you know, in general, record highs for the indexes at a time when you have underlying earnings also at a record high, forward estimates still rising, volatility and credit spreads at multi-year lows, which makes all the sense in the world when you put those things together. And the real question is whether, you know, you're kind of underpricing some kind of a deviation from this magic soft landing scenario that we're now re-embracing. We are, you know, maybe getting overbought a little bit in the indexes, and we'll see if that matters or not, if you just have to fight your way through it. But for now, boring markets have been bullish markets, and this is it's a quiet start to this week.
Interesting that Diamond is
I don't
saying
know
he's
about a quiet start.
cautiously pessimistic on a day where his stock hits another record high.
Well, it's what I always point out when Jamie likes to come out and point out the potential big risks. And of course, that's how he runs the bank, is being ready for unexpected bad times. And he's been rewarded for it. So why would he come out and be enthusiastic and saying all boats are going to be floated and you don't have to worry about prudence because the economy is going to rip and the risks are low, when his own stock actually has a massive premium because of that conservatism, but also leverage to all the big themes, because it is this sort of better than most in all of its businesses. So I feel like that's a perfect kind of cocktail for him to continue to serve up.
I'll see you on closing bell as we'll take our viewers through the last hour. And
So some of these storms I was watching
next,
last night.
We're trading 2 big winners and 2 big.
He's done talking now. I'm just wasting a couple minutes till Microsoft, till the Microsoft stuff comes out. was watching these last night. I think the system that went through last night was so unexpected. Okay. What? What happened? Why is she screaming? I'd be like, yo, that is my ear, bro. Woman, if you don't shut the fuck up. Oh my god. We're just turning the car around and doing it. Oh, that's not good. Alright, maybe it was a little... It hit... No, I want to know what happened. I think it hit the barricade. That's crazy. I don't understand. Okay, so it was a News 9 storm tracker. Northwestern. Okay. So I wonder what kind of vehicle it is. Need a driver in there. But I think they hit the barricade. You can see there, but I don't think they did. Look now. And then they hit it, I think, coming right there. I think they spun into it there. And that's when they flipped them. You can see the barricade slightly. Great. Oh my god, lady. Please, bro. That's screaming. I can't do it. I just can't do it. See it right there. So was that last whip around. Gotta take him to driver's school. Damn. That's a big truck. Oh, they were bales that were blown across. Oh, yeah. Yeah, it'll do that. So, again, I think this is the girl I was talking to yesterday, where these storms were not, this thing put down like 4 or 5 tornadoes yesterday, and one huge wide one, I'm pretty certain. But nobody was really expecting this yesterday.
I know, but I couldn't tell if it was the house or on the corner. Oh, Jesus. Oh, there goes the transformer.
Again, so we have just a couple minutes before this Microsoft thing starts, guys. I'm just wasting some time.
This is amazing.
I know.
Wow.
It is.
Yeah, there's going to be supposed to be some like throughout the next couple days. Oh, what is this? Got me home safely from downtown through a heavy thunderstorm with tornadoes that rolled suddenly while on the highway. I wonder what happens if something happens if the driver could take over. Do you guys know anything about that? Because what if something were to happen? Can you take over? Look, there's no driver. Humans are being eliminated again. You just gotta start learning robotics and being able to. You have to learn the, the stuff that powers the stuff. The programs that power it. That's so crazy.
Down in Texas, clouds are rolling.
What? That's crazy cool. I wonder whose car it is. Like, do you buy it and you just rent it out to the public?
Joe T, Axon Enterprises, they said the ITA, make sure you put in a tight stop.
All right.
200% last 8 years.
All right, I'll see you in a couple hours on closing bell. The exchange is now.
Thank you very much. DELL, Dell, to the exchange. I'm Kelly Adams. Here's what's ahead today. The consumer is doing just fine, even on the low end. Two of our guests are making that point today. One of them says it takes cuts off the table until at least December. The other says shares of Dell getting a small pop here now. Both are here to explain, and we'll look at how to position as a result.
Look at this shit like it was getting thrown quick.
There's one name they say that may even benefit from it. You're looking at the chart there.
I think that video was from a few days ago.
A tornado went through downtown Houston and blew.
Oh, wait, whoa. Did y'all just see that? Look at that.
A tornado went through downtown Houston and
snap, bro.
blew out all those windows. All the brown spots.
Wow. Look at that.
But I'm going to put a couple stars up there right now because earlier today,
Mm.
the Dow Jones Industrial Average hit a record.
You're pretty much putting a brand new face on the front of that building. Look at all those windows busted out. That's wild.
Are all
it's lucky somebody didn't get hurt with that shit
by the tornado.
Falling off They were talking about the inflows. Like, look at that. That's insane. Some of these weird like the wind that is getting pulled into the tornado, and some of those could have been up to 100 miles an hour yesterday. That's pretty wild. This season's been crazy.
Copper again, up 0.5%. We'll put a star there. COMEX gold futures also hit a record high today, both up about 0.5%. Keep an eye on the VanEck Vectors Gold Miners ETF, ticker GDX, which is also up 2/3, 0.75%. And some of the bigger commodity ETFs that have a lot of futures exposure to multiple types of commodities, like the Invesco Optimum Yield Commodity Fund, PDVC is the ticker there, also up about 0.75%. And Kelly mentioned NVIDIA. It's arguably the most important stock in the entire market right now, and certainly it will be this week because it does report earnings after Wednesday's
Look at that.
And check this out, it's up about
There were some nice pictures yesterday. I know I can get back to the markets if anybody's wondering anything, but yesterday was pretty nuts. That's such a nice picture. He's right underneath the power lines, though.
in the move for the stock after the earnings are released. Over the last 8 reporting quarters,
I always wanted to go see a supercell. Look how massive this shit is. Look how massive that is. And look at it all just rotating. It's just rotating, and look at that scud in there.
Yeah, Dom, thank you very much, Dom Chu. Meantime, the latest New York Fed consumer survey showing a slight but not super meaningful slowdown in spending. It shows monthly household spending edged down to 4.6% growth in April from 5% in December. Still, that's well above pre-pandemic levels.
So you could picture what I was talking about a little bit ago. Okay, I'm not a meteorologist or anything, but if you see this picture, right, and you could see let's say it's spinning counterclockwise, or yeah, counterclockwise. So this way it's coming in and getting forced and sucked into it, right? Or you could counterclockwise, right? The wind that's getting pulled into the system, they said yesterday was about 100 miles an hour. It was snapping and taking down trees yesterday, and that was just the air and wind that was getting sucked into the supercell. But anyway, we'll get back to the markets. All right, let's go see what Microsoft has to offer here. We're going to get some news there.
Yeah, I just don't see that. I think what we're seeing is inflation.
Let's see.
Core services are up over 5%. Ex-shelter, throw in shelter was up nearly 6%. And if you just look at what Dom talked about earlier. When you look at China coming online and now Europe out of the recession, there's a lot of demand for natural resources. I think prices go higher.
All right. Those asset classes to benefit from higher inflation. Give me 1 second, guys. Just give me 1 second. Give me 1 second. 1 second. 1 second. What are we doing here? All right. Hymns. Shit.
Yes, I think that's correct.
Damn, Qs are climbing. Look, the SPY isn't participating at all.
Looks more favorable by December with slower inflation and
All right, let's go. Microsoft. That's all right. Microsoft. Amazon, Qualcomm rallying. JP Morgan. Dude, look at this. It's already at 199. Are you serious? Fuck. This thing's going to be down. Oh my god. How did I not take this when I had the chance? I still think it's going to 198. I still think you have a few dollars left on it.
Microsoft's use of MIDI says 50 million AI PCs will be purchased in the next 12 months. That at the press conference.
There's a difference between macro and markets. If you look at the firms that have reported negative earnings, for example, some of them were in food services, right? For sure, food services was down 2.7% on a real basis in the first quarter, but it's only about 6% of consumer spending. So it doesn't break the back of the consumer, right? So
bro, is it going to be live now? It said they weren't going to stream it. Just give me 1 minute, guys, and we'll get going with this. Just give me 2 minutes. Let me eat real quick. Let me get something down. I'll push play. Just to keep y'all here. If you could, hit the like button, please. Please hit the like button. Please subscribe. If you have questions, please don't hesitate to ask.
These higher rates is that a lot of them aren't really having much of an impact when it comes to the channel of the mortgage market.
Right, or even benefiting. A lot of people making money on their cash for the first time.
If you guys want to donate, you can.
Your
All the
thing
above.
is not
You want help? If you want me to help you trade and be able to do what I do,
Yeah, this does not look like
you know,
a
it's going to take some
stagflationary
time. I
shock.
can't
What
really
we've
say
seen
do
is
what I do
stagflationary
because you might not
shock
be able
is
to do what I
relatively
do.
weak
But everything we said
demand,
today, man, just turned
relatively
out right.
weak
You just had to be
spending
quick on the
driven
entries.
by
Just had to
higher
be quick.
inflation. What you're seeing right
quicker than
now
that.
is spending.
Anyway, I love y'all.
Well, the last
Hit the like button, subscribe if you feel like it. If you want to.
Services have been very strong,
Get me
and
up
that's
out
been
of these
accompanied
trenches.
by strong inflation.
Get me out
So
of the
it's
trenches.
Strong inflation-adjusted
and let's-
spending and elevated inflation. You put those two together, and it looks like
I don't know.
demand shock. Stagflation is a negative
I
supply
don't know
shock,
what's
more
going
like
on with the
what
damn
you saw
sound
in
now. Sorry, that
2022.
threw
And
me
then
off.
going back
It
to
just
the
threw
point of the
everything
Fed,
that I was doing
that
off.
makes the policy prescription for the Fed, right? Because
Oh,
monetary
wait,
policymakers are used to dealing with
go.
demand shocks. You lean
That's my
against
bad, gang.
the
That's
strength
my
of the
bad.
economy. You lean
Yeah, try
against
turning the volume up.
the elevated level of inflation by keeping rates restrictive. And I think the point that Steve made is important. Very consistently, you're hearing from Fed policymakers that policy is restrictive, right? There may be disagreements on when you start cutting, but the longer they say that we believe that policy is restrictive and the longer that they stick to that line, the more inertia there is about potentially hiking again, and the more comfortable markets will feel about pairing off that tail risk of additional.
And if the market comes around, then they'll kind of continue to tighten a little bit for the Fed. Michael, I'll give you the last word here because, as mentioned, you are in a lot of these asset classes that would seem to benefit from higher inflation and higher rates. How long do you stay in that trade?
Kelly, I think you stay in the trade till it doesn't work. What's happened is most of Wall Street is they're under allocated to commodities, they're under allocated to mining. I mean, we know obviously there's a big company reporting earnings on Wednesday. That's all the talk. You can make a good amount of money. Commodities this year have outperformed the S&P 500. You can have that in your portfolio. Insurance stocks have done quite well. It doesn't mean you have to abandon growth because obviously NASDAQ growth up 20% year over year. But I think you can allocate to other places that are going to do well. If in fact inflation does continue to move higher as it has the last 3 months, having a portion of your portfolio there makes sense given the fact that it is performing and it's a contrarian play at this point.
All right, we'll leave it there, gentlemen. Thank you all for your time today. Michael Landsberg, Aditya Bave, and our own Steve Leisman. Let's pivot now to talk about tech. Microsoft CEO Satya Nadella announcing a new class of Copilot and PCs in a keynote speech ahead of the Build Developers Conference tomorrow. Let's get over to Steve Kovac with the details. Steve.
Hey there, Kelly. Yeah, you nailed it. CEO Satya Nadella just revealing what they're calling Copilot plus PCs. This is the next step in these AI PCs we've been talking about for much of the year. Basically, they're claiming that these PCs are going to spur a big upgrade of PCs. They even said they expect to sell 50 million AI PCs across different manufacturers throughout the year. And just some new additions here. This is going to obviously focus around the Copilot assistant. These computers are going to be made by a variety of manufacturers, not just Microsoft, but we're expecting to hear from HP, Dell, and so forth. And also a big part of this is going to be OpenAI. You might remember last week, OpenAI released its new model, GPT 4o, and that is the one that lets you kind of have a natural conversation. They gave an interesting demo here, Kelly, where they were kind of having a conversation with ChatGPT about a Minecraft game being played on the PC, and ChatGPT kind of giving tips for the game and things like this. Just one example of how they really see AI playing into the device. And that was also a big question going into this event. The hardware is easy to understand, Kelly, that you can make these PCs as powerful as you want, but if it doesn't have compelling software, there's really no reason to upgrade. So that's what they're going over now, what these PCs can do on the AI front that are going to spur these upgrades, Kelly.
It's just fascinating, Steve. You and I grew up at the same time with Microsoft being the cool kid in those ads that were so emblematic of, maybe you can remind me if I can't, the dorky guy was the microscope. Are we at an inflection point where all of a sudden Microsoft has the cooler gadgets? I mean, not than the iPhone, not in the phone category, but at least on the laptop front.
On the computer category, that's what they're trying to show off here. Now, of course, we're going to hear Apple's take on this in a couple weeks at their developers conference. But today, what they're talking about is, yes, they're claiming these computers are better and faster than the MacBook Air that just came out a couple months ago. They're claiming better performance gains. And of course, the MacBooks just don't have those AI features that they're showing off today with Copilot. That doesn't mean it's not coming soon. Again, expecting that to come up in a couple weeks here. But for now, yes, this is them saying we're cooler. We got the AI features. This is the only way you can experience OpenAI natively on a PC and things like that. So for sure, this is them making a really big bet and saying it's a new device category.
Is that true, Steve? Do you have to get one of these new PCs to benefit? I mean, look, AI is fundamentally software. Do you need new hardware to really get the most benefit? Or maybe for the average person to just, be able to take it to the next level?
That is going to be one of my very first questions. I'm chatting with Consumer Marketing VP Yusuf Mehdi here next hour on Power Lunch with you. And that's going to be one of my big questions. Okay, this is great. You have all these new features, but what about the tens or hundreds of millions of others out there who have older PCs still running Windows 11 and using Copilot? Does that mean they miss out? When do these features come to them, or will they come to them? Or do you have to run out there and spend $1,000 on a new PC? That is a big question, Kelly.
Perfect. We will see you then at 2 p.m. for that discussion. Steve, thanks so much. We appreciate it. Steve Kovac.
Thanks.
In the meantime, Tesla is down nearly 2% after another round of price cuts in Europe. Speaking of Europe's rate cuts, and this as cheap Chinese autos are also continuing to gain global market share. But my next guest says China's rise isn't all bad news for U.S. auto stocks, and there's one name that could actually benefit from it. We'll talk about that next. Plus, Black Swan author Nassim Taleb on the markets, the economy, AI, where he sees the biggest risks emerging. He joins us live right here in studio ahead. Stay with us on The Exchange.
This is The Exchange on CNBC.
What in the hell are these goofy ass shoes he's wearing? It's okay, it's his life. I'm just asking. What made him say, yep, I'm picking these? Not only I'm picking these, I'm going on stage with these bad boys. I'm going on stage with these puppies. Holy. Listen, man, I love y'all. I appreciate the whole 6 likes that y'all gave me. I really do, guys. I do appreciate it. I'm just taking a brief minute to just kind of just do something different other than the market, because it's getting ready to be 2 o'clock. Having a little bite to eat, but we're gonna get right back into it. Kind of just looking around, seeing what's going on, news, something other than the market for just a couple minutes, and then we're gonna get Yeah, we're gonna get back to work.
Where activities where showing a photo ID is activities where showing a photo ID is not racist. Buying a car, buying a home, renting a car, applying for a mortgage, purchasing cigarettes, purchasing alcohol, opening a bank account, applying for a job. Activities where showing an ID is racist. Voting.
How did I know they were going?
Activities.
Wait. An Australian pension fund.
So there's a good story to tell about Borg Warner. Let's just cut right to the chase. What is it?
Sure, I mean, we like
Oh no, look at this. At Google Cloud, including all its backups that were stored on the service. Google Cloud event wipes out customer
Welcome back.
account
Look at shares
and
of
its
Tesla
backups.
down 1.5% today. Reuters reporting the company is offering discounts to some European leasing companies. Just the latest price cut from the EV maker. They cut prices as recently as last month in a number of major markets, including the U.S., China, and Germany, as they fight to hold on to market share. But my next guest says Tesla's pain could at least be one auto supplier's gain. Joining me now is Colin Langan, automotive and mobility analyst at Wells Fargo. Colin, it's good to see you again. Welcome.
Yeah, thanks for having me on.
So there's a good story to tell about Borg Warner. Let's just cut right to the chase. What is it?
Sure, I mean, we like Borg Warner for numerous reasons. So we just did a big deep dive into the China EV risk. And I think they're really one of the few auto companies that stands to benefit. About 70% of their business in China is with the locals. And we really believe that those are not only going to continue to gain share within China, we see a pretty big risk of the Chinese locals expanding around the world. We highlighted in our report there's 11 million units of excess capacity in China today. That compares to global demand of 90 million units. The Chinese just really have a strong advantage, not really in the labor cost, the hourly labor cost. Really, I think what people don't fully appreciate, it's in the R&D. They're able to churn vehicles out in 2 to 3 years versus developed market automakers that are doing it in 5 to 6 years. That's a huge advantage from a cost and a pricing standpoint.
Well, that flies in the face of those who would insist these tariffs are because China is dumping EVs. And I think in some markets they have to kind of prove that in order to levy those kinds of tariffs. Here in the U.S., I don't think we have to prove that, right? We can do it effectively, do whatever policymakers want.
I see a few that are missing.
Well,
here.
I think when I look at the China EV risk around the world, there's
I have a
definitely the
question.
risk
What the hell
of
is
the domestics
Movado
that are
and
playing in
Fossil
China
doing
probably
on this
continuing
list?
to lose share. They lost about
These two shouldn't even be
14% market
here.
share since 2020. I think that
These two
trajectory
really aren't
continues.
even watch
But I think GM, Ford, Stellantis are all global companies. So there's risk in South America particularly, where I think China's gaining footing. BYD is going to be opening a plant both in Mexico and Brazil. If you go to Europe, which is a market that does not have a lot of protectionism currently, you're talking about they're going to build a plant in Hungary, and we're seeing a rapid pace of exports. China is now the biggest auto exporter in the world.
Well, and it's an area that, of course, completely threatens countries like Germany, like the U.S., where we've had these really critically important auto manufacturing.
Oh, look at the
businesses.
Apple Watch.
Thank
I
God
didn't even
for Tesla.
see it.
But even they, it sounds like, are maybe not price competitive or competitive in other ways. So
That's funny.
For U.S. investors, what do they do with the big
That's
automakers?
funny.
Do they have to kind of stay on the sidelines while this wave of innovation plays out?
I mean, I have underweight ratings on all of the Detroit 3 and Tesla. I do think that it's a pretty tough time to be involved with the automakers. I mean, you have pricing pressure, you have EV pressures, you're forced to ramp due to regulations. And I think as you go to the midterm, the China emergence is a big risk. I mean, BYD went from 400,000 units just 3 years ago, and it's supposed to sell 3.7 million units this year. It'll be a couple 100,000 away from Ford, which is pretty remarkable, and really shows how quickly these companies could be catching up to the traditional automakers.
Is there anything that the traditional automakers can do at this point?
I think one of the fundamental realities is I think they have to think about R&D and how quickly they develop and invest in their vehicles. I think they probably need to improve the refresh rates, particularly in China, but they're really going to have to think about it around the world, getting products to market faster on a faster development cycle, which is a fundamentally different way from where they've historically thought.
Yeah. Well, it's kind of a grim prognosis, honestly, and you do worry about Tesla, and the stock price reflects that as they struggle to keep up. Let's talk about one of the few winners that you do identify. We talked about Borg Warner a moment ago. The American company, are they not? Are there any others? And just how much upside could they have?
Well, I mean, for Borg, China is one of the many tailwinds that we see for Borg Warner. They are, a company that has, 15% of their sales with electric vehicles. I think they're going to see a big boom in their e-powertrain business. They're very well positioned there. I think they're going to be a top 3 to 5 supplier in some of the key growth areas. They're also trading at a discount to their historic multiples.
They do drivetrains
so they're at a
and
good
stuff
valuation.
too?
They benefit from the full hybrid theme. They have a lot of, strong balance sheet where they continue to do buybacks. There's a lot of levers they could pull, so I see significant upside in the stock. And it's our top pick in the space.
All right, and I'm like a dog with a bone. I just can't let this go. So my final question is there something more that policymakers could do? The Biden administration has tried to push this EV transition to really push the automakers in that direction, but it sounds like it's been.
That sucks. I should have went short with you guys here and just. I had a feeling we could have at least taken it to 198, and I just didn't do it. Just didn't do it.
Commodity
Been
space.
all over the Rangers.
Well, you have been all over the Rangers, but FCX
Sure,
is a name
throw that up.
It's been a final trade on CNBC for the better part of the last year. You see what's happened. That's a 5-year chart, okay, that we're looking at here. It just broke out above those highs from early 2022. That's the last time we had this commodity cycle, right? We had the Russian invasion of Ukraine, and we saw lots of different commodities going berserk. Look at this longer-term chart, guy. This is a 20-year log chart. And so I say to myself, you know what, 60, 62, you know what I mean? That sort of thing is pretty good. You've been long this thing. You've been playing this breakout over the last few years.
Nice
you might want to think about
downside.
Expressing a bullish view in a different way. But give us your bullish take here. And do you think there's a potential for a monster breakout above those price
Well,
highs?
I mean, I think we're now at 16-year highs, right? I mean, Amanda has the chart up. So here we are. What do I think? Do I think we could blow through there? Absolutely. It's a better run company now than it was even 5 years ago, let alone 16 years ago. And you're talking about copper prices that, that we haven't seen in quite some time. So copper is clearly something going on with copper. I mean, there'll be people that say, you know what, it's a blow off top. It's going to back and fill. Yeah, maybe. Or maybe there's something fundamentally going on. By the way, it is a supply demand situation. I mean, the supply is out there, but 3 years from now, we're talking about deficits if you read some of this stuff, and the demand's not going away anytime soon. With that said, I mean, I think we're going to continue to sort of blow through. We'll see. I think we're trading 55 and change now. My target all along has been sort of those levels we saw 16 or so years ago. I think there's a very good chance we get there.
Listen, this is a great looking log chart. It looks like it's going to break out. One of the things I would just say is, like, we talk about this in stocks, we talk about it in futures, we talk about it in ETFs, the idea of raising your stock. So when you consider a stock replacement strategy, you're basically putting a stop in to the downside. The premium that you're willing to pay for that long exposure, is that stop. So I look at this and I say, I see what you see, guy. This thing could break out in a big, big way. If that was the case, then the idea of just buying a call makes some sense, and you just let your profits run and you define it. But let's just look at a call spread, shorter dated here. The stock was trading around 54.20 or so today. Looking at July expiration, you could buy the 55.60 call spread. It costs you about $1.70 buying one of the July 55 calls for about $2.95, selling one of the July 60 calls at about $1.25. That $1.70 is your max risk. You break even at 56.70. You have gains of up to 330. That's basically 2x the premium that you're spending between 57.60 and 60 with a max gain above that. You're only risking that 170 between 56 and 170, or 56.70 and 55 to the downside with a max loss of 55 to the downside. Again, you're risking about 3% of the stock price. It breaks even up about 5%, and your max gain is, up $6 or so. So it's a little tight Okay, I would say, because this would be, you feel kind of stupid if you got an epic breakout, and maybe you tighten this up, maybe you go to June or something like that. But again, if you thought this had the potential to, let's say, pull back a little bit and maybe a sharp pullback, the idea of replacing the stock with a call spread makes
That's
some
right.
sense.
It's creative, right? I mean, it's a creative way because, again, you're effectively getting out of your stock, right? And then you're just giving yourself, so you theoretically you have profits in the underlying stock, and then you're giving yourself some upside here into potentially an event. We'll see in terms of the commodity. It's sort of next level options trading, and this is something you're very good at.
Yeah, I mean, listen, you don't want to litter your portfolio with a bunch of long premium, hoping that stocks go up if you're owning calls, or hoping stocks go down if you own puts, that sort of thing. But again, look at the sharp move the stock has just had over the last few months. This makes some sense. Like, listen, you could look out to July expiration and buy the 55 call for about $2.95, but then your break even is at $58.95. The break even is much higher, right? And then the premium that you have at risk is much higher. So to me, this makes some sense, guy.
Very cool. By the way, trading options might be new for you. Maybe been doing it for a while, Dan. Either way, Fidelity is your go-to source for clear and relevant information about trading options. For example, ask Fidelity professionals questions during their live small classes and coaching sessions and learn more.
Like I said, just give me just a couple minutes, guys, and we'll go ahead and we'll go over some charts and stuff here. It's almost 1:30. It's 1:30 now. Give me a couple minutes and I'm looking at the overall markets, right? The SPY broke this pivot low. Q's already rolling over as well on a big increase in volume. So, matter of fact, let's get busy. Let's get busy. Give me 1 second. I would like a bounce back here, guys. I would like a bounce back to the 90 MA if we can get it. I don't think it's going to give it to us, though. So the Dow is hurting. IWM, QQQ is doing alright.
Season.
Well, kind of.
You know what I like most about, and we got to get out of here. Put that up full screen, by the way. One of the great lines in cinema history is, "Let's be independent together." That's brilliant.
Yeah.
No, it really is.
No, it is.
Because,
It's deep.
both guys are a little freaked out about things.
Deep.
They want to be independent,
It's deep.
but let's be independent together. You remember that?
Yeah. It's deep.
Are we on social media?
We're on the Instagram.
Well, why don't you put that slide up
We're
and
on
check this out? I mean, we got all kinds of places you can follow us.
Hey, by the way, our team just started putting up a live video of Market Call on the Twitter. And again, yeah, it looks pretty good on the Twitter. So, follow us on the Twitter, follow us on the Market Call YouTube page, follow us on Instagram. We got a lot going on.
By the way, you ran through a lot of trades there. If I wanted to get them in my inbox, can I do that too?
Yeah, you know where you could go. You go to riskreversal.com, and Amanda and Jacob and Timmy, the whole team, they send out the show notes, okay, a lot of our charts and more detailed information about the trade ideas. So go there, sign up, get them to your inbox, guy.
We got a big on the tape podcast coming up this week on Friday.
Yeah.
So should we even tease that?
Yeah, we got the Wall Street skinny, the ladies from the Wall. These guys,
they're badasses.
They're badasses, and the education that they're doing about our business is really fascinating. I don't see anybody else doing what they're doing.
No.
I'm also, right when I get off of here, sitting down with Gene Munster. Gene is the managing partner at Deepwater Asset Management. We're going to do a deep dive NVIDIA preview, we're also going to go over some of the stuff going on in the Gen AI space and how that might play for Apple as they work into their worldwide developers conference on June 10th. A lot to cover. Follow us, stick with us here, people. Guy's going to be back tomorrow with.
Like, look at this. Are you serious? You're kidding me, right? Like, just go look at the daily chart for NVIDIA, and just look at their money. Just look at the money that they've been pulling in. Look, the corporate. Oh, I was gonna say corporate actions are going because I randomly might have hit it with the like. I guess the little one's hungry again. I guess I'm gonna have to go feed her. 50 cents, and literally last year you go from $1.80 or 88 cents to $2, and then from 2 to 3, from 3 to 4, from 4 to 5. Like, what? Why would you short that company? That's probably the dumbest shit I've ever heard of. Just asking to lose money. A company that's growing net worth and selling more and more, quarter after quarter, quarter over quarter. Come on. Come on. Now you can dig in and say, oh, but their margins are this, that, the third, which they could be good, they could be worse, they could be better. I don't know. I'm just saying you could dissect it and make it look however you want it to look, but just wait. I think it's just too early to be trying to do stuff like that. Do I think it's a little expensive? Yes, because I've been in the markets for years and you could have bought this thing a lot cheaper. But is it expensive as far as from like what's really going on? No. We'll find out. But you just tripled earnings. Right? You just tripled earnings. They got a lot of cash on hand. And that is what it is. So you can't get around that one. Alright, JP Morgan pulled back. 198's our target. And you're about there now. Really, you could break this up into two places, right? This prior support level here at like 199.20s, which is you see it wicking here. We're good. And then support, so this little area. Just an area, right? Just an area. You have a gap fill right there. So that would be the right there. That's take profit. Lunchtime. Bada bing, bada boom. And lunch was on them. Lunch was on JP Morgan and crew today. On the 32nd floor it was. So, alright. So markets are pulling back. Alright, markets were pulling back. We did slightly take a very small short position. That was a break-even trade. Break-even. Tight stops. I think I might have made a penny on a contract outside of paying commissions, so no harm, no foul here on this ascending wedge. Looking for a pullback. Just a little pullback to VWAP. We kind of didn't get it, but that's okay. Right? When you trade options or when you do things like that, you got to try to time the market, and sometimes it has other plans where it needs some time up off the clock. Alright, so Microsoft long. What else were we long? Amazon off the bell. Tesla short. Tesla 172. Everything is working out. GDX long. I did not look at CCJ, but I tell you what, man. This is probably one of the biggest trades last Friday. That this paid like GME. And I wish I was just a little bit behind. I caught it just a little too late, but it's all good. It's all good. Matter of fact, let's check in on GME. It's 1:30. We have a couple more minutes before 2 o'clock. Once again, pop it pre-market. Sell it off during the day. That's a shame. I feel bad. I feel bad for people that are losing money on that. Robinhood, don't forget about the double upgrade. We talked about that this morning. Shook you around a little bit. Put in a small little, cup and handle here. You had a nice breakout with volume. We wrote down 1975 was the buying? Was the buy? 1975. Right there, that line. 1950 to 1975, right there. So we said, hey, and this is a trade that we want to look for a couple days, right? If we can catch it on the right, we want to have the market behind our backs, okay? If we can start breaking above 2050 and close above there, we have nothing stopping us to 24. So that trade this morning was, was to, let's say, risking $1 to make $4. All right, well, we're not going to go wrong there. And we didn't, you could have cut that in half, right? You could have waited until 1980 or so, right? Coming down into here. But 1975 in this green box was our buy zone. So right now, 15-minute chart is underneath 90 MA. Look for that to start turning into resistance. You tried to make 2050 support. You broke that. You were unable to rally off of it. Now it's turning that and the 90 MA into support. Looks like these markets are about to start turning to the downside for whatever reason. Whether it's taking profit, it's just weak. I don't know. I can't answer that. Let's see here. Let's go look at Tesla. Tesla's been doing the reversal of like what the market's been doing. At least it's been tending to. I mean, it's been in a downtrend, but the markets have been screaming up, and it's just like it's not even ironic that every single time the market tries to pull back, Tesla tries to hold and rally. Like today, it was like, what are you doing? What are you doing, Spy? I was really hoping we could have got not an island reversal. I don't know why I keep saying that, but an inverse head and shoulder. Even though the volume wasn't there, I was like, come on. So what do we have? What do we have? I guess the overall markets, right? That's probably what if I were to trade something today, I would try to look for an overall markets type of trade, because I just don't know if you're going to get individual stock news to really get that moving. JP Morgan's already gone. GDX, you would have already had to be on that. Alright, let's see here. Let me go here. Let's go here. Let's zoom out. Alright, so
Okay, I would obviously to the investor to basically ignore what's going on in the Middle East and to the individual to worry individually.
Alright, so look for, once again, right, the SPY. Tried to get up above 530.80 and could not hold it. So let's look for a bounce back into this area. It may not even give it to us. Like, let's be honest. It's probably not even going to give it to us. Did you guys hear about, real quick, I don't mean to change the subject. I really don't. But did you guys see and hear about that Aiden Ross stuff, and that the guy that they got, well, he was like practically a kid himself, the 24-year-old. In my opinion, is it okay to go after a 15-year-old? No, it's not okay. All right, I think we all know that you're putting yourself at risk there. But if you're talking about a kid that's trying to fool with another kid, it's like, you know what I mean? It's kind of like, bro, the ones that really deserve, or actual old people going after kids. But anyway, bro, the kid had HIV. I'm like, it's just sick, man. It's just sick. Sick fucking world we live in. But when you do those type of things, it's kind of what you're putting yourself risk at. So yeah, that just came out. I just randomly seen that on YouTube or whatever. I guess a couple nights ago, they were doing the little frog, or yeah, like I'm surprised it's not on here. Yeah, right here. So yeah, this kid here, because that's what he is. He's 24, 23. It's crazy. Had a disease, HIV, trying to give it out. Anyway, let's move on. Sorry about that. If you guys have trade ideas or anything, and GG's for them for doing that stuff, because again, it's not like the police and everything are doing anything about it. They do have their hands tied. It's not like they're not doing anything about it, but
Exactly. And if you run historical correlation, backwards, in other words, we start from 80, predict correlation between 80 and 90 based on what you had until 1980.
I do have a video I'm trying to watch. Man, if we could just start breaking these levels, guys, we could have some nice downside before this NVIDIA earnings. That'd be so sick. Like, just to get like a nice scalp pullback. We have banks pulling back. I don't know about healthcare. Let's go to the oh shit, I forgot about Coinbase. Excuse my language. I lost my AirPods. The freaking predators must have taken it.
So in other words, you can run history where the one on the bottom does well, history does poorly, the one on top is
freaking jerks.
you don't need any opinion on anything.
Oh, my little baby. Alright, so look how red we are, guys. It's starting to like you can see it like growing like a tree root. Like these industrials were red last week, but you can see it spreading to technology. It's like, watch out. Like it's just like a, like a horror movie, and it's like spreading northwest. Don't get mad at me, Kanye. I'm just saying northwest, okay, in that direction. I don't want no problems, B. Signs to cut back on alcohol. Okay, for someone that doesn't drink, that's cool. Alright, Chubb is down. That just sounds weird. Chubb is down. That just don't make no sense. Alright, semis are doing really well. Netflix, I think there was news with Netflix. Let's go see what some of these movers are. Let me turn the scanners and stuff back up and on. We're coming in at 2 o'clock. Keep an eye on the SPY and the overall markets. SPY did not participate. The S&Ps did not participate. Let me throw up the 1 minute. Give me my volume. The reason I used the 1 minute here is because I like to see, I want to know what's going on underneath. Come on.
A lot of people think that it's going to bring monstrous productivity, and it's just like a gambler who thinks that suddenly you may be able to come back and cover all the losses back. I doubt it, but nevertheless, it's a possibility. Okay, and I don't want to depend on my opinion. See,
I don't need AI to do good at winning, and I guess you could call it gambling, but I stay in my lane. College football. Yo, guys, I have had a winning season for the past 6 years, ever since I started. Proof is in the pudding as well. I take my pictures of the tickets I have to turn in along with the losers that I keep. It's really not hard. Again, I like college. I prefer college. You just have to know how to do it. You just have to be able to know how to come up with the numbers. That's all it is. Watch the games. Let's see here. Alright, so here we go. Watch the SPYs, the S&Ps. So here we are. You're rejecting pre-market highs. You're below it. You're going to find out if we're going to reject it, I should say. Let me put up. I don't know what I should put up. If I should put up a 2-minute chart, a 3-minute chart. I would like to get another test up here, VWAP, on the SPY. Again, I'm just trying to get, I just want to get a nice little green trade in. You know what I mean?
Thank you very much for doing so, keeping the streak alive. He's Distinguished Advisor at Universa.
Just give me 1 second, guys. Keep an eye out for... There's a lot of names that are just like really... that have relative strength and relative weakness. From Baba, Robinhood. Keep an eye on Coinbase and crypto. That Wells notice seems to have messed that trade up. JP Morgan still pulling back. GDX to the upside. Nice play. AI was not AI, but AG with that silver news, just hanging out up at highs. Amazon and Microsoft, they all did the moves in one day, or like right off the bell, which was testing. Damn. All right, so Amazon actually is pulled back to the 20-day again. All right, if Amazon bounces back to low a day, that like 184.50 area from 184 to 184.50, I'll probably try for a rejection up there and look for more downside into tomorrow, because I feel like now Amazon is trying to get down to 182.50, and I think we can get that. Damn, there's so much opportunity. It's like, where do I start? It's like there's so much going on. Everything is moving. Everything. Qualcomm. Look at Qualcomm. Relative strength. All right, monster day. So, Tesla's just hanging out. I kind of thought Tesla would have consolidated there. All right, I said look for Tesla to consolidate, but I figured it would follow this trade line and start to work itself back down to the low 170s. And I don't know, it's kind of holding up. So if the markets pull back, pay attention that if Tesla ends up holding, if it tries to go higher, see if you start seeing and paying attention to the divergence between Tesla and the SPY. When the overall markets start to pull back and Tesla goes higher. It's just the weirdest thing. It's not weird, but it's just what it's been doing. I lost my mouse. Okay, there it is. She's got all kinds of stuff going on with her. Whatchamacallit? I swear to God. Bro, I swear to God. Says I could get it, bro. I'm not even playing. Oh, Halo. Alright.
I guess space growing. Is this a situation where while it might be growing, it's growing at a far slower pace than many expected a couple years ago? And it's perhaps a tide that is raising itself higher so slowly that it's actually somehow lowering the boats? Because I see Lee down, Tesla down, XPeng down. You go down the list, they're all red today.
It is, and that's the thing. Obviously, this is creating a cascade effect, a sympathy play on all these auto manufacturers. I mean, there's some other weakness in the Chinese stocks today, so that again might be part of what's going on in correspondence with these particular names. But nonetheless, if you look at Li Auto relative to some of those others, particularly NIO or XPeng, this company has actually performed better than those others, and it really has to do with the financial establishment of the business versus the production capabilities of this business. So, out of the three, let's say NIO and XPeng, Li Auto has been one of the better performers, even though they're all down today. Because, like I said, they're profitable on a GAAP basis, and you can't say that's the case for instance, XPeng or NIO.
50-day.
It was a pleasure. Thanks as always, Senior Markets Correspondent, for joining us here on the program. That'll do it for Under 30 as well as the show. For Diane and myself, I'm Alex Coffey. Thanks as always for tuning in to the Schwab Network and Next Gen Investing. Coming up next, we got the watch list, Nicole Petalides. Stick around. We'll see you tomorrow.
It's too loud, just let me know.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. We started out with Dow 40,000. We had up arrows and some new records, but have since turned into the red. We'll go over a little bit about what's going on in the markets. In the meantime, on today's show, Pete Najarian's with us, and we'll talk and preview some of the earnings and dive into those bank stocks, some of the recent strength we've seen there. JP Morgan hit an all-time high today. We'll be joined by the Vice President of Choice Hotels, extended stay live at the New York Stock Exchange. Looking forward to that conversation. And our panel updates us on the Microsoft Build conference. Let's take a look at the numbers. So as I noted, you can see that the Dow has turned into the red. So it's down 1/3% off the 40,000 mark now, 39,880, but did close above 40,000 on Friday. Financials, also energy in the red today, as well as consumer discretionary. S&P is holding on. That's up about 8 points at 53.12. The dollar, 104.45. Gold, 24.39 a troy ounce. Oil, 79.48 the barrel, pulling back off 80. And Bitcoin, 68,745, up 2%. For some of the biggest stories in the markets, let's welcome in Kevin Hanks, host of Fast Market here on Schwab Network. And everybody, of course, listening in for all those speakers, the Fed speakers. And anytime we start to hear some of the language, that really jostles the market too. What are we hearing now?
Hey, Nicole. Yeah, the reason you've got so many Fed speakers is the Atlanta Fed is putting on their National Markets Conference today, tomorrow in Amelia Island, Florida. So that's why you've got as many as 5 Fed speakers today, another 5 or 6 tomorrow. They're all speaking in a row. So we're getting some comments out of them. Raphael Bostic, who runs the Atlanta Fed, who's hosting that conference, was speaking early this morning and talking about inflation and talking about they need to see more information. He said maybe one rate decrease this year, but they're not sure. They need to see more data. He thinks the inflation so far this year has been very bumpy, were his quoted words. So I think he, like the rest of the Fed, Nicole, they need to see more data before they're ready to move on interest rates. And frankly, inflation has just been a little sticky lately.
Yeah, without a doubt. And even though it moderated in the last CPI print, because you had the 3 that were hotter and more sticky, but the big picture is no one's really seeing any cuts anytime soon.
Right.
Let's talk about those cruise stocks, because when you do look at the S&P 500, you'll see in the top 10 a lot of cruise names.
Norwegian Cruise Lines came out with a really bullish note that frankly has all the cruise lines higher on the day. Norwegian Cruise Lines currently have about 7.3%. They basically said they looked at demand, they looked at orders, and they raised their overall guidance for the rest of the year. Here's the numbers. They went from $1.32 a share in earnings to $1.42 a share in earnings. They said the full year outlook was lifted after seeing strong demand and record bookings. So the strength that we've been talking about in the Schwab Network all year with cruise lines continues into the summer, Nicole.
All right. Thank you so much. Kevin Hanks, great to see you. Appreciate it. And coming up next, we're going to talk to Pete Najarian. He's standing by. We'll look at those bank stocks and some of the earnings this week. We have a big show for you. We'll be right back.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. #1 broker here for the #1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest. with Schwab.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. Want to get a look at the big picture. We've seen new highs for the Dow, the Nasdaq, and the S&P within this last week. Joining me right now, Tony Drake and Associates, to talk about this market. You know, we had what happened in April and then reversed that. We had about 4 weeks of gains and new highs. What's going on here, and what do you see happening?
Great to be here, Nicole. We're really all watching the market. We saw this really exciting 40,000 number that we were all really looking forward to. Of course, it's a little bit off that today, but it's been quite a run if you think back to COVID 2020. Really some acceleration in the market. I think a main catalyst for the move this week was a relatively flat inflation report. That gave, although you might want to argue it's just one data point compared to a bunch of others, but that gave investors a lot of confidence. You look at that core consumer price inflation in April at 0.29, 29 basis points, basically in line with what people were expecting, and the year-over-year change being about 3.6%. So, I think investors are pulling out that magnifying glass. They're really looking at the charts, arguing that maybe disinflation is back, and that probably caused our rally.
So, yeah, look, you had the rally, and then now today a reversal into the red. You can blame different sectors. You can blame some Fed speak, whether or not people think a cut's coming or not coming. And often the market runs up before the cuts, not necessarily after the cuts, right?
Yeah, we've definitely seen that historically. And, I think when you think about these rate cuts, it's probably too much to say that this latest data is going to support rate cuts later this year. Maybe at best you might want to say the odds of a rate cut are touch better than a coin flip, but if you go by market pricing, the market seems to like it. But inflation data does confirm a couple things that the stock markets wanted to hear. I think the first is the odds of a rate hike this year are very, very low. Secondly, if unemployment was to pick up in the months to come, the inflation data is not going to stand in the way of the Fed, maybe getting a little bit more aggressive, and maybe that Powell put us back a little bit. So has confirmed a few things for us that I think is making the markets feel a little bit more confident, maybe a little profit taking today, but certainly it looks like it's moving in the right direction.
Yeah, I'm checking the S&P 500 year to date because, it's ever changing, right? So year to date, the S&P's up 11%. There are plenty of people who remember the old phrase, sell in May and go away. But that doesn't always necessarily work. In this case, if you sold, you'd make 11%. Not bad.
Yeah, I think most years people would be pretty happy with 11%. But if you think about April, the labor market displayed some signs of cooling. And with the pace of new job creation dropping compared to March, unemployment rate unexpectedly is rising. That's given some folks the signs that they're looking for. But the earnings season still remains pretty optimistic. Half of the companies have reported in the S&P 500, about 80% of them exceeding. And we really think this market rally should continue, at least in the short term. And you talk about that expected shift from fear of May to maybe buy in May. Maybe it's time to hang in there and let this thing run a little bit. And as each week has passed, I think it's really proven to be the case. So as we're looking forward, we expect this to continue. Overall, I'm expecting these events, earnings to reinforce the visibility and capabilities of AI. That's a big mover today, right, with NVIDIA. And as a consequence, I think it's going to be positive for the markets, especially for technology stocks, and that's dragging the broader markets with it.
Yeah. Loretta Mester, I'm seeing some headlines as we're speaking, says the lack of progress in inflation was not welcome. Right? Yeah, of course. And there's no risk in actually spending more time gathering data on inflation because the economy is strong. Basically saying the Fed's going to just stay here right now for as long as they need to. Let's get to some of the names to watch here. I mean, NVIDIA's in focus. Is that a name that you like? What is it that NVIDIA really drives this market, right?
Yeah, it really is driving the market. Unfortunately, it's dragging some other sectors with it. But, you look at those artificial intelligence names, really stealing the spotlight, especially in this coming week with earnings. And investors are obviously watching NVIDIA. A lot of reports came out today and over the weekend that even at this, I think it's about 91% gain this year, maybe a little bit more after today, some folks are still thinking it's a good buy. And, we're going to see their first quarter results on Wednesday, and that's really going to gauge, I think, the strength of the AI-led rally, because that has been such a driving force in the markets in the months of late here. And I think there's also a couple of, Wall Street analysts that have increased their numbers on that, ahead of the earnings report, anticipating a good earnings. And sometimes with this company, we've seen a good earnings report, and it's really jumped up double digits. So there could be some opportunity there.
Yeah, and I see Morgan Stanley even saying that NVIDIA is likely to report a strong quarter with the robust demand that they're seeing for the graphics processing unit, the Hopper, before the Blackwell transition. So just saying, overall, likely to see a strong quarter from NVIDIA. As you noted, some of these analysts seeming positive on NVIDIA, which is at 947 today. Tony Drake, great to chat with you. We really appreciate it. Tony Drake, Drake & Associates, thank you.
Lester said neutral rate may be higher than...
Now let's take a look at some more market movers for you. Hims & Hers spiked higher after announcing it will offer injectable weight loss drugs using the same active ingredient as Ozempic. The company says this will help the shortages and costs around the popular medications. The FDA has warned consumers against using compounded versions of these drugs due to adverse event reports. And Wix is soaring after its first quarter earnings beat estimates on the top and bottom lines and raised its 2024 outlook. So while still well off the all-time highs, Wix is trading at levels not seen since November of 2021. Jefferies raised its price target to $160 from $150 following that report. Li Auto, well, that's plunging after first quarter results disappointed investors, while deliveries were up over 50%. Profit fell below expectations. The company cited weaker order intake in March for the decline. Li's second quarter outlook also hit below street estimates. Tesla's making headlines even now as I'm speaking. A Bloomberg report suggesting that Tesla will continue laying off people through June at the least. As EV adoption and demand struggle in the U.S., the company also built its 3 millionth car in California and no longer under the NHTSA scrutiny for its Model X seat belts. Tesla's at 174 today. Let's take a look at Bitcoin. That is creeping higher and higher. Getting closer to 70,000, isn't it? It's up 2.1% at 68,830. Let's have a great conversation. Pete Najarian's here, co-owner of Market Rebellion. Pete Najarian, I haven't seen you in so long. I'm so glad you're here. Thank you. Dow 40,000, right? We saw it. I mean, we were around when Dow 10,000 was happening. I think people were excited to see it. They were excited to see it close above 40,000. How are you feeling about the market?
It's incredible what we're seeing in May, and I heard you use that expression that people love to say, which is sell in May and go away, right? But boy, you would have missed a lot if you had done that. I mean, we've had a rip-roaring run to the upside now in May. It's been incredible with the S&P, the Dow. Look at the Nasdaq's up 800 points. Dow's up something like 1,800 points. This has been a really, really amazing first couple of weeks, and I know we're almost through it, but we still got a little bit of time. I'm also impressed with what we're seeing from the volatility index, which has been something that a lot of people like to keep an eye on that just because they want to understand what's going on within the markets. And sometimes that gives you at least some kind of a measure. Volatility has been dropping. We were underneath 12 yesterday on Friday. So we've got volatility back in this 12 to 16 sort of a category once we got into May. It was 16 to 19 in April. And I think that speaks volumes about what the comfort levels are right now for people within the market.
On a week out.
Yeah, and so right now they're not worrying, sitting at a level about 12.5. To your point, and that's a trade too, right? They buy it at 12, they sell it at 17, that kind of thing. How about what stocks to buy? What areas you like? I know you're watching the banks, for example, right?
Yeah, I still love the banks. Obviously, you saw the news. I saw the news about Jamie Dimon talking about stepping down, but he also said this might take 5 years. So I think this is a bit of an overreaction. But when I look at the banks right now and I see JP Morgan hitting, 52-week highs, that's pretty impressive. Citi also hit 52-week highs. We had all-time highs hit today by Goldman Sachs. So the financials have definitely been ripping ever since earnings came out. They dipped a little bit in some cases, Goldman Sachs being one of them, pulling back. But I think the reason why we're seeing those three names really do the things that they're doing to the upside right now is everything that's going on within that investment banking side. IPO market is red hot right now. That's something that we didn't have in 2023. We've got it here in 2024, and there's a lot more to come. So I think from the financial standpoint, I really like what we're seeing there. Yes, there's a little bit of a pullback today, and that's probably crediting some of that pullback we're seeing in the Dow itself, because as you know, you only got 30 stocks in the Dow, so obviously a couple of stocks can move things around a little bit, but overall, take a look over at the NASDAQ, still very strong. Look at the S&P. So I'm not overly worried about the reaction that we're seeing today right now for JP Morgan.
Right, understood. I mean, and Jamie Dimon can really sometimes lay it out in a way that makes people, sort of stand back on their heels a little bit. The IPO market heated up this year a little bit, right? We've had a lot of names, and I think that with that brings optimism and liquidity and more deals. And did you find that interesting? Do you like it? Is there an IPO that you're waiting on?
Oh, I really like it. I like it a lot. As a matter of fact, one of them that I was waiting on, now it's out obviously, was Reddit. I thought that would be a very interesting one to watch because at some point they've got to make money. Let's be honest, it's a great company. A lot of us actually find it to be very interesting, useful, and so forth, but they've got to make money at some point in time. And they will, I think, over time, but it hasn't come yet. I think the other side of things is this whole focus on AI that we've had. And there's so much more than just NVIDIA. Now, I know NVIDIA's popular. We're going to talk about it, obviously, a lot on Wednesday. Earnings come out. But there's a lot more names out there than just NVIDIA. Take a look at what's going on with Micron Technology, for instance. It's that memory that goes into the AI world. And then you've got storage names as well out there. You've got Western Digital. You've got Seagate. Some of these names where there's a lot going on, and you take a look at these stocks, they've actually been moving and nobody's talking about them. So I find it really, really interesting. I think there's a lot of different ways to play it. I'll give you one last one. I love the energy space. I look over right now at uranium. I look at Cameco, CCJ, continues to hit new highs, it seems like almost on a daily basis. When you look at the draw, the pull that you get from AI, data centers, and all of that, there's going to have to be something out there that provides them that energy. I think it's going to be uranium, and that's why I think we're seeing so many of these uranium stocks really starting to move to the upside. Take a look at the ETF as well. There's a lot going on, I think, behind the scenes, and it's not just an NVIDIA story.
Yeah, when we look at CCJ, which is the name in the uranium space that you were talking about, that's at a new high today at 54.54. This has more room to the upside. It's already up 1 year, 96%.
If the draw and if AI is as big as we all probably think that it's going to be, I think that the sky is somewhat the limit. Now, I'm not saying that doesn't mean it's not going to have some pullbacks along the way, but I look at a stock like this, and I think the uranium space in general, this one's as liquid as you could ever find. So that's why I think it's the most popular. We see the volumes in there daily. We see unusual option activity, buying to the upside on a fairly consistent basis. So I think there's still room to the upside. I don't think it's run out, and I think there's plenty of time left for it to go higher.
Yeah, and I feel like you've been around a while and you have some great market perspective. And I think about a lot of these companies that have to evolve into the new AI world, or, what's old is new. And you think about some of the tech companies in particular that have sort of evolved and what they do now. And just if you're sitting on the sidelines, you miss it, right? I mean, you miss it. You got to sort of be in the market, right? I mean, what's your final word here to folks?
Yeah, you've got to be involved. And I think there's a lot of ways to get involved. You don't have to be just in the derivatives world. That's where I spend most of my time. But I also trade stocks. It's not just about options for me. But I do think there's a lot of opportunities out there. I think people need to kind of research a little bit more. Matter of fact, you were talking just a little while ago about Bitcoin and this move that it's making today. I oftentimes, rather than trading anything in the Bitcoin world or in the crypto space, I like looking at some of those big beta names that are out there, many of those miners and some of the transactionals, like a Coinbase, for instance, or a Marathon or a Hut, or you take your pick. There just is a lot of different ways that you can kind of play this market right now. And I think that a lot of them offer you even better gains than maybe the directly going right after what everybody else is going after.
That's interesting. So looking at Marathon Coinbase instead of actually buying Bitcoin itself.
Is anybody else hearing
great to see
this?
You, Market Rebellion.
I mean,
Thank
he's
you so
right
much,
on.
Pete. Have a great week.
I love Pete. I love, his
Coming
brother.
up next, he's standing by Ivan Feinseth this
Right.
year. He's going to take a look. He's got some bullish calls. Of course, he's
It's
been
good to
talking
hear
about
it
those cruise
back.
lines
This is literally
forever.
exactly
He's loved
what
them,
we've
and
been
look,
saying.
they've served well for
Literally.
their shareholders. So
Covered
that was a good call.
literally the
Let's ask him about some of the
exact-
other names in focus too, like Palo Alto, NVIDIA, Ivan Feinseth, Schwab Network.
cool.
We'll be right back.
So yeah, that's that.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window, and other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money.
Thing in it that was about, and could it help me kind of go find stuff?
Go find stuff that you had already worked on.
Yeah, past work, that sort of thing.
I'm asking for a friend. That there might be some people who wouldn't want that.
Yes.
Just saying.
That too. But it's all local. You're willing to give up
It's all local.
a personal stuff for convenience, which is what we've done throughout all of the internet, right? And I don't think it's going to stop anytime soon. So to your point, that is going to be
All right,
a major benefit.
so
You can plan family itineraries. Find an email that Tyler wrote to you like 7 months ago on a very specific topic about industrial, for example. And then it'll pop up for you on your local computer versus having to connect to the cloud. Why? Because it's all saved there. So that's
I might end up trying to put on something for the overall index today, because I feel like Coinbase, like that's literally our watch list. Let's see here. I was starting to fall asleep there. Oh shit. Excuse my language. So the Qs have not, they're still hanging on really nicely. It's starting to give up a little bit, but I don't know what is sending. I mean, technology is the last thing that's hanging on the S&Ps, but it's so okay. So look, there you go. Look at the Dow. The Dow's getting hurt right now. All right, so what's IBM, Microsoft? What's Microsoft doing? Let's see here. Microsoft's not too bad. Here, go to Market Watch. Let's see. All right, so yeah, we have JP Morgan, which we called out. All right, we said the 198. We're looking for that pullback down into 198. Cisco, Nike, McDonald's, Home Depot, your industrials, some retail names, UNH. Walmart. See, they're more so flat, but JP Morgan really that is that heavier weighting pullback, and Amazon ended up not holding at all and just completely reversing. So shit. There's so much opportunity all over the markets. I just can't even. It's like hard to keep up because you have to pick what you're going to do and kind of just watch it and not get worried about all the other stuff. Yo, that was so crazy. Pete's yeah.
I think the magnitude. We're going to see a beat.
It's the magnitude, and if they're going to increase their guidance going forward, just based off the supply, that's really going to be the, I guess, the barometer. Of
Shit, I got a message. Hold on.
And then June 2nd and 3rd, that's a big one for our audience. The Computex. Jensen Huang is giving a keynote speech there, and there's going to be something.
Cool. Thank you. Thank you, Christina.
Thank you.
Good to have you.
KPU.
Alrighty, speaking of AI, OpenAI disbanding its team focused on the long-term risks of artificial intelligence less than a year after announcing it. We'll get the key details in tech.
Oh my gosh, come on. Just give me 1 second, guys. Just give me 1 second.
Welcome to the roots of our legacy.
I think we're going to see a beat. It's the magnitude, and if they're going to increase their guidance going forward, just based off the supply, that's really going to be the, I guess, the barometer of where the stock is going in the short term. And then June 2nd and 3rd, that's a big one for our audience. The Computex. Jensen Huang is giving a keynote speech there, and there's going to be something.
Cool.
We could have got fucking short up here.
Good to have you here.
KPU.
Alrighty, speaking of AI, OpenAI disbanding its team focused on the long-term risks of artificial intelligence less than a year after announcing it. We'll get the key details in Tech Check next. Be right back.
Right in a few clicks, not a few hours. It's one seamless experience everywhere, and it works for the whole enterprise. That's why 70,000 teams trust Grammarly.
I was lost in the dark.
Grammarly, for business. Easier said, done.
Time for growth. Funding from Biz2 Credit makes it possible. Our easy and
You know what I haven't done in a while? And I think it was because I didn't eat any. I haven't really ate yet today. I had something small, you know. I had a couple small snacks, but I haven't taken a nap in a while. And that was the first time I started getting tired around this time. Coming in at 2:30. Bro. Sorry, just give me 1 second, guys. I'm just trying to get I'm trying to get this stream up. And then okay, so there you go. So the S&Ps are running back to the highs. So the Dow looks like it's our leader to the downside. The SPY and the Qs are hanging on really nicely. Qs are hanging on really nicely. You barely would have sensed any type of downside if you were to have looked at them. Bro, what is going on?
It looks like the real thing.
It's an actual extension of our house.
There we go. Just like that. Just like that. Alright, give me 1 second to log in. And then alright.
Welcome back to Power Lunch, everybody. We just learned more about Microsoft's ambitions when it comes to AI PCs. Of course, you can't talk Microsoft and AI without
Alright, let's throw this back on.
with OpenAI, which is going through some drama.
Use AI to optimize every aspect of their business. To quote Tom Siebel, the founder of C3AI, I believe he said this, is that every company is going to have to be an AI company. Every company is going to use AI in some way to optimize their business, better connect with customers, manage supply chains. So it has so many applications. And of course, it then benefits the AI providers like Microsoft, AWS, Amazon Web Services, and Microsoft. So then you saw, I don't know if you saw Monday.com's earnings report last week.
That was great. They hit new highs, right?
Again, so the enterprise software companies that help to create the applications that you can lay on these cloud platforms to do a lot of the analysis and work. It is all software driven. I think also MongoDB is going to have a similar pattern to Monday when they report at the end of the month. So I think that this AI theme is got also a long runway because it's going to continue to be adopted in every way. And I still say that people ask me all the time, what's going to be the next NVIDIA? And I say it is going to be Qualcomm. And Qualcomm is going to do to the mobile device the AI capability and access and functionality, what NVIDIA has done on the data center.
A lot of people are looking at Qualcomm. So as you move to mobile devices, moving AI to mobile devices, we've already seen some of that with Apple. In the last week or so, the AI chatter about getting ChatGPT and other things onto the Apple iPhones, and now Qualcomm, to your point, something we've been talking about for some time. So we'll watch Qualcomm, also MongoDB. You said to keep an eye on. So it's not just one name, it's AI everything.
Yes, also Oracle. And then Microsoft.
We talked about.
It's going to be one of it's going to be the 800-pound. There's going to be three 800-pound gorillas, and it's going to be Google, Amazon, and Microsoft. And then all the other plays like Qualcomm, NVIDIA. Well, NVIDIA is powering everything, and then Qualcomm will power everything on the mobile device.
When you're doing your coverage, I mean, I know that we've talked about some of these areas specifically, like AI, like cruise lines, but you're doing research on so many different sectors. Any others jumping out at you lately?
Literally named off every single thing we have brought up today.
I mean, it drives everything forward.
It's like scary.
It drives customer service in all types of retailers and restaurants and all kinds of supply chain optimization and online communication. Now the first line in either a chat bot that pops up on a website or on the initial phone call is a AI-driven response system that really can maybe help solve problems quicker and address customer needs earlier and reduce the costs.
It's the watch list because all you have to do is just make a list of what goes on around us. What's going on? Microsoft, whatchamacallit. We pulled that up. We were watching this last week. All right, beautiful chart up to 427. Coinbase, Mara, they're all screaming to the upside today. So yeah, there's that. Financials, Goldman Sachs. I mean, the names, you know, Goldman Sachs. Like, we were long 410 calls. We got long at 410. So anyway, keep it moving. Keep it moving. What was I doing? Spy in the overall markets. Again, I'm just going to look at the overall markets. If you guys have tickers or anything you guys want to list below, you know, throw them in the chat. We'll cover it. We'll take a look at it. Just like that guy did, right? Oracle. There was news that's kind of started this off. I've been talking about this, and we have an alert. If we get our pullback, I'm going long. So you have a nice little inverse head and shoulder, but not really. It's just kind of, you know, a reversal pattern there. Let's see. If we end up holding this level and can start closing up there at like 124, 123.95, you could probably start taking the long. Once you turn that support back into support, because you can see right here, no, how it's turning it into resistance right now. You guys can see it's bumping into it. See how it's bumping into it? Anyway, make a list of what's going on. I mean, it's really easy. You know, that was scary because that's what's going on. It's just good to hear it though, because we're on the right side of the market. Last week, CCJ had a huge move, and like he said, it's liquid. These are words that I've said. You know, we were on that a little bit too late on that breakout. Mara, Coinbase. Look at Mara today. Right? So I was also thinking about UUP, but it's not liquid, so Meta's been weak. What's Meta doing? Because if the market does try to pull back, keep an eye on those type of names. I'm going to throw on the 3-minute chart. I'm going to see if we can't get a trade going here towards the end of the day on the overall markets. Let's just go here. Oh, look at let's see here. So I'm going to turn this back on. I cannot believe I should have just taken this. Did anybody take any of these, like GDX, JP Morgan, silver? Are you okay, Abby? You okay? This is where, let's see. Microsoft. Keep an eye on your keep your eye on these type of mid-cap names like your Celsius, your Monsters, things like that. Bank of America. Let's see here. You know what? What time is it? It's 2:30. Yo, why is she so hot?
Service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. Glad you're with us. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A look at the markets. We had that 40,000 mark, but we've had obviously an incredible run of late. And so taking a little breather right now on the Dow, down 143 points, 39,860. The S&P NASDAQ holding on to some gains. The S&P's up about 0.1% at 5311. The NASDAQ up more than 0.5% at 18,664. And the Russell also gaining by about 9 points. For a market update, Ben Lichtenstein's with us, senior futures contributor, taking a look here at the markets as we get closer to the closing bell. Lots of earnings, Fed speak, etc. What's on your mind, Ben?
Yeah, Nicole, it is a busy week ahead, that's for sure, right? Multiple focal points, I guess one could argue, but the Dow is taking a bit of a breather, as you mentioned, even after comments from Raphael Bostic, and he was talking about how we still have a ways to go in terms of combating inflation, and while he sees progress throughout this year and into next, we're not quite there yet, right? So the market pulling back a bit, the NASDAQ and the Dow to new all-time highs, while the S&Ps didn't post a new all-time high. We're not far from it here, Nicole. There you can see all four of the major indices, and 3 of the 4 are in positive territory. You also mentioned the Dow, that key 40,000 threshold just below that right now. But let's take a look at the charts here. You can see the S&P is coming off the highs from earlier this morning. And I also have the lows here from Friday on this chart. So you can see the move up 52.83 all the way up to 53.25. And we've come off that level right now, still holding above 5,300 though. Take a step back. This is a 1-minute candle chart. Look at the last couple days of price activity. I wanted to show you what's going on over the last week or so, and well, since October. I mean, because we've been basically straight up, recently trying to break out, get something going above 5,300 here. Let's keep an eye on this week, right? You mentioned a couple key focal points for investors and traders. I think NVIDIA is at the top of the list on Wednesday. We've got some data due out this week as well. But yeah, a market that's enjoying all-time highs, right? A breather, but not necessarily rejecting, I guess is the best way of putting it.
All right. And so just sort of waiting and seeing, I guess, at this moment. What about gold, all-time highs?
Yeah, similar pattern, right? That's for sure. Let's dive into the chart here because you've got a nice bid in the overnight session, all-time highs in the futures, continuation of the pattern we've been seeing, much like the move up. We just looked at the S&Ps here, really well defined on the daily candle chart, bottom left to top right. But let's begin with the move off the all-time highs again and how we've come off into this morning's opening bell, rallying from 24.10 back up to 24.42. So basically hanging out in the middle of the range that we established in the overnight. But that's a historic level up there on the left side of the chart there. You can see again up above 24.50. So this has been and continues to be on a tear. Again, we looked at the rally off the October lows in the S&Ps, similar pattern. There it is, 18.23 all the way up to 24.54. Here's the high we just posted. So again, a key level to watch here because now we're trying to break out, trying to seek value higher. You've got central banks, which you've been buying. You've got geopolitical tensions. You have the dollar, which has eased back a little bit, uncertainties about the Fed. I think there's multiple reasons why we're bid here.
It's just a bounce back on the dollar. That's all it
Okay,
is.
Ben Lichtenstein, thank you so much. It's great to see you, Ben. Thanks. All right, let's turn our attention over to the world of hotels for extended stay in particular. Joining me right now, Matt McElhair is with us, Vice President, Segment Lead, Choice Extended Stay. Thank you for being with us. I'm glad you're here.
Thanks for having me.
There's a lot of names under this umbrella. Maybe people would recognize some of them. Tell us some of the names under the umbrella.
So we have 4 extended stay brands at Choice Hotels, representing about 450 hotels open domestically, with another 400 under development. They comprise the WoodSpring Suites brand, which is our flagship brand, Everhome Suites, which is our newest brand, and Suburban Studios and Mainstay Suites.
Wow. And what kind of demand are you seeing for people that want extended stays?
It's not loud enough,
so
just let me know.
extended stay demand represents about 20% of all demand in the lodging space, but it's only about 10% of supply. And so that supply-demand imbalance is really driving higher performance in the space. And the type of guests that we cater to are, you think, blue-collar workers, folks that are relocating, and that type of demand, traveling nurses. It's always on demand, and it's we've seen that with high performance throughout our brands for the last few years.
What is an extended stay? How long is an extended stay?
So an extended stay is 7+ nights. And an extended stay hotel is typically a hotel that has a kitchen in the room and provides services that are similar to an apartment. Think guest laundry, more space and storage for folks that oftentimes are staying multiple months. So.
Is there almost too much? I mean, because you can get a 1-year lease in Manhattan, right? Yeah. But I mean, is there almost too much? Do they have to do it month to month to month, or what's the longest they can stay?
Yeah, so the key is flexibility.
Right.
And so we, as a franchisor, all of our hotels are independently owned and operated, and folks will set those revenue management strategies, including stay restrictions by market based on the demand. But we typically see folks stay on average about a month in our brands, and but they can extend by week and by month, which is part of the value of extended stay versus other accommodations, be it a full lease apartment, which is typically a minimum of 12 months, or other Airbnb style accommodations.
It's interesting how, and by the way, CHH is the ticker symbol. The stock year to date is up about 5.5%. To your point that you are seeing a lot of demand for extended stay, but there's not as much supply for that.
Correct.
Right? And maybe that is from the economy. If you have a good economy, they're going to be hiring more people. People are relocating. I mean, stuff is happening rather than still. Right? Is that what it is?
It was an under the radar segment until the performance through the last few years, including through COVID. And extended stay and the attractiveness from an investment perspective for your audience really comes down to 3 things. The first is performance. Historically, extended stay drives 15% higher occupancy rates than a traditional hotel. Profitability. Typically, the gross operating margins are anywhere from 50 to 60%. In our WoodSpring Suites brand, we drove 57.7% gross operating profit last year in our hotels. And then resiliency. During the 2020-2021 period, where most discretionary travel demand, fell precipitously, extended stay hotels were driving 40% higher occupancy. And our WoodSpring Suites brand, which I mentioned is our flagship, drove 50% operating profit in 2020. And so what you're seeing is now institutional investors and a lot of return-focused commercial real estate funds are looking to increase exposure to the space.
And I think about people, when they need these kinds of hotels, and clearly here within the United States, is there an expansion plan abroad? I mean, is there an international footprint?
Yeah, so we're focused on the opportunity domestically. As I mentioned, the supply-demand imbalance is such that we're really in the early innings of the growth story, and so as an early mover in this space, we're just continuing to pull through those 400 hotels that I mentioned are under development. That said, is the things that drive extended stay demand, which is economic growth, relocations, and really workforce travel. They exist outside of the United States, and we certainly look at opportunities to grow strategically in those locations.
And then while you're trying to attract more and more extended stayers, residents, clients, whatever you want to call them, there's certainly the landscape, but you're trying to also let it be known that you're running some great companies here. How are you getting the word out? How do you try and attract new people to come stay there? Because I'm sure you have recurring people. I mean, those people return, right?
Without
but
a doubt.
There must be competition too.
Yeah, so we've seen competition increase. Since we launched Everhome Suites in 2020, there's been 12 new brands that have been introduced into the space. And what I would say is how you compete is the same way you compete in overall hospitality, by providing a better experience, better price, and the value that goes with that. And so we're focused really on delivering extended stay specific capabilities to our franchisees so that they can meet that guest experience. We've built a team of 70 individuals within Choice Hotels that are focused on nothing but extended stay. And that goes all the way through sales, marketing, and training. All of that leads to a better experience and guest loyalty over time, which drives those repeat stays.
Right, understood. It's great to see. I'm so glad you were here, Matt. Thank you very much. And it shows that the economy is hustling and bustling, and the fact that you have so much demand. I really appreciate it. Matt McElhair, thank you very much, of Choice Extended Stay. Still ahead, we'll bring in our panel and discuss Microsoft updates from the company's Build conference, or just around the corner. New Surface laptop, much to discuss. We'll be right back.
Welcome back. Some major news coming out of the Middle East this weekend as the president of Iran was killed in a helicopter crash. It's not having an impact on oil prices today, but Pippa Stevens is here to explain the consequent action. Pippa?
Yep, so no impact, and that's because, as Clay Siegel over at Rapidan told me, the interim officials are part of the establishment, and so there's not expected to be any type of change in policy. And then when there are elections, it's going to be, likely low turnout, and then the establishment will also ensure that a hardliner is elected. And so the bottom line is that the market is not expecting any type of big policy changes here, and so that's why we're not seeing a response in oil today. Now, Rebecca Babin at CIBC Private Wealth also told me that she thinks it's part of this commodity euphoria that we're seeing, and that oil could drop down, not hugely, but maybe Brent test that $80 level. Today we saw we saw gold and copper both hit record highs, as well as orange juice futures. A little bit of a different story there, but just that if this kind of commodity euphoria trade unwinds, and oil could get caught up in that. But then take a look at nat gas, because that is higher now, at the highest since January. We've seen 274 there. We've seen meaningful production cuts from producers like EQT, and so that's helping the picture, although storage still is elevated. And then finally, next decade, this stock is up about 12% today. This comes as ADNOC, that's the UAE state-owned oil company, took a stake in next decade's Rio Grande LNG export terminal down in Texas.
I just want to talk about this commodity euphoria, because you shouldn't normally have gold and copper rallying together. Copper's supposed to be the sensitive to economic growth. Gold is supposed to do better if we're talking about potentially falling real rates or economic weakness, that kind of thing. So it does start to feel like this big chase, and maybe it's triggered by the inflation reports that grow the sense that you have to be in materials.
Just people looking elsewhere, and then once they hit highs, you get more and more interest, including from people like retail investors who then see the headlines and then pile in, and then it kind of fuels it, and then at a certain point, something's got to give, and so that could be for oil. Although June 1 is the OPEC meeting, so that could see a difference.
Sitting out. I mean, does anyone think it's been part of this?
This is what I was explaining this morning.
No, but I think that's because for oil, it's a bigger kind of understanding that geopolitical risks right now are not really factoring in. There's no supply disruptions. There's not the same type of momentum. However, it could be subject to the downside of then traders, CTAs, especially those trend followers, getting out of the trades. Maybe not that much upside, but it could be subject to the downside.
I still wonder too if it's all because of the energy transition. It's just kind of being left behind. We'll see.
God, guys, I can't even get nothing going because
and still ahead, our trader wants to sell. Hot Take Edition of Three Stock Lunch is next. As we head to break, we celebrate Asian American, Native Hawaiian, and Pacific Islander Heritage Month. Here's Aradnan Sarin, AstraZeneca Group CFO and Executive Director.
I was born and brought up in East Africa, and my parents are of Indian descent. And I think what makes me really proud is the fact that...
Okay, come on.
that leads to best decision making and eventual success.
All right, let's go with Three Stock Lunch. How about that? Here with our trades is new Construct CEO David Traynor. Welcome, David. First up, we got Microsoft shares gaining more than 1% ahead of its Build Developer Conference. Your trade, sir, on Microsoft.
Hi, Tyler. Good to see you again. Yeah, Microsoft, we love the company. It's a great company, huge cash flows, super high return on invested capital. But in the last few years, we think the arms race is catching up to this business. Return on invested capital is down. They used to rank in the top 20 in the S&P 500. Now they're barely in the top 50. So we think it's time to take gains. We think the valuation is really kind of gotten ahead of the stock here. And despite this super cash flow business, great return on invested capital, we think it's time to sell.
Not many people are that brave. All right. What about Johnson Controls in the news today after Elliott built out a stake of more than $1 billion? Shares are up, only about 2.5%. You got a trade on this one?
Yeah, it makes sense that some activists would come in here and try and clean things up. This is a pretty poorly run business. And in fact, we've seen that the auditors flagged concerns with internal controls. So the numbers look bad. This gets our very unattractive rating, which means the accounting earnings are misleading. They're going up and looking positive while the economic earnings are negative. And on top of that, we're seeing a really expensive valuation. So when the auditors themselves are saying, hey, by the way, we're flagging a weakness in internal controls, that's another sort of reason to avoid this stock. So unless the activists come in and save the day, this stock's definitely a sell as well.
Very interesting. All right, let's move on to shares of Hims and Hers Health. They are surging about 30% after the telehealth company introduced access to compounded GLP-1 injections. That expands on the weight loss program it launched back in December. Your trade on Hims and Hers, full of pronouns here.
That's right. A lot of pronouns there. Yeah, we think that this is a sell, no matter what you want to call it. It's a really overpriced business. An interesting concept, novel concept, but not one that has really strong barriers to entry. We think that this business is going to be commoditized pretty quickly, and the valuation's implying that it's going to go from a negative margin business to a very high positive margin business. Returns on invested capital are close to zero or negative, and the current price implies they're going to go to like 50+%, which is more than Facebook and Microsoft and HCA for that matter, more than triple the HCA. So we think the valuation is pricing in more than enough good news, too much good news, and we'd recommend that investors sell this one as well.
All right, David, thank you. 3 sells. Thanks very much. A new construct. We appreciate it.
And remember, you can always hear us on our podcast. Be sure to follow and listen to Power Lunch on any platform. We'll be right back.
In assets worldwide, solving for the needs of investors today and tomorrow. That's the power of Nuveen.
I hit this button one time today, and I continue to hit it. This right there, the one right next to enter. All right. I feel really good. I feel really good. I feel like, I don't know. I'm not gonna. It's not that I'm not gonna say. I'm just saying. It feels real good to hear Pete say that, because then it shows us that like everything that I'm seeing, you know, others are seeing it too. And he's been in the game for a very long time. So, you know, he was in this business while we were all still in school. I'm sure. He's not that old, but you get what I'm saying. You're picking up what I'm putting down. Alright? And for him to literally go over his watch list and it be literally to a T like ours, tells us we're doing something right. Fucking Coinbase at 220. Oh my god. I gotta do a better job of trying to keep track of watching these names. So what happens is if I leave too many, if I try to do too many of these, right? If I add like 2 more screens on here, it starts to get things messed up. Because Baba, Coinbase, Microsoft, Amazon, but you know, we want to see the SPY and the Qs. That's crazy. It ended up breaking out. We just had to hang on for a little bit. I thought it was going to be about an inside day, and it did exactly. Oh my god.
And JP Morgan is the worst performing stock in both the Dow and the S&P, down 4% now as it's been moving steadily lower throughout the
There's just been sell triggers on JP Morgan. I don't know if that's Jamie Dimon along with others or what. I don't know what's going on there.
I don't think that's what's weighing on the stock. But Dimon also made it seem unlikely that they would buy back stock, and boom, that's probably how you get more.
Take the 2 of those together, because he is, by any standard, really the
Yeah, they wouldn't buy back stock on highs. Like, it doesn't make any sense.
Welcome back to Power Lunch. Let's give you a
because I had the right AirPod in. I don't know why the right AirPod
170 points low.
Always goes out. I don't know what's wrong with it.
836 after closing above 40.
I used to never have issues with
And JP Morgan is the worst performing stock in both the Dow and the S&P, down 4% now as it's been moving steadily lower throughout the day. On the back of comments from CEO
Hopefully
Jamie Dimon
tomorrow's a
during
lot
their
better of
investor
a
day,
day,
he told
guys.
shareholders his retirement timeline is not 5 years anymore and that JP Morgan is well on the way with succession plans. I don't think that's what's weighing on the stock, maybe. But Dimon also made it seem unlikely that they would buy back stock, and boom, that's probably how you get more
Yeah,
of
take
that
the two of those together because he is, by any standard, really the gold standard
An
among
incredible
banking
run.
CEOs.
Absolutely.
Well, let's talk a little bit about Target. It says it is going to lower prices on 5,000 frequently purchased items in its stores in a bid to both stay competitive and give consumers some much-needed relief. In a statement, the retailer says the price cuts are concentrated in grocery staples like milk. What is that word there?
Meat.
Meat. It says
Mere
mere.
bread.
It says mere. Meat, mere bread, fruit and vegetables, as well as toiletry items like paper towels, baby wipes, and diapers. Don't mix up your mere bread and your baby wipes. It's expects to save consumers millions of dollars this summer. There you go.
Unless it was mead.
On my other screen over here.
The drink. I was thinking about that story with Stephanie Link, though, who wants that 6% operating margin on Target, and then these price cuts. Well, if they drive traffic, maybe it'll help. Also, Red Lobster filing for Chapter 11. Bankruptcy. Among the list of reasons blamed, difficult macro, bloated and underperforming restaurant footprint, and failed or ill-advised strategic initiatives like the endless shrimp promotion, making that every day
That'll blow you
instead of
right
once
there.
a week.
Endless shrimp.
That actually increased business too much. They lost $76 million last year. There's a lot of operational problems
Does
here.
anybody know why Netflix
It's
is
so
going
sad.
higher?
You used to be such a great place.
Yeah.
Damn.
177 points lower on the Dow. Thanks for watching Power Lunch, everybody. Appreciate it.
NASDAQ's higher, though.
Yep.
Big week for technology. Closing bells.
And NVIDIA.
Yeah, starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with this record run for your money and whether the so-called everything rally can keep going. We'll ask our experts over this final stretch, including PIMCO's Erin Brown. She'll join us at Post 9 in just a second. In the meantime, take a look at the scorecard with 60 minutes to go in regulation today. NASDAQ is leading today. NVIDIA getting back to $950 a share, a couple days ahead of its earnings. Apple not far away from a new high either as its comeback continues. Elsewhere today, well, financials are in focus. A new high earlier today for shares of JP Morgan. They have turned lower by about 4%. Company holding its investor day today. CEO Jamie Dimon said, maybe no buybacks at these levels, and maybe the stock didn't like that. He also said he was, quote, cautiously pessimistic about the state of the world right now. We'll discuss coming up. It takes us to our talk of the tape. All that continues to rally, and if it's a sign that even more gains are on the way. Let's welcome in PIMCO's Erin Brown. She's here at Post 9, as we said. It's nice to see you on the East Coast.
Nice to see you as well.
Been a while. It's good to have you here. This everything rally has been pretty amazing. Does it continue?
I think it does. As we heard from the first quarter earnings season, it was strong earnings across the board. I think what's really important to keep in mind is you're now seeing an inflection and broadening out, not just technology leading in terms of earnings recovery, but it's broadening out to more sectors as well. Yes, we're trading at highs on the Dow or close to highs on the Dow, same across most indices. But I think what you'll see as we move through the rest of this year is that this broadening out will drive more flows into the equity market and start to see real participation from more of the cyclical sectors of the economy. What I think is really encouraging over the last couple of weeks has been to see the metals, the mining, the industrial companies now starting to really lead. And we're starting to see that, I think, be more of a driver, into the second half of the year.
I mean, over the last 6 months, to your point about the metals, right? Copper's up 32%, silver 36%, gold 22%. Which parts of the cyclical trade do you really want to lean into? Because all parts of that are not necessarily created equal.
Exactly. And so the precious metals certainly have done well. Copper has been very much an AI story. Gold has been, I think, driven by some flows out of other safe haven currencies into gold. But what I think now we're starting to see is more of the industrial metals start to inflect more positively. Some of that's on the back of a thought that China is now now bottoming out. They're starting to lean more heavily into infrastructure investment because property sector is continuing to lag. And so you're starting now, I think, to see more of a real play for the industrial metals and commodities. And I also think that it lends itself to the industrial companies as well. So I think that's where the next leg of this trade is going to be. Not to say that the precious metals and the copper will lag, but I think you're going to see more participation from the industrial metals as well.
Not surprisingly, we do have year-end targets going up seemingly by the day. You know, when you're at 5,300 and change on the S&P, you start to get targets ratcheted up, maybe 5,500, 56, 57. How much more do you really think is possible this year for the S&P?
So I think mid-single digits is likely possible this year, but certain sectors I think can really do quite well. I believe going into the end of this year, even if you get 5% up on the S&P 500, which I think is a reasonable amount to further go, just given sort of the progression of earnings, you're still going to see the quality, the large caps, I think, outperform. I think the small caps are still really hindered. And so while, yes, you're going to see 5% on average, there's going to continue to be that bifurcation in the market.
You know, it was pretty eye-opening when Rick Rieder was here, BlackRock, of course, last week, and suggested you could do 10 to 15% more this year because earnings are underappreciated. And some of the benefits from higher rates on a certain cohort of investors and spenders. When you hear calls like that from somebody at a shop like that, do you think that could be possible?
It's certainly possible. I think that the challenge is that we've come a long way in a very short period of time. I do think that there's going to be some consolidation before we get sort of a strong back half rally. And I also think that, we're at a point now where the consumer is weakening. Parts of the consumer are weakening. The luxury, the large cap, the sort of upper tiered consumer companies are doing quite well, and I think they're going to continue to maintain that leadership position. But you're starting to see weakening on the middle and even especially on the lower end consumer, and so that's, I think, going to somewhat halt at a 15% upside from here. But that doesn't mean that certain companies couldn't, gain 15, 20% from here. I think that that's very possible. You really have to be more careful about picking your spots.
I think, what the point that he would make is that, maybe you're just at the beginning of picking up on what could be a really nice earnings growth story beyond the large cap tech stocks, which have really carried the load so far. Earnings obviously were better than expected, but the bar had come down so much coming into earnings season. But what if we're at a real inflection point where you could get a meaningful pickup in other areas of the economy, the likes of which you're talking about?
So the market's pricing that in. The market expectations are for 3% growth in the first quarter, 10% for the second and third quarter, and 16% for the fourth quarter. So the market certainly is pricing in that earnings inflection. What it would take from here is to see further growth, more than double-digit earnings growth in the second half of this year.
Is that when you talk about the multiple that, people try and, make the argument that at these levels stocks are expensive, right? Valuations aren't cheap. But if you do have the kind of earnings growth that some suggest you do, and you have rates continue to come down on the expectation of rate cuts at some point this year, that you need those two to play into that story.
Right. And so that's where I think the market may be disappointed, which is on the rate side. I think earnings are going to be robust. But if the market right now is pricing in 2 earnings cuts this year, I think that's a high bar. And I think that we'll likely get at best 1 rate cut. And there's even a potential that we don't get any rate cuts this year. And so as the market starts to come around to that view, I think it does limit a little bit the upside. Still a good environment for equities, but it probably caps the upside somewhat this year.
Wow, so you really think there's a chance of 0 cuts
I think that's
this year?
About a 30% chance.
What would the market look like if that happened?
Well, I think then that continues to weigh on the small caps. It continues to weigh on anything that is yield sensitive. Look at the trading today. You saw China underperforming. You saw EVs underperforming, staples underperforming. Anything with a yield component, biotech notwithstanding, anything with a yield component underperformed today. I think that the market is going to continue to differentiate between those companies that are sitting on a lot of cash that can reinvest that in high yields versus those companies that need to refinance, that are highly levered and are having constraints because they don't have growth equity to help them get from point A to point B.
All right, let's bring in Courtney Garcia now of Payne Capital Management with us at Post 9, also a CNBC contributor, and our senior markets commentator, Mike Mike Santoli is at the desk as well. Court, you've heard the whole conversation thus far. Agree? You still feel like it's the right move to stay bullish and think that a lot of different things can continue to rally?
Absolutely. And I think that the most important thing is we did come off of a really good earnings season, but forward looking, those earnings expectations going forward are only looking more positive. When you look at the consensus estimates for earnings and revenue, it's showing that profit margins are probably going to upwards of 12% this year, 13% next year, 14% 2 years from now.
Identified
and all of that
Amazon.
just leads into why you want to be in the equity markets, because a lot of investors are drawn to that 5% yield you're getting on money markets and cash. But don't forget, A, you're paying taxes on that, and B, you're probably still not going to get the kind of returns you are in the market if you have a bull market. And I think we're likely in that.
I mean, part of Aaron's point, though, as you heard, is like, well, maybe we're going to be disappointed on the earnings front, and that's going to further question the multiple, and that's going to cap the kind of activity that where Deutsche Bank says 5,500 that you could continue to ramp to numbers like that.
And I think certain parts of the market are expensive. Like, I think a lot of people have talked about the fact that your mega cap 7, I mean, are arguably getting more and more expensive. Is that justified by some of the revenue you're going to have from AI? When that comes to fruition, I think is the question. We have plenty of areas that are actually undervalued compared to the markets. Like, we're still looking at things like energy. Even international is significantly undervalued compared to the U.S. I know the argument is what's going to happen to small caps this year, but if interest rates do come down, those will benefit from that. And they are historically undervalued compared to your larger cap companies. So I think there's plenty of areas to add to. I absolutely still want to own those big 7 companies in the SP 500. But as I'm deploying new cash, I think there's plenty of other areas of opportunity.
Mike, I guess we're either going to be reminded of why we continue to put money into NVIDIA back at 950 today, or we're going to perhaps start to see a story that doesn't look nearly as good as has gotten us here.
Yeah, I mean, part of the fixation on NVIDIA, it makes me uncomfortable, even though it's justified. In other words, what happened last quarter, I was sort of downplaying it going into it, and all of a sudden, it actually was the thing that mattered, that got you another leg of the uptrend in February. But we had 2 days all month when NVIDIA has moved less than 1%. So this is the 3rd biggest stock in the world, and nobody has a good enough fix on it to really feel like where it should be. So this jockeying is going to happen over on this AI wing of the market. Meanwhile, there's all these other themes that seem to matter right now. We're talking about the reflation type trade, seems globally driven. That's one other arm of things. And then, Goldman Sachs is making new highs until today. And you have this idea in the capital markets that financial conditions are still pretty loose. You have volatility and credit spreads at multi-year lows. So to me, it's pretty strong underpinnings. It's just the market finding its way to stay supported. Even if every time we've gotten into trouble in this market in the last couple of years is because everybody kind of all of a sudden maximally believed the soft landing thesis and nothing could go wrong. I'm not sure we're back at that yet. But I still question if a 5% little wobble in April was enough.
Well, Jamie Dimon, wonders still whether people are too optimistic on the soft landing trade. Not to mention that, that stock, JP Morgan, hits a new high today. Then it pulls back. They're having their investor day. He suggests, well, I wouldn't buy back a lot of stock at these levels. Yeah. Like almost like he's calling a top on his own stock for the near term because he's like, can't believe how much these stocks have continued to run. What do you make of his commentary today?
I mean, I think he's being prudent, and I think in the past he's been cautious, and JP Morgan, continually outperforms relative to expectations. I do think, though, that if you're betting on financials doing well because the Fed's going to be an aggressive rate cutting path, you're probably going to be disappointed. And, typically we see historical rate cutting cycles of 200 to 250 basis points. At best, I think we're in a mid-cycle adjustment, and we'll likely see once the Fed does start cutting rates, probably only 100, 125 basis points. And so financials, if you're expecting that, you're going to see a significant move, that's likely not going to pan out the way that people are expecting. Plus, they talked about higher capital charges. There's a lot of things just legislatively in the next administration that could hurt financials.
Yeah, we'll have more coming up with Mike Mayo, star analyst who covers that sector in just a bit. We'll get a little bit deeper there. You guys want to have a debate about small caps? Whether now is a good time to do it or not? You make the case for, you make the case against. What do you?
Yeah, well, small caps, and I think a lot of people don't even realize they have actually been outperforming the S&P 500 since the lows in mid-April. And when you're looking at the expectations of where those earnings are going to be over the next year, your small companies actually have higher expectations than your large cap companies do. So I think you're looking at something that is undervalued compared to its it's alternates, and the expectations of where the revenue and earnings are going is going to be higher. I think that's just a recipe for something you want in your portfolio. And it's not to say I'm getting out of large caps and getting into small, but I absolutely want to use it as opportunity.
Erin?
Yeah, I mean, I think I would take the other side of that, and I think that small caps right now are still very reliant on access to easy capital and easy financial conditions. And I think financial conditions are likely going to stay tighter for longer.
You mean i.e. rates coming down?
Right, rates coming down. And I think they're going to, and you know, there's also a big bifurcation in terms of what you're seeing in credit spreads that for, you know, high quality, large cap companies versus smaller cap companies that are more highly levered. And I think that that bifurcation is just going to continue to widen. Like you're seeing a bifurcation on the consumer side between the haves and the have-nots, I also think you're going to increasingly see rates start to bite the lower, the smaller cap companies increasingly as the Fed stays higher for longer. Even if the Fed does cut rates, they're still not cutting back down to neutral. They're going to be running persistently above neutral. They'd have to cut 200, 250 basis points to get back to neutral. They're not going to be doing that this cycle. So that means that rates are still going to be quite restrictive, particularly for those smaller cap companies. Plus, they don't run with the same cash flow. And so they're not sitting on the same cash balances that they're able to reinvest. So that's another, I think, negative against them relative to large caps. So I want to stick with quality and stick with large caps.
And yet, Mike, I mean, the Russell, for example, is up 8% over the last month.
Yeah, obviously, you know, it got hit harder on the way down, and that's usually the way it does go. I do think that there's, you know, it is going to trade to a large degree on Fed rate cut expectations. And it's not just because, oh, they're a little dicier. They are, but they also, their credit costs are much more bank loan oriented. In other words, that's where the rates are set, is by the Fed, effectively. They're prime rate borrowers, they're spread over SOFR. So in other words, it's not just sort of like, oh, the atmospherics are better because we're cutting rates. It's literally goes to their bottom line if they cut rates. Now, that being said, I don't know that the long-term mean reversion call on small caps is the one I would maybe pay more attention to. You know, we're talking about 10 years. You've seen just historic underperformance over that period of time by small caps over large. You're also going to have the Russell rebalance. It's coming next month. It's kind of mind-numbing exactly what the whole permutations of that are. One thing it's going to do is it's going to clean up the index a little bit, and it's going to graduate out the big volatile stocks that are still in there, like Supermicro, and it's going to get maybe a cleaner look at what this index is and see how it trades.
It still scares people, Court, because the volume of regional banks that exist within the Russell 2000 and the small cap universe, which, to Erin's point, as long as rates remain as elevated as they are and rate cut projections continue to come down or at least stay static where they are now, doesn't that put a bit of a cap on the performance of those names?
I think it does in the short term, but I think this is something that I'm looking at the longer term, because I think with rate cuts, the idea is it's at one point we started to get nervous about
just a random.
We're getting nervous about a rate hike. I think that was just overly pessimistic, and at some point in
How
time rates are
weird,
going
how
to come down
weird,
here.
how weird.
So I think this is something that you do with a portion of your portfolio. If you're going to be in it, you want to be in it before that move happens, not after. It's going to be very hard to time that. I think at some point here that's going to turn.
The other thing, Erin, to discuss is this idea that it's really time to look elsewhere, perhaps, you know, Europe or these other markets where you are likely going to get central bank activity before our Fed moves and cuts. You're likely to get rate cuts elsewhere before you get here, and you think that could be a big opportunity.
I do. So firstly, I think that the BOE, the ECB, and likely the Bank of Canada.
Damn, look at Q's just headed right back for a high a day, guys.
Summer. So June or July,
relative outperformance there.
Not only are you going to get a faster path for rate cutting, but you're also going to get a deeper path for rate cutting once they start cutting. And so because you're seeing more disinflationary trends in those economies that are more firmly entrenched,
QQQ running up to high a day.
That kept inflation elevated. They're not seeing the same immigration challenges.
Bro, what is going on?
Or at least as deeply. All of those factors, I think, will lead to a faster rate cutting cycle. That means it's now time to start.
Sort of think about too.
U.S., broadening out the scope and expecting that global growth will start to inflect more positively. The U.S. we still think.
I hope you guys had a wonderful day. I'm going to go make a little coffee.
A little bit of convergence,
something.
at least this year, with respect to U.S. growth and the rest of the world as those central banks start to cut, which means that those equity markets.
So you guys
also
have the
look more
names
attractive.
we're going to be focused on
I have
this
not
week.
been invested. I've been very much invested in the U.S. as an outperformance trade versus the rest of the world.
I think
now I'm
the
starting
only
to get
one
more
Pete
excited
forgot
about
about
markets
is
outside of the
mRNA.
US. So Europe is starting to look more interesting, particularly European cyclicals. To some extent, the UK as well. But I also think that those markets, you could start to see the more large open economies start to really rebound and play a little bit of catch up with the US.
You do have to sort of think about, too, as these other central banks perhaps move before the Fed, the pressure it puts on the Fed to make moves of its own. The delta doesn't like to be too large between central bank activity, especially when you're talking about developed nations.
Typically not. I mean, usually the Fed is kind of calling more its own shots based on the domestic economy. I think the thing that would maybe unsettle things is if the dollar were to rip, go to new highs or something like that.
Well, that's one of the potential fallouts.
It is. Right now, it's pretty tame. It's not necessarily out of bounds in terms of where things are. There's a bit of a push-pull here, I think, on things affecting the dollar because global growth getting better seems to be maybe, doing the benefit to other currencies. But yeah, I do think it creates a little bit of flux in the policy path, but not necessarily in a negative way. I mean, I think that the longer you have to wait for a first Fed rate cut, the longer you're on pause. I keep saying this is a very long pause. 10 months, Fed has kept rates steady at cycle highs. That suggests to me, with the economy growing above trend and inflation having gone down over that period, that's not such a bad policy setting. So if they see the way clear to keeping it there for a while, obviously you don't want to see inflation go up from here.
Sure.
But it's not terrible to have to wait if that's what you have to
No,
do.
assuming that they are able to continue to have the luxury of doing what they're doing. Guys, that was fun. Mike, we'll see you back for the last word for sure. Aaron Brown's good to see you, as I said. Courtney, we'll see you soon. All right, let's send it to Christina Partsenevelos now for a look at the biggest names moving into the close. Christina.
Thank you, Scott. Well, shares of Norwegian Cruise Line Holdings are soaring today after the company lifted its full-year guidance and reported better than expected earnings. The operator said it has continued to see strong demand and record bookings this year, and that rosy outlook is also lifting shares of Carnival, and you can see Royal Caribbean also up 4% right now, Norwegian up 7%. Good news for Target shoppers, maybe not investors. The retailer announced it would cut prices on about 5,000 frequently shopped items like peanut butter to coffee, causing shares right now to drop over 2%. The company said it hopes to help consumers, quote, feeling pressured by high pressures and expects to unveil more price cuts in the summer. Scott.
All right, Christina, we'll be back to you in just a little bit. We're just getting started here at Post 9. Up next, top analyst, I said he's back, Mike Mayo. He's going to tell us what stock he's now calling the NVIDIA of banking. And later, get you set up for earnings in OT with a big name. It's Palo Alto. And that reports in overtime. We're going to tell you what to watch for, give you a rundown of everything. We're live at the New York Stock Exchange. You're watching Closing Bell on CNBC.
Tesla's still holding on here. It's so weird. It's 10:20. I'm not really going to get into anything outside of the overall markets. I don't think I'm going to be trading anything. Give me a sec. I'm going to go run and make some coffee so I can wake up a little bit. I'm just exhausted from this weekend, I guess. I don't know. I did have a Red Bull. Let's see. I did only get a few hours of sleep last night too, because I was up at around 5.
Old school grit, new world ideas. Out here, we get it. It's more than their favorite store. It's where they could do a little shopping, find new faves, meet new friends, and show off for old ones. We love helping you do what you love.
Oh, I see what's going on here. Yeah, okay, Thursday. Which we already talked about. I don't know. Again, guys, I'm sorry that I'm just a little tired. You had to be quick this morning to take some of those trades, but the analysis was right. Keep your eye on, continue to keep your eye out on these crypto names. Like Mara's having one heck of a day today. What is it? 323. 323. And if you guys see anything that is selling off or doing anything crazy, let us know. Throw it in chat. I'm gonna go make some coffee real quick, so I'll be right back.
Price of Bitcoin seeing a spike in activity, now trading at 69,250 per coin.
Shares of JP Morgan falling after hitting an all-time high earlier in today's session. CEO Jamie Dimon telling investors
Ethereum also
to buy back a lot of stock at current levels.
Coin spiking.
You make it really clear, okay? We're not going to buy back a lot of stock at these prices. So, and we do not consider stock buyback returning cash to shareholders. That's giving cash to exiting shareholders. We want to help the existing shareholders. I look at this as cash in store. So with the number is 35 billion, 40, whatever you call a number, it's going to sit there until we can deploy it at very good returns. Buying back stock as a financial company, greatly in excess of
Bloomberg reporter posts on X.
All right, joining me now, Post 9 to discuss is Mike Mayo. Shares of JP Morgan falling after hitting an all-time high earlier in today's session. CEO Jamie Dimon telling investors the bank does not plan to buy back a lot of stock at current levels. Take a listen.
Wait.
Make it really clear, okay? We're not going to buy back a lot of stock at these prices.
Hold on.
So, and we do not consider stock buyback returning cash to shareholders. That's giving cash to exiting shareholders. We want to help the existing shareholders. I look at this as cash in store. So with the number is 35 billion, 40, whatever you call a number, it's going to sit there until we can deploy it at very good returns. Buying back stock as a financial company, greatly in excess of 2 times tangible book is a mistake.
All right, joining me now, Post 9 to discuss is Mike Mayo of Wells Fargo. So we don't need to get into the reasoning to buy back stock or not. Let's get the price, what he said about that. I'm not going to buy a lot of stock back at these prices.
All right, I got it, guys. Hold on,
look
look
at
here.
That comment specifically, because it does speak to the fact that it did hit a new high today.
Well, I think Jamie Dimon is borrowing the phrase from Warren Buffett, be fearful when others are greedy. I asked that question, and I said,
check it out, man. Check it out.
$7 trillion investment grade bond market. And he said, spreads are too tight. People are too happy. You need to be more cautious. So I like the fact that Jamie Dimon has this healthy paranoia because anything can hit you when you run a big bank. On the other hand, I think investors are frustrated seeing that if they're not buying back the stock at this price, and Jamie Dimon's selling stock for the first time in his career, why should anyone else buy the stock? So I see this as a short-term overhang for the stock for what's otherwise a very solid long-term company.
Well, I mean, it does speak to the fact, does it not, that, look, it's got Goldman Sachs hitting a new high yet again today. These stocks have been on a tear. Is it time to sit back and say that maybe it's been too good in this space?
No, I think the stocks are just getting going. I mean, JP Morgan's Investor Day, which just ended a couple hours ago, Scott, was very positive on capital markets. They guided higher today. They were very positive on credit quality. Credit card losses are coming in below on excess capital for buybacks, not for JP Morgan. So JP Morgan's Investor Day was very bullish for Citigroup.
other than Jamie Dimon himself?
Exactly. It was bullish on Citigroup because Citigroup is big in cards. They're big in capital markets. They have excess capital. And you know what? When you trade at 1/3 the price of JP Morgan, you can buy back stock. That was very bullish for Citigroup. So thank you, JP Morgan. Jane Fraser should send a thank you note to Jamie Dimon saying thank you because your themes support our stock.
So when Jamie Dimon cautiously pessimistic, that's just Jamie being Jamie in your mind. There's really not that much to be pessimistic about when it comes to his.
Yeah, I think Jamie Dimon's more concerned about the geopolitical risks and happen to go wrong, the tail risks overall. But what you're seeing in JP Morgan's numbers right now, we're fine. About, the kind of 6 Sigma event, or maybe 3 Sigma event.
So the NVIDIA of banking, you always have a way with words, and You like to do that sort of thing, and you're talking about J.P. Morgan.
The one
right?
number.
That's the one?
The one number that stood out from J.P. Morgan's Investor Day today.
GPU sales?
No. $17 billion of tech spend. $17 billion. That's a record. No bank has ever spent $17 billion on tech in 1 year. That's equal to the total expenses, all expenses for the 8th largest bank. That's what JP Morgan spends on tech alone. They're spending it on AI. They're spending on digital banking. They're modernizing the back office. They're trying to be the preeminent digital bank 2.0, which is the next version of banking where you create new products, services, relationships, and engagements that were previously unavailable in analog form. So JP Morgan is at the forefront for being that digital leader. It's just that Jamie Dimon hasn't internalized that to become a tech company. He still considers.
All right, guys, this might be crazy, but I'm going to do it. I'm going with an Amazon put here. I might try it out. Stops above 184.
Right, the space is still Citi.
My top 3 names are Citigroup, Citigroup, and Citigroup.
Really?
Absolutely.
Let's go. Let's
Why
can
not,
do it,
why is
man.
Goldman Sachs in that
Let's
mix?
can do it, man.
Citigroup has a component of the capital markets, which are going better than expected. Citigroup
Can we
has-
get the markets to sell off right
Look, I
behind us?
recommend
That'd be
Goldman
cool
Sachs
if
has
it
done
did.
really well, but Citigroup is still
be cool
trading
if
at a
we could.
30% discount to tangible book
50-day
value.
moving
Scott, this is my
average is
4th
sitting
decade
right
doing
there
this. It used to be you would go to
at
tangible book value at the
181.
depths of a recession. They're at a 30% discount, and we're not even in a recession.
Well, because they had to do a whole restructuring for the most part, as Jane Fraser came in and made that her thing.
And they just finished a watershed 7-month org simplification during which many said Citi would blow up, they'd lose revenues, they'd lose people, and guess what? They exceeded expectations in the first quarter as much as any bank, and they're on track to have the best 2024 guide for revenues and expenses of any bank. In over 3 years, we expect earnings to double. Only one other bank can get it even above 50%. That would be Goldman Sachs. So Citigroup is far and out our number 1 pick.
Brian Moynihan sitting somewhere. He's like, Mayo, what about us? What about me?
Number 2.
Well, you just said 1, 2, 3 with Citi, and then you wax poetic about JPM.
Well, number 4 then. Okay,
Yo,
so
Mikey
Citigroup
was
is
just
in a league by itself in
spitting
terms
rhymes
of
out.
fundamentals and the incremental improvement. But if you forced me to give me a second name, it would be Bank of America. Just with the CEO, he's chomping at the bit to buy back his stock. So talk about a difference or a dichotomy between JP Morgan and Bank of America. One wants to buy back their stock, Bank of America. The other says, I don't want to buy it back here.
One more quick one, just because let's end where we started with Dimon talking about why he doesn't like the buybacks for the reasons why some others do. Do you have a thought on that as it relates to banks buying back their shares? Like if he said, I'm going to buy back stock and they made that a focal point, would you say I'd rather you use the cash for other purposes? He seems to want to use it for other purposes.
I think the banking industry using buybacks
I want to go make a cup of
far
coffee.
better than lending to Latin American countries in the 70s, the 80s, or commercial real estate in the early 90s, or the tech bubble around 2000, or to mortgage companies and others during the global financial crisis. So it gives you a nice extra bucket to deploy your capital to. So it helps to moderate the excesses. So I like buybacks generally, but not all the time. So if he wants to pick his spots some, but to have an absolute statement and say, I'm not going to buy back stock, I thought Jamie was being too much Jamie on that comment.
All right, we'll leave it there. It's good to see you, Mike. Thanks.
Thank you.
That's Mike Mayo here, Post 9. Up next, turbocharged market. HSBC's Max Kettner maps out where he sees this rally heading next. The S&P, NASDAQ are trying for another record close. He's going to join us after the break. Close the bell. It's coming right back.
Purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
Rose Sparks, engineered for the spontaneous. A dual-action formula with the active ingredients of Viagra and Cialis. Faster acting.
Just doesn't want to break down here.
Get started at ro.co/.
Oh, it's already up a few cents there.
By boosting your force field, the immune system.
By boosting your force field. Go ahead and boost your force field.
Aura tells you when your temperature is higher than normal, how to improve your sleep, or if your heart rate shows signs of stress, so you can decide to push
Dude, we gotta get a bounce back up to that VWAP.
New projects means new project managers. You need to hire. Indeed you do. When you sponsor
Should we just say the hell with it and buy some calls here? Like a nut? Sometimes you feel like a nut.
and get started today.
Come on, man. The volume was really good for Amazon today off the bell. It felt like. I feel like there was some really nice volume. What the hell is going on? Come on.
I'd rather work on saving for retirement or college. Since you like to get schooled, that's a pretty good burn, right? Got him. Game. Thanks for coming to our clinic. First one's free. Swing into summer and save.
Sorry again, guys. Just one of those days.
Exclusive stock screener, playbook, and stock picks. Limited time offer. Go to cnbc.com/pro sale now.
Welcome to CNBC's Crypto World.
CNBC's daily digital show has trading updates, the latest headlines, a global perspective, and high-profile interviews. Scan to watch CNBC's Crypto World, sponsored by Crypto.com.
Welcome back. The S&P 500 and NASDAQ both trying to start the week with all-time closing highs. But does this record-setting rally have much more room to go? Let's ask Max Kettner. He's the chief multi-asset strategist at HSBC Global Research. Welcome back. It's good to see you.
Thanks for having me. Thank you.
Good to be a multi-asset strategist when multi-assets are rallying. Does that continue?
Yeah, I think so. I think what we obviously had last week was this sort of confirmation of Goldilocks and then really a rally across pretty much everything. But when we dig a bit deeper, actually what we can see is that, when we look at treasury yields, both 2-year and 10-year, for example, they're back to the levels where we were pre-CPI. So it's really the strength in spread products and
.com.
Welcome back. The S&P 500 and NASDAQ both trying to start the week with all-time closing highs. But does this record-setting rally have much more room to go? Let's ask Max Kettner. He's the chief multi-asset strategist at HSBC Global Research. Welcome back. It's good to see you.
Thanks for having me. Thank you.
Good to be a multi-asset strategist when multi-assets are rallying. Does that continue?
Yeah, I think so. I think what we obviously had last week was this sort of confirmation of Goldilocks and then really a rally across pretty much everything. But when we dig a bit deeper, actually what we can see is that, when we look at treasury yields, both 2-year and 10-year, for example, they're back to the levels where we were pre-CPI. So it's really the strength in spread products and credit spreads and high yield and IG and emerging market debt in things like equities, whether it's US equities, whether it's European, Japan, whether it's emerging markets. It's really the strength and risk assets that stands out. And I think the reason is very clear. The reason is that the market in April got really worried about this tail risk of will the Fed need to hike again? And that hike word is now gone. It's firmly gone
Stop
really
saying
from
will
what
the
we've
Fed
heard
need
from
to hike.
Powell during the last FOMC meeting, and I think that got confirmed last week with the data that the next move is going to be a cut. And for equities and for high yield or for EMD, so if you're long risk assets, it doesn't really matter whether the first cut is going to be in June and July and September, December, as long as the Fed keeps telling us, look, we might not have the confidence just yet, but give it 2-3 months and we'll have it. That's good enough for risk assets to rally further.
For how long?
Yeah, I think we're going to have a couple of months at least still. So I think it's going to be really until sort of the Q3 reporting season, perhaps, where I see a couple of troubles brewing, because when we look at the Q3 reporting season in the US in particular, that is where expectations are basically shifting away from tech, from the Magnificent Seven in particular, towards the broader market. And then, if growth is on a firm footing, if growth is fine, but it's actually not as good as we expected, and the earnings growth in those other sectors, in those other 493 stocks, cannot exceed expectations as perhaps those seven stocks of the tech sector has done in the last couple of reporting seasons, that could be a bit of trouble. But that's 4 or 5 months away.
Noticeably absent from your view on where to invest around the world. I know we just showed you like Japan, you like the U.S., obviously. Europe's not on your list because there is a suggestion, we had one earlier today from Aaron Brown of PIMCO, for example, that go where the rate cuts are going first.
Yeah, but I think, look, in terms of Europe, when we look at euro-dollar, for example, most of it has been priced. When we look at rate expectations or rate differentials, bear in mind, you know, both ECB and Fed rate cut expectations, they started the year around 170 basis points. Now we've seen that divergence really creeping in the last 2.5 months, so that's kind of priced as well. We've also seen that on the long end of the Treasury and the Bund curve, that there's a bit more of a difference being priced now. So both in rates and in FX is being priced. I think in equities, when we look at the larger caps, they don't have an awful lot to do with GDP, right? When we look at things like, you know, luxury goods or things like obesity drug makers, or even, you know, things like AI-related stocks in Europe, they don't have an awful lot to do with European GDP.
Sorry,
Where
guys,
I
I didn't
think
have
it
one,
really is worth a shot is in Eurozone small caps. Because when we start to see now really China stabilizing, we're really starting to see also that growth expectations, particularly top-down growth expectations in the Eurozone, are starting to be revised upwards. And the only real cyclical part of the equity market that hasn't really baked that
just
into
me? Is anybody else? Is anybody else feeling like groggy,
so it's
like
the
a little
Eurozone
bit
small
tired
cap
today?
segment that is really worth looking at here, not really the broader European large cap equity market.
Got it. Max, we'll see you soon. I appreciate your time. Thank you. Max Kettner joining us. Up next, we are tracking the biggest movers into the close. Christina Partsenevelos is back with that. Christina.
Well, we have another public tech company urged to go private, and a call for the bottom in toys, and that's moving one company higher. Can you guess the name? I'll tell you after this short break.
This thing is screaming. I don't think I had the mic on. It's all good.
You came for a day of total relaxation. If you're lucky, you'll leave with a shred of dignity. Somewhere to smile about. Ocean City, Maryland.
Go for the whirls and the twirls. Go for the walks and the rides. Go for the savory and the sweets. Go to celebrate and rejuvenate. Go for the win.
Moments like this, you're faced with an important question. If a ball lands in a cup and no one else sees it, does it count? You bet your sweet 5-hour it does. Somewhere to smile about. Ocean City, Maryland.
That was a bit more than 15 to the closing bell. Back to Christina now for the stocks. The sheet is watching. What do we see?
We see that the toy bottom might actually be upon us, and this isn't according to your children trying to get you to buy more things, but according to Morgan Stanley analysts who move Hasbro to a top pick in leisure, and that's because of improvement in the share price and improvement in profitability. They believe toys are actually more resilient even in a downturn. You can see shares up over 3%. Sprout Social, on the other hand, soaring right now, over 6% on a Reuters report that the founders are in talks to take the social media tools provider private and have even formed a special committee
Tesla, Meta. I don't want to see Meta.
a week after website building platform Squarespace
Microsoft.
announced it would go private in a $7 billion deal because of continued struggles and stock underperformance. Scott.
Christine, thank you very much. Christina Partsinevelos coming up. Got a bit more than 15 to the closing bell. Back to Christina now for the stocks that she is watching. What do we see?
We see that the toy bottom might actually be upon us, and this isn't according to your children trying to get you to buy more things, but according to Morgan Stanley analysts who move Hasbro to a top pick in leisure, and that's because of improvement in the share price and improvement in profitability. They believe toys are actually more resilient even in a downturn. You can see shares up over 3%. Sprout Social, on the other hand, soaring right now, over 6% on a Reuters report that the founders are in talks to take the social media tools provider private and have even formed a special committee to consider doing so. This news just comes, a week after website building platform Squarespace announced it would go private in a $7 billion deal because of continued struggles and stock underperformance. Scott.
Christina, thank you very much. Christina Partsinevelos coming up. Betting big on weight loss. One telehealth company is seeing some serious gains today following a crucial GLP-1 announcement. We'll give you the details, and we'll do it next.
worth knowing.
We're back with shares of Hims and Hers Health surging in today's session. Brandon Gomez here with what's behind that very big move. Brandon?
Hey, Scott. Yeah, the digital pharmacy announced access to compounded GLP-1 weight loss injections. Now, starting at $199 a month, the company projects $100 million in revenue for its weight loss products by the end of 2025. But two important details here. One, Hims is only offering those compounded drugs. Now, these are not FDA tested or recommended, but they are allowed because of the current supply shortages that exist. Now, the second point, Scott, is that Hims is playing catch up here with competitors like Ro Health, who entered the weight loss space back in December as pricing competitions against Big Pharma's FDA-approved drugs does continue. Hims CEO told me, though, they do plan to offer access to those drugs, the Ozempics, the Wegovy's, in the near future. Scott?
All right, Brandon, I appreciate it. Thank you, Brandon Gomez. Up next, Palo Alto reporting at the top of the hour. Star analyst Dan Ives breaking down what he is expecting from that report when we take Inside the Market Zone next. All right, we're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus, Steve Kovac with Microsoft's latest hardware announcements ahead of its Build Developer Conference. And Wedbush's Dan Ives. He shares what he's expecting from Palo Alto Networks ahead of earnings in OT today. Mike, I'll turn to you first. So Dow's pulling back a couple hundred, but any positive close for the S&P and the Nasdaq are going to be new closing highs.
Yeah, holding the gains. Flattish day, even on breadth, but I mean, there's something like 220 new highs in the New York Stock Exchange and only 25 new 52-week lows. So to me, the breadth of this recovery the last 4 weeks and the general technical condition of the market is probably one of its best attributes in terms of representing this sort of flow of funds that seems like it is very supportive. I think it is time to say, have we kind of skirted the supposed negative late May seasonality, people sort of front running what's typically a strong summer for election years, and then really just taking a lot of, I think, comfort in the fact that yields have done what they've done and coming off the highs, but we have actually given back about a quarter of that decline in the 10-year yield over the last few days. So you have to watch it all, but overall, you'd have to say market continues to pretty much win the benefit of the doubt.
Financials are worse today. If nothing else, maybe CEO of JP Morgan, Jamie Dimon, just causes you to sort of reassess the performance of stocks like his.
For sure. In fact, you're seeing that, in other parts of the market, too. Stuff that's just had a nice run and nothing really fresh is out there supporting it. But I wouldn't say it's raising any alarms. It's much more about, all right, let's wait for this market to get overbought and overloved again, and then we'll decide if we need to pull back.
All right, Steve Kovac is watching Microsoft for us today in this big announcement they had. What can you tell us?
Yeah, Scott, this one is all about the hardware part of the AI story that Microsoft's going to be telling all week. They're calling these Copilot Plus PCs. So that basically means they're running special chips. This one is a Qualcomm chip that's debuting today, but we're expecting down the road AMD and Intel to play along as well. And basically can do a lot of these artificial intelligence tasks on device, meaning we're so used to using chatbots and other AI tools running in the cloud. This happens on the device. It's going to be running updates to Windows 11 that can add a lot of these capabilities on the Copilot side that you can't do on your current PC. And most importantly, Microsoft says they believe this is going to help drive a new upgrade cycle of artificial intelligence PCs. The fact that they gave, or the estimate they gave today, was 50 million they expect to ship this year alone. And that is really what's interesting here also is the Apple part of it. They spent a long time, or a lot of time, talking about Apple, how these devices outperformed the current MacBook Air that came out just a couple of months ago, and just showing that not only does it perform better, the MacBook Air doesn't really have too many AI software features that it can take advantage of all that power that Apple's putting in there. And so, as we look ahead to WWDC here in a few weeks, Scott, a lot more pressure on Apple just from Microsoft today, basically calling them out and said, hey, Apple, where's your AI? You're behind.
Wow. Steve, thank you. Appreciate that. Steve Kovac. Lucky to have Dan Ives sitting on the desk. What do you make of that? Little Apple versus Microsoft redux from like 40 years ago. Here we are again.
Yeah, this is going to be a battle, and we'll see from Apple WWDC, but from Microsoft and Nadella, I mean, it's clear they are in the lead when it comes to AI. I mean, you saw it from an open AI perspective last week, but this is showing what's going into the broader ecosystem. And I believe this is really just the start from monetization, what could ultimately be an incremental $20-25 billion annually that gets put into Redmond.
So that's the Microsoft perspective. What is the Apple perspective as far as you see it?
Well, I think this is really going to be a renaissance of growth for Cook and Cupertino. I think it's the OpenAI partnership, which we believe is going to be announced. That's the start of it. But it's going to really be an AI app store that Apple introduces, along with now AI coming to iPhone 16. This will be, I think, the most important event for Apple in the last decade.
But you called it a shot across the bow to Apple, but then you're glowing about what Apple's going to do in its own right. Reconcile those two.
Yeah, because I think Microsoft recognizes that the biggest fear is that Apple, which has been behind on AI, now starts to go after the consumer. Microsoft wants to own that. Now, I personally believe Microsoft owns enterprise, and we've seen that from a Copilot perspective, but they know that they're behind, and that's why this is an important event for Nadella to court not just developers, but consumers.
Important event tonight. That's Palo Alto, a stock you've sat on this desk and called it a table pounder multiple times. Now, it's had a great move. You know, it had an upset and then a comeback. What now?
I think last quarter was a growth transition. I believe this quarter is going to be a step in the right direction. When it comes to cybersecurity, it's a golden age for cybersecurity, being led by the likes of Palo Alto, Zscaler, CrowdStrike. And I think this is setting up for what could be just an unreal 2025 from a growth perspective for Palo Alto. That's what this is right here.
Yeah. What do you look at these stocks? You know, Dan's right. If you know, CrowdStrike is the best performer here today. Palo Alto's done quite well. If you know, Fortinet's kind of the only disappointment.
Palo Alto and crew already had their
obviously,
rally.
you know, the market
I don't
loves
think you're
when
going to
it has
have
sort of a predictable kind of
like
bigger
what's the
slice of pie
catalyst
going
then?
to one area of software. It's
Why
happy
are
to
these
capitalize
stocks?
that. But
Why
I've also
are
been
names
struck
like
by is
Palo
the way the
Alto
market
going?
is basically
You're
rewarded
saying there's
the
more
companies
war?
that have had these massive capex intentions for AI build. So right now, the market loves people spending heavily on hardware for the next thing. I think it's one of the reasons the market has held up perhaps better than the perceptions of what the Fed's going to do and what the domestic consumer economy can do.
It's because you have the
AI boom,
that doesn't mean
the
that this thing is.
factory
I mean, it
building
could,
boom
you know,
for
it could,
infrastructure.
could be wrong. You're getting
you know,
some nice
semis are,
increase
you know,
in volume
3%
here.
from their highs.
Let's
They're
see what
managing
happens. They
to
have
hang in there.
earnings
You're
after
gonna
the
kick out
bell,
of
so we'll
Microsoft.
pay
They just
attention
wanna
to that.
stuff
But
all value
I
back
think
into
this
the
is a little
operating
bit crazy.
system.
Let me turn
They
this
know
down a
this
little
gain.
bit.
It's
So I don't
Windows
need to
95
blast your
over
ears
again
out, my
in
ears
terms
out,
of,
and
hey, you're gonna
your
have to
neighbor's
own a
ears
new
out at the
PC if you
same
want to
damn
go on the
time.
internet. So they're hoping they can score that, something like that.
Yeah, one of our PCs, not one of their.
You know, he could be
Macs.
right. I'm
And
not
you're
saying that I
convinced,
disagree
Dan,
with him.
that,
I'm just curious, like, what the catalyst
transition,
is.
I think, as you called it, for
Don't
Palo
try
Alto
to
was
be-
really a
like,
one-quarter
don't try to
thing.
be creative
Look,
just to be creative.
I'm not expecting
I feel like
fireworks this
that's what
quarter,
Dan's doing
but what
right
I
now.
believe this will be a quarter in the right direction.
Why
And
don't just
ultimately,
stay with
to
what
see a
really is working?
$450,
It's not that
$500
it's
stock
working,
next
it's
2
like
years,
there's a
they
fundamental
needed to go
catalyst
for the
for gold. There
platformization.
is.
And if there's one
You have not
CEO
had
I'm betting
inflation in
on,
5,
it's
10,
the cash
15
when it
fucking
comes to
years.
Palo Alto.
Okay, interesting, Dan Ives. Thank you very
finally
much.
get the
Mike, we
dollar
got about
to
a minute
rip.
left.
It
As I
doesn't
said,
go
anything positive
because
NAS,
of the
anything
dollar
positive
ripping. Now that
S&P
the
is going to be a
dollar's
new
pulling back,
closing
it gives it
high.
that-
We're talking
that
about this in
second
part
leg. I
because
can't
of
explain
NVIDIA
it. I
back
just
at
feel like
950.
it's time for
Well,
gold
now
to
it's
do
a little
what
bit
it's gotta
below,
do.
but it did get back to
There's a
950,
catalyst there.
and that's a couple days
Now
away
that
now
the
from
dollar
here.
I think
has an
that, you know,
opportunity
there's
to start
sort
to
of a
pull
cohort
back.
out there that says we're not going
See if
to, you
this
know,
thing can't
sort of underplay
really
this
start to do its
earnings
thing.
report again. Obviously, it's grown into the valuation. We'll see where it
There's a lot
goes
of
from
news
here, but I
coming out right
was
now.
noting how Bespoke remarked that the NASDAQ has gone from oversold to overbought in 17 trading days. That's happened once
I'm gonna
before.
stay
What
here for
happened the
these
last
Palo
time
Alto
recently?
earnings.
It just kind of went sideways at the end of last
see
year.
what we
It didn't really have to pull back much. We'll see if NVIDIA allows for that
Sorry that I
again.
was so
Just
tired
kind of a
of
rest as opposed to a reset.
Plus, you've had like a 4 or 5 day stretch where I feel like you've had these, you know, AI
That's
days.
probably what it was. It's probably the Red Bull.
Helping
and
keep these stocks
fucking
stabilized and climbing in some respects. There's the bell. Speaking of climbing, new closing high, S&P new closing
So
high.
we
for
have
NAS.
Zoom,
Overtime. Fix it up.
Palo Alto.
Well, mixed session as the Dow inches back below 40,000, but the Nasdaq closing at a record high and the S&P just shy of 1. That is the scorecard on Wall Street, but the action's just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan with John Ford.
Well, it's a big week for earnings highlighted by NVIDIA on Wednesday, and the action kicks off this hour with results from Palo Alto Networks, Zoom Video, and Trip.com. We're going to bring you those numbers as we get them.
And JP Morgan touching new highs early today, but weighing on the Dow later in the session following
how did
comments
we
from
not get
CEO
this
Jamie
short,
Dimon
man?
at
I
the
did not
company's
take it like a little
Investor Day.
bitch.
Those shares finished down 4.5%.
Look at that. I
We're
just
gonna
didn't
talk
think you were
to
going to get that
former Truist
extension
CEO
like that,
Kelly
man.
King about that move and his big picture take on the banks. But first,
It even
let's
went
break
further
down
than
today's
198.
action with our
Like,
market
that's
panel.
wild,
Kara
bro. We
Murphy
were
of
all over
Kestra
that.
Investment Management and Brooke May of Evans
And I did
May
not take it.
Wealth. It's great to have you
Like a
both
little
here, especially we do
ITCH.
see this record on the Nasdaq, even as we're seeing the
All right, I
Dow
wanna
take
see
a
what
breather.
Palo
Kara,
Alto's
I'm going
got
to
to
start with
say.
you because we have seen this broadening out of the rally in in general in recent sessions. And as Mike Santoli was just noting a few moments ago, an incredible move in terms of the rebound that we saw from that April pullback.
think this is a very good sign, and it's healthy for the market.
Through my cable.
So it's sort of been a slow story that over the last couple of months, we've been seeing a broadening out, as you suggested, in the market. And in fact, if we go back just 4 weeks ago, we had about 65% of names in the S&P 500 running above their 200-day moving average. Today, that's running closer to 80%. And then when we break it down by sector, in fact, within every sector, at least 2/3 of the individual names within those sectors are also running above their 200-day moving average. So this is all a good sign that it's not just the Magnificent
so is there
Seven
stocks
that's
that this
gains.
does not?
We're seeing other parts of the market participate as well.
Yeah, and Brooke, I'm going to note here as we see stocks settle here post-close, it does look like the S&P 500 closing at about 5308. This would be a new closing record for the SPX as well. Just want to get your thoughts on what drives the move higher from here, if in fact the move is higher.
Guys, did Zoom Video
We've got a 5,600 to
change names or
5,800
something?
price target on the S&P by year end.
Zoom Technologies,
and we
is
don't
this
think
thing
this
still
year
a
is
name?
a sell in May and go away. We think that we could see an more upside momentum through the summer.
Why is this
And it's
not?
going to be driven by multiple expansion in addition to earnings. As Kara mentioned,
When
we see a
did they get rid
broadening
of
of the
Zoom-
market, and with more participation, we think that there's upside opportunity.
Because I know that there were 2 Zooms, I thought.
Lowering your exposure to large caps.
Dude, I'm
in
bugging
favor
right
of
now. Did I
mid-caps
not
with
know
strong
this?
cash flow.
Okay,
And
so
I'm
look,
curious about
ZM is Zoom.
infrastructure in particular, because
And then you
point that
had
out as an
another-
area that has a low correlation to tech. So how are you picking stocks with that infrastructure theme?
So I think as you start to move down cap, it becomes
Zoom
more important to
Technologies
lean
was
into
a,
those quality factors. So whether you're in the mid cap or the small cap space, you want to make
was
sure
like a
that the
trade
names that
desk
you're
type
investing in have reliable cash flows, strong balance
so
sheets.
weird.
And so I think making sure that when you're picking within that universe,
Oh,
you have those
Z.
factors
No,
exposed
because
is
then
really
that's
important.
Zillow.
Then within infrastructure, you have some nice tailwinds in terms of more reasonable expectations moving forward, more favorable regulatory
I don't know.
environment.
That's so
And
weird
then
because
again,
I
we
could have
still
swore
like
that I
tech.
traded
it's not
that.
we're out of there, but it
And
does
I did not know
provide
that
a nice
Zoom
diversifier within a
Technologies was
portfolio
gone.
against tech holdings.
Okay, and Brooke, you sort of take the other side of this one. You continue to believe in big tech leadership, caution against getting into small caps or really betting on sectors too much, but you like Amazon and Goldman. Let me ask you
Is
about
that
the Goldman
TripAdvisor
piece
or
of
is
that,
that
since we get the big tech
Trip.com?
Amazon piece.
Goldman is an M&A story. CEO sentiment is improving, and as we see that shift, there's going to be more M&A activity, and that's going to help Goldman. We've seen their advisory business have strong earnings and M&A being a little light, and that we think will improve. They're not expensive. They're trading at about 1.2 times tangible book and 12 times forward earnings, so we think that this is still a great entry point into Goldman Sachs, even though it's rallying.
Michael, the estimate was $1.20. That's a beat. Revenue for Zoom was $1.14 billion.
Look, both going down. Those mid cap technology names, mid to large cap tech, down. This is all right. Zoom is Zoom's pricing in just under a $5 move. So write that down from the close today. See where we open up tomorrow, and if it doesn't give it to us, what is that? Where did we close? At around 64. So we could expect a $60 to $59 move, or to the upside, 69 to 70. There it goes. Now she's gotten triggered.
Pay their bills going forward.
So,
Palo Alto.
since you still believe in big tech leadership, how important is NVIDIA on Wednesday to that concept holding up?
It's
all right,
important.
Palo Alto
It's continued to
priced
lead the
in
charge,
$30 to
and we fully
$29.
expect a
Holy
great earnings report.
Nikes. Pretty much did it now. We closed at around 27 or 325 or 324, and you are at 295. So $30. Pretty much pricing that in right now. Look, it just did the $30 right there. Any more than that, you're getting paid. And it look, isn't that funny? Isn't that funny?
These levels from back in late 2021 into 2022.
Right.
So this is still underperformed, but usually it's a good sign when you get global
Palo
confirmation.
Alto, if you guys want to know what they are, let me throw them in. Let me throw them right here real quick. Let me throw them right here real quick. All right. Palo Alto.
okay, we have some global confirmation. Now,
Let's see here.
The U.S. dollar's had a somewhat interesting run. Shows we're somewhat range-bound in terms of where the U.S. dollar index has been trading. There was a time when, at the end of last year, everyone was sure of getting a lot.
So Palo Alto, Q4 adjusted EPS $1.40 to $1.42 versus the 141 estimate total revenue 215, 2.15 to 2.17 versus 2.16 estimate. All right, I guess that is
could in theory put some upward pressure on the dollar.
Q4,
That's a sort of a vague
Q3.
tightening of financial conditions.
Hold up, gang.
What
What the hell?
So to me, you have
Fiscal 24, fiscal year, EPS $5 to $5.56, $5.58 versus $5.51. Total revenue 7.9 to 8 billion versus 7.98 billion. After the company recorded Q3 earnings and issued inline Q4 guidance. Yeah, so no real growth, or they're not raising guidance like I thought. That was weird. I don't understand what they're on. How the hell can you be on Q3 when we're in Q2?
Where the U.S. arguably perhaps is going to be decelerating from very, very strong growth, and you have other parts of the world, certainly in China coming back to life, and even in Europe coming out of
Palo Alto reports fiscal third quarter 2020. In what world is this a third quarter? They just...
Meantime, Palo Alto Network's earnings are out. The initial move is down. Julia Borsten has the numbers. Julia.
I know some of them do it differently, but...
Top and bottom line revenues, just a slight beat coming in at $1.98 billion versus the $1.97 billion estimated. Adjusted earnings of $1.32 per share were above the $1.25 that was estimated. And Q4 guidance is in line. The company guiding to between $2.15 billion and $2.17 billion. That's right around the estimate of $2.16 billion. And EPS guidance of $1.40 to $1.42. It compares to the expectations of $1.41. So that guidance is right in line. The stock is down over 6% in after-hours trading now. Back over to you.
All right, but off the lows, Julia, thanks. Meanwhile, don't miss Jim Cramer's exclusive interview with Palo Alto Network CEO Nikesh Arora. That's coming up at 6 p.m.
Look at other names like Crowd.
And after the break, much more reaction to all of today's after-hours action. We're going to break down Palo Alto's quarter with an analyst who says the cybersecurity stock is a buy.
And speaking of cybersecurity, CyberArk making a deal to acquire machine identity firm Venafi from Thoma Bravo for more than $1.5 billion. We're going to talk to CyberArk's CEO about that deal and so much more.
All right, guys.
Overtime
That's about all I got.
is back in 2.
Hope you guys have a great rest of your night. Maybe I'll go live later on tonight and we'll look at some charts if you all want to. Just let me know. Comment down below. Do you guys want to look at charts later on? Maybe come up with a game plan, you know, tonight, and then kind of go through and see what. Damn, Zscaler's just getting demolished. Is Palo Alto still going down? Let's see here. Let's see. Everything worked out today. You just had to be, like, on it. You had to be on it. Dude, Zscaler's getting trashed. What's CrowdStrike doing? Just hanging on? Yeah, CrowdStrike's hanging on. Yeah, Zscaler might be the play for tomorrow, y'all. Keep an eye on Zscaler. Dude, they're going nuts out there. Hopefully they don't have something. $175. Let's go to the daily chart.
Debt news shares continue to pull back.
Okay, so not that bad. They just filled the gap. It's just filled the gap there. Alright, guys. You guys have a great night. Thank you guys for joining us today. Thank you guys for hitting the like button. Thank you all for joining. Greatly appreciate everything. Outside of that, y'all have a great night. You know, some days it's like that, right? We're right on the calls. We're just, it's a little tricky to get in, and sometimes it moves right up underneath your feet, and you got to be quick and ready to go. But we'll be all right. We'll be back tomorrow. We'll be back tomorrow morning, set, prepared. Tomorrow I'm going to make sure that I'm prepared for whatever may come. All right, we have NVIDIA earnings coming. The market's starting to pull back a little bit. So, you know, we'll look for some of these cybersecurity names to look at. I love y'all. Have a great night. Before you go, hit that like button, subscribe if you'd like to. Donate to the stream. I'm out of here, guys. I'll see y'all later. Peace out.
LAKE, Lakeland Industries, naming a new president and CEO, James Jenkins. Lima Alpha Kilo Echo, LAKE.